So wait to buy discounts. Yeah, I mean, you have good reason. So I'm taking heed of your warning or suggestion for sure, man. Appreciate it.
Which makes me even happier.
It is very exponential growth too. It has huge growth, and it's up 17% on the bars.
Got the doors on. It's the perfect soundtrack for this purgatory thing.
It's held above your sauce for the last 10 minutes.
That's what I'm saying. Yeah.
What song?
Right now, when the music's over.
Well, this isn't the sauce one. I should put the sauce one in though.
You know, it coasts for a little while, and then it like cascades into like just him screaming.
RPS, what did you buy into the Chinese stock?
220.
220 this morning.
Oh, time wise?
Yeah, when did you get in?
Whatever.
Time wise.
Uh, 6:25 Eastern.
What's up, buddy?
What platform do you have? Weibo?
Yeah.
Good job, man.
I feel bad. Where's Anthony?
I know, huh?
Anthony,
Hey, it's crazy how you can just make money like that, huh?
Anthony fucking duck out as soon as he got.
Hey, it's crazy how you can make money like that by just waiting, bro. It's crazy.
I'm up a salary right now.
That's what I'm saying, you know? And I try to explain it so much.
Hey, I want to buy some shit from Amazon. Give me some recommendations for shit.
What you put into this one?
Swords. You can buy
Stuff
swords.
under, stuff under like.
Oh, fuel cell just
$100.
got added to my list. Oh no, somebody was talking about that yesterday. Oh,
We were talking about that this morning.
Machine for under $100. I was looking this up.
Drop it in the chat.
yo, Profire trying to swing it right now with some of these stocks down here. Motherfucker moving.
I pointed that out earlier.
It's still down, but I mean, it's funny.
MLG Frenzy.
Huh? What's up, Frenzy?
Yeah, what isn't Frenzy playing this way?
Yeah, he's made probably like a 200 or 300% return in the last 2 weeks.
Yeah, I'm surprised he's not doing it this morning.
Well, he's taking a break. he wants to see if
5 days in the week, right?
yeah. So he's got to have like a normal life. He can't like, you know. But he's been following along with it, and he finds it works very well.
I could only.
What are you
actively
waiting for?
trade
What is your catalyst on Huge right now? Because it's
So now I'm waiting for
playing the
more
flag.
support. Yeah, like it's like a bullish flag. Yeah. Like, do you see it?
Yeah, I see it.
So like right now it's developing a bullish flag, which you can see is very bullish. If we look at the, if I zoom in a little bit more, right, to like here. Well, let me set these drawings really quick. Okay.
I would just go off the tip on the front.
Yeah. But yeah, yeah, you're right, yeah. But, yeah, so if we look at it like this, right? You can see that the secret sauce is telling me it's up 3%. Look at how the white line on the bottom is starting to find a floor, like find a V to bounce off of.
Oh, you talking about the secret sauce is your Spectrum?
Yeah.
Okay.
Hey, MLG.
Yo.
Who were you talking about before?
What do you mean?
With the 200% gain?
Oh, that was Fraz. Me and Fraz are doing this strategy with this news plays. Because I have a feeling that the news plays are how people are snuffing large orders through. And I'm sitting here actively tracking it. And we've picked the top two already. So it's going to be one or the other. Like, one of them has to hit 90% or the market dies.
Oh, wait a minute. You're losing me there. One of them has to hit 90%. How do you figure?
Look at the market.
Yeah, I see it.
One of these has to be green, which is Moderna. Is the only thing on this list that's green.
Yeah.
Moderna is a vaccine.
Yeah.
It's a biopharmaceutical.
Yeah, that's right.
They're waiting for Moderna or some sort of biopharmaceutical to do something.
Okay.
And these are the fastest biopharmaceuticals with news on it, and they're trying to fight each other for some sort of support. They're trading the complete sideways like they're supposed to. Both of them are. They're playing this really dangerous dance right now between the two of each other in news and performance. So it's going to be the best. Which one's going to be the best company for today?
All right.
Does that make sense? Like one company has to be better than another. They're both in the same field. You know what I mean? So one of these, somebody's going to be the next outlier with Moderna. Somebody's got to work with them, type shit. You get what I mean? Because nobody knows how to like cure whatever's happening.
Zong gets a news release. They're working with Moderna right now.
I know, huh? Then that's over. That's GG, bro. No cap. That's when you just yeah.
AZN.
You go and pull out a fucking bank loan, bro, and you go and throw that bitch in there, bro.
Also, what you're trying to sorry, man, you're saying that you're only playing. This is only in bio. You're not doing. Yeah. This is always bio, no matter what.
Yep, and I've done the back testing on it, and 100% of the time, all 5 or all 10 of the fastest movers in a positive or negative direction are bio stocks.
Yeah, okay.
And we tested it back with the last year's worth of data, and it stayed true.
I think what really kicked that off was Kimmy.
Yep, that's exactly what it was.
I'm so glad I decided to join this server this morning.
How much you up, RP?
Cash
More than
percent.
Cash.
You know I like percentages, so.
My car?
Technically, yeah.
Nice.
Right.
What were you asking?
He asked, could you buy a car with your winnings? And I said, technically, right?
100%. You buy 2. Percent wise,
exponential growth rate.
Percent wise, I'm up 37.
That's good.
Good.
Yeah, you got ZCMD way at the bottom, bro. Like that one was down there. I was like, you know damn well if that volume didn't pick up, you were gonna get fucked. You know what I mean?
Now they've got break on through because they're cheerleading the stock.
Wall Street bets.
Yeah, I know. At this point, we just sit here and wait for it to go, bro. You know what I mean? This is what pre-market is, you know? Like, this is why it's funny. This is the market we live in.
I think I might start hopping in here every morning.
Yeah. This is the market we live in.
I've just been waking up and doing this by myself.
Dude, it's so boring. It's so fucking boring, bro.
Yeah, three cups of coffee before the market opens.
So boring, bro. I come in here, I scan the market early as fuck in the morning. I fucking sit here and smoke, and then I just relax and watch it, and the reset happens, and we just go in and watch people lose, and some people don't.
I've already had 2 Adderalls and weed.
The people that pay attention make money, obviously. You know what I mean? But like the ones that don't see it coming do not make money. Unfortunately, Anthony did not see this coming. But he was stepping into something he had no idea how to do.
No,
So,
Anthony's a cunt.
like he was stepping into a boundary that he had no clue how to do. And I mean he got bit, you know? It happens. But had he not have been a little bitch and diamond hands to that bitch, he would have been up a little bit.
Nah, he still is down right now.
What happened? He went in on stock. We took out first, right? to cover some loss, and he doubled negatived. So he couldn't risk a third negative because he didn't pull out. And so, like, he pretty much just crushed himself against the wall.
Fucking dollar cost average lower.
Yeah. That's pretty much what it was, yeah. So if you have enough capital, you
Gambler's fallacy.
Yeah. So it's one of those things where it's like cost averaging is a big deal when you're scalping. Because it makes it to where you don't lose percentages that are too great. And you have potential to recover losses that were once there. I'll tell you what, ZCDMD needs to fuck off a minute.
I'm gonna go to bed.
I
Call
see
me
that
when it moves.
3% right now, and I'm like, yo, you better step that bitch down.
I'm going to bed. Call me when it moves. I'll DM you my number.
That shit's fucking up. Ooh, okay. We got some contestant shit here.
You got something now.
Who's got something? Your support's coming from fundamentals. Where's mine? Mine has to come from something. And when it soars, it's soaring, dude. There's no stopping this thing. There's a lot of people shorting this shit, though. Ooh, okay, all right. All right.
Hey, MLG.
Huh?
Sometimes the Robin Hooders jump in.
In about 40 minutes or so. 30
But
to 40.
they jump in at 9?
Yeah.
I don't have that platform, so I don't know how it works.
Yeah, 9 Eastern, and then 6 a.m. Pacific. That 4% candlestick is looking pretty hot.
See that? So what are you gonna do about the sweet sauce? You selling it or what?
I don't know yet. I haven't decided what to think of it yet. I like it though. Dude, fuck off with that 5% candlestick. Make that bitch -10 right now. Cut that bitch off at the kneecaps, bro, and drop.
What, on ZCMD?
Yeah.
Oh, because you want it to flip over to you. I see.
Yeah. Just cut the kneecaps out a little bit and let that bitch bleed.
It looks like yours broke the triangle, broke the
They did.
flag. Yeah.
So with huge, what kind of place can we realistically expect it to stop if it breaks through?
Realistically, 4 or 5. Like within that range. If it really does run like it's supposed to, yeah, you could probably see it go to 5.
I have a lot of money in. Well, a lot for me. Probably not a lot for y'all.
Yeah, but like that's the thing though. Like is realistically
Percentages, not dollar.
Yeah, if it bounces this line and stays up, then it's chill. But this is gonna double tap right now.
I still got an emergency exit at like $3 just in case.
Yeah, that's what my exit's at, like 310 or something like. I mean, not 310, 35 or something, or 36.
I'm in at 313, so.
Yeah, so you're pretty chill. I'm at 310, so.
But half my profile.
That's why it's best to buy at the line, you know, if at all possible. But sometimes you don't get that luxury. Sometimes you got to get in before the line. So you just do it as a safety measure, always before the line. And then that way you're always safe. Either it goes down 1 tick and 2 tick, or it goes up 1 tick or 2 tick.
Normally
So you
I
only
would have sold
tick
it
amount of money.
But with the Nixon Fun Bucks, it's like a free safety blanket.
Yeah.
Today we're letting it ride.
But I'm expecting Thursday or Friday. If this is red like this, Thursday or Friday has to be huge. And it's probably going to be Thursday, and then Friday's going to be red again. That's going to piss me off.
Thinking depending how well I do today, I might just put my extra STEM money in crypto and play with that.
One of these going to get some news, because I see Z starting to slow down. What was the percentage on the first part of this? 23. This also has the higher percentage too, 65%. Huge has the fastest mover. Looks like it's doing a very good bullish flag right here. Look.
Come on, let's go. What's a bullish flag like a red claw? Make it a large.
What?
Oh, there you go. Bullish flag candlestick, right? Or that's the support for a bullish.
No, this is a casino.
Fuck, I thought it was White Castle.
You're all fired. It's a fucking GameStop.
This actually might turn it. This thing might blow. This is the flag right here. You may have maybe one more candle.
This is actually Chicago O'Hare International Air Traffic Control. Please advise over to channel 132.18.
I need taxi clearance for runway 3.
VFR, IFR. And what's your call sign?
Call sign Bravo Alpha Lima Lima. Looking for IFR. We got a flight plan down in Miami.
Hey, are you scared yet?
Alpha Bravo Lima Lima. IFR clearance to Miami clear.
Are you worried about? Hey, are you worried about your capital yet? Yo, RP.
Yeah.
Looks like Z might be crippling under the pressure, bro.
We don't choke.
We don't choke. He said we gonna bounce, bitch.
Look,
you think it'll bounce?
Look, it's done this 1, 2, 3, 4 times so far.
I got fucking 3 seconds on this candlestick, and we're gonna decide what the fuck happens with mine here in a second.
It's consistently created these higher lows all morning and keeps pushing up. It's a test right now.
That hurts.
Come on, bro. We fizzle or popping?
That's what I'm saying. Let's make a break right now.
You know, micro trading Doge, and it has the exact same pattern every hour that it does every week, and the exact same pattern then every month and every 3 months.
Get it off that line, baby.
Are we both fizzling right now?
Get it off that line, baby. Get it off that fucking line right now, baby.
I got 4.61 million. My shares are gonna go quick.
You better get off that line, you stupid, filthy bitch. You got one candlestick, 1 minute, baby. Get that bitch off the ground.
I gotta press one button and I'm out.
Oh my god. Ooh, are we gonna hold it? Oh, we're gonna hold it. We got 40 seconds.
I re-keybind.
Oh my god, this is gonna be the ballsiest diamonds hands. Holy fuck.
I got my shit set to C for close and B for buy, and I'm ready.
Oh, here we go, baby. Oh my god.
Difference between my hands and yours is I'm in at 90 cents cheaper than what my price is right now.
Exactly.
So I have time.
Technically, but that time's gonna get shrunk up real fast.
Like I said,
I really have no time, but it's held support. Here we go. Bounce, bitch, bounce. Oh, fucking bounce, you stupid bitch. Oh.
You okay?
Oh my god.
You okay?
This shit's gonna bounce, bro. Look.
It's gonna make my ex-wife and get the fuck out of here.
Oh shit.
Notice how ZC's volume caught up?
I know.
5 million deficit.
Dude, it's the same fucking almost. It's about to pass it into saturation. This is wild, and
we call them both.
that's crazy. They're both gonna sell off now, I think, probably. This came out at 6 minutes. Yeah, okay, so I have two minutes left still. Well, technically 1, but.
Do I set a stop loss at 3? Like, oh god damn, that's the bitch that I want. 7 a.m.
We still don't even have the Robin Hooders in yet either.
No, we don't. We got still got
That's
23.
wild, then, dude.
Still got 23 minutes on them.
Holy fuck, dude. This is actually kind of crazy.
Come on. Green candle. Green.
Dude, this could be. Come on, go green. I'm gonna hold this shit too. I'm not even gonna cap on this because there's no way there's a 4 down here.
I don't know what your working capital is, but you got 80 shares right now.
I know.
If you are who I think you are, 80 shares ain't shit.
I got 250.
What are we pumping today, boys?
They're pumping themselves.
I already pumped one off.
I made huge gap up, then gap right back down earlier this morning.
You gotta dump it up. You know who dump it up?
Oh, I dumped. There we go. I passed you in volume. 100,000 pass.
There it goes.
Keep reminding myself not to buy another 100 shares.
I wonder if there's gonna be some sort of. There's got to be some sort of sell-off for that, passing in volume and speed.
If you want to do anything that you're gonna hold in
that's a lot of liquidity though. That stock had a hella liquidity, dude. That shit was moving. We have 1 minute.
12 minutes till up.
I'm just nervous of this regressing back below 3.
We're 22.
I mean, we're literally
neck and neck. Yeah.
Price, volume. The only thing I have an advantage on is mine's gonna pop up at the top of the screeners for pre-market.
Everything else, yeah.
It's like a horse race where major corporations are the horses and we're the midgets riding them.
Yeah.
However, you do have the advantage of you have a better stock chart.
It is a very good stock chart, and we're at the lower stochastic too, which is wondering why. I wonder if this is like the absolute floor. You know what I mean? Like, look at my secret sauce. You see how it's catching itself?
Yeah.
If it holds that sideways, I mean, you could see a hella rebound.
But look at this. Look at the sauce on ZC.
That's what I'm saying. You know, it's already on its way back up to neutral. That's the difference. This one's selling off harder, right? And this one has more of a steady regression channel. Oh, I'm not gonna do it.
I need Rhythm Bot.
I know.
I gotta open up the iTunes playlist.
If this goes negative at all, I'm gonna have to sell out. Fuck me. Why don't you do it, baby?
We can do a once we're out of these positions, we can go over everything after with everyone if they want.
That shit was fun as fuck, dude.
It's so much fun.
This is the fucking best thing ever, bro. The stocks are savage shit, bro. These are some good ass stocks, bro.
I gotta mark this day in history.
Dude, good. It's a good one.
Randomly joins the server and picks the top 2 stocks of the day with one.
Yeah, one random person out of the day, bro. It's just wild it out. That's crazy. And I'm in here calling these all the time too. Like, I'm in here like actively charting them and shit.
Yeah, I'm doing it. I'm doing the same. Just
How much percent did you guys get?
I'm still open.
Yeah, I am as well. I'm still waiting for it to go up.
He's down like 2 or 3%.
Yeah, right now. Yeah.
I'm up 37.
Your stock came out of nowhere. You got it at the little volume, bro. Your shit, you literally got it right at the beginning of the swing, which was like
I've never seen ZCM.
It's so rare that moves that fast. You know how fucking lucky that shit was that popped out of that.
I got the perfect fill. I got the perfect fill.
Perfect fill, bro.
There you go.
Like, it doesn't get any more picture perfect with that fill either. Like, I mean, it really doesn't. Like, the execution on that was pretty clean.
There's yours going a little bit now.
That's what I'm saying. Yeah, it's not gonna hit. It should not hit this bottom line.
You're right. This morning, like, Huge was up, came in this scanner, but the ZCMD, I never seen that.
It was on the scanner. It was fighting it all day today. Like SKN, these have been the top two for like right as soon as it passed Ontex, I knew for a fact that was
my fucking volume is taking you to Gap City.
I know. It's actually crazy.
Like, you were driving a Prius and I'm in my Tesla.
You're in a fucking brand new Roadster, bro. That's literally what it is, bro.
Bro, have you seen the videos of them driving down the street?
Dude, they're fast as fuck.
Oh my god, I want to get one.
They're quick. The motherfuckers.
I wanna have one for the summer.
I know some people that that might own one.
If I make it big on any stocks, I'm gonna get a Tesla just so I can have a car that can drive me home when I'm fucked up.
It don't work that way. I've tried.
You have to have your hands on the wheel, but it'll keep you going straight.
No, you don't have to have your hands on the wheel. You put an orange on it, you're chilling.
Yeah.
Stick an orange on the side, bro. Counts as a hand.
I mean, it'll still sit there. You know, I don't have to worry about swerving or nothing.
It goes and it goes, bro, your car's all over the place. You're like, oh shit.
I mean, I trust the car more than people. I don't care what they say.
I'm not gonna lie, I've seen the Tesla autopilot not do what it's supposed to do, and it's pretty scary.
Well, you know, I'll still be there to fix it if it tries.
I mean, yeah, like the self-driving is pretty sketch.
I just want parts.
I'd much rather just pay fucking somebody to drive in that sense, or just remote control car where it needs to go. You know what I mean? You just like get in and it's just like a remote driver.
Also, especially like if you're driving on acid, you're not worried about swerving, but like keeping.
Because you're still gonna have to pay for the self-driving car. You know what I mean? So like, pay for a service that offers self-driving for your Teslas.
Well, I don't hate driving. I just hate worrying about driving.
So I'm saying. Then you can open up a luxury Tesla remote control Uber system.
Oh, demo.
Yo.
I'm gonna do it.
What? You're gonna drop more?
I'm a reserve.
Oh, for a Roadster?
It's only 200.
It is only 200. It's actually pretty cheap.
I got a wire.
It's $250 for the top.
I got a wire 45 within 10 days, which is today's profits.
You guys see the GameStop green candles going up this morning?
Last I looked at GameStop, it was okay. It was trading neutral. That's kept up. Fuck GameStop. Oh, there we go. Come on, Z-Set. Let's go, you Chinese bitch. Ching chong toya.
Toya. Don't you do this to me, you stupid bitch. You better no.
Chinese New Year's coming late.
Chinese New Year's coming out a little late. We got.
Hey, you guys see that green candle for GameStop? Oh. There it goes. What's up? Good morning. Everybody here? Well, if you can hear me, GameStop had a large green candle spike. That's why the price went up so far. Yeah, 15 minutes till market open.
There you go.
Man, Roblox. I hope it goes back up. Man, this GameStop, it's amazing. Let me look at the level 2 data. So yeah, oh yeah, definitely won't go back under 213 anytime soon. 216 might be the next wall for GameStop. $216.79, 1,000 shares on the order book. That's great, DSNet. Yeah, this morning is pretty good for the pre-market's good. You're gonna see Torchlight drop though. 2:30 p.m. Eastern. At 2:30 p.m. Eastern, up until that point, you may see a little bit of sell-off. This is a huge candle though for pre-market. We'll see if this trend continues when market opens, but the RSI is already popping up there.
Happy St. Patty's Day. Good morning.
Hey, same to you, man.
Good morning, gang.
Good morning.
Gang, gang.
I got a song called Gang Gang. It's got almost 30,000 views on YouTube.
That's funny. A lot of songs named Gang Gang this year.
Yeah, I'm gonna do a song called G and Me Gang. Get money every day.
Yeah, who's got their stimulus? Let's check.
Check. Check, check.
Check. What's weird, my account shows 2 stimulus checks, but I know it's just one. I ain't even gonna mess with the other one. Because I know if I try to pull it out and use it, they're gonna make me pay it back.
Let me give you some advice, guys. If you got your stimulus check and you're trying to put it in Robinhood or one of these brokerage firms, make sure that money clears before you buy any stock. Because if it doesn't clear and you buy on margin and the price drops after the Federal Reserve speaks, you're gonna get fucked. You're gonna get margin called.
You're gonna get fucked in the butt. Fucked in the butt. Don't put your stimmy in Robinhood, cause they gonna take your money. They gonna leave your bank account on 0, laughing at you like it's funny.
Did you get that pack drop last night, Nate?
Heck no. Dude, I never even got the email.
Dude, I was like almost
pissed.
I bet, dude. I was pissed too. I was like almost one of the first in line, dude, and I got into Dapper and my Cash App card won't work because I haven't activated the actual card.
You should have hit me up.
I know. I had company over, dude. It was weird. I couldn't.
That's crazy, because you don't have to activate the card. Like, on Cash App, whenever you do that, your card is activated as soon as you make the account and you open the card part on the actual app. It's activated then. So it's crazy how, because like me driving trucks, I don't go home every week. So, but I could still use my card information and stuff. So I don't know what. I don't know. They might have changed it now because this was like.
They must. Because it said it was mailed to you 10 days ago, activate card now, and I couldn't I was trying to find a workaround and I couldn't. I was like, God dang it. So Yeah, I don't know. It sucked because I was ready to go. It was only $9, and I only had 4 in my Dapper account. It's like, oh my friggin' word, dude. I'm surprised you didn't get the email though, Nate.
Yeah, I was really ticked off. I saw that somebody posted in Crypto Talk, and I was like, wait, what? And then I clicked on it, but it was their Q link, and I was like, what the heck? And then like the web page was in the Twitch description. And then I clicked, so I copied that, and I was like, man, I hope this isn't a scam. So then I put it in the browser, and I'm like, no freaking way. And then what's weird is like after the pack drop, they updated the website with the pack, and I was like, what? I was like, was this like a Twitch specific drop or something?
I got like an instant message from them, like immediately. Like I was like, yeah, like I said, I was like one of the first ones in there. That's just weird that you didn't get it. I almost DM'd you, but I figured you were so hardcore about it. It's like, I'm sure he's on top of this, and you weren't in the chat room, so. Sorry, man. Next time I'll friggin' send you a message.
Yeah, anytime, please. If you see that thing, please hit me up. I did sell, I sold all my cards that were like just, I'm not going to say nobody's because that would be kind of mean to the players, but like all my really like lower value cards, like, you know, $6, $7, $10, whatever. And I sold all the little ones, and I picked up an Anthony Davis card.
You must got a buttload of cards. Or had a buttload of cards.
Yeah, I think I'm down to like 4 cards now.
I'm wondering if they were favoring new people, maybe, since you've gotten drops and stuff before, but that's still, that doesn't seem fair, you know?
No, I don't. It was weird because, like, as soon as I saw that link in Crypto Talk, I went to NBA page and the pack wasn't on the website.
GME is up there today, 216 right now.
Nice.
And the thing was, like, I was on NBA Top Shot like all day because I was like, I'm the one who figured, like, because the gift option was finally open. They've got that pack. They've got that pack on the website now, though, which is weird.
Yeah.
You're going to start seeing the rise with GME right now, Tim, because it's right about this time is when the brokers approve for deposits with day trading. Even if you deposited at 4 a.m. this morning, it doesn't usually hit your account until 8:30, 9 o'clock.
We got 6 more minutes till Robin Hood pre-market.
Hey, this is all something we can all kick ourselves in the ass for as wrapped up in GME that we have been for the last week. We completely overlooked CMBB and the merger. They went for 16 today. The stock went from $5 this morning to $85.
Wow.
What's the name of it?
CMMB. There ain't no sense of getting into it now.
Holy crap. That happened within 24 hours?
That happened as of 4 o'clock this morning. It went from $5 to $85. I completely forgot. I had a few weeks ago, I had a note written down, a sticky note, but I completely overlooked it. Yeah. I was on Friday of last week.
Wow, that like kind of hurts. Oh my god, dude.
No, I'm just pointing this out so you guys can see. As wrapped up as everybody's waiting on GME, you guys got to understand there's always going to be something like GME out there, you know. So after this, just continue to do your due diligence, continue to do your homework, and just for as we all missed this one, I mean, there's going to be another one in 2 weeks, 3 weeks, 4 weeks somewhere. You know, you just got to keep up with everything, and you can't get lazy with any of the shit, and you just got to keep researching. You know, that was my fault. Last week I got tired and I got lazy, so I stopped doing my DD last week. Really, I was doing other things, you know. So that's just, you know, that's what happens. Even people that have been doing this 5-10 years plus, you know. So, you know, never worry about a loss because there's always another gain right around the corner.
Just goes to show we shouldn't be focusing solely on GME.
Yeah, it's always good to diversify slightly.
Dang, boy. If I, whew, $5 to 85. Oh man, $80 on top of every $5. Whew, Jesus, that would have been a massive, massive flip for me.
Specs are like that. If you guys got the liquidity to play specs and you actually kind of know what you're doing and can do your DD on the specs, you can get in the specs. A lot of specs are anywhere from $3 to $10, and then they will at least 3 to 4 times what they are coming out.
Yeah, but you never know exactly when it's gonna do.
No, you can. I probably play 1 to 3 specs probably on an every 2 to 4 month basis, and 1 out of 3 specs. Usually 2 out of 3 of them will hit. You know,
Okay.
and they hit the amount of, well, like I just talked to you guys about, go from like $5 up to, you know, $60, $80, $100 type of situation.
Now, question, because I'm still trying to get familiar with the terminology. Spec is what?
SPAC is a company that comes out through another company to get on the New York Stock Exchange. For example, Lucid Motors was a SPAC. Lucid Motors came out through a company that was already on the New York Stock Exchange, which was CCIV, and they're basically a blank check company.
Got you. Now, when you say blank check company, does the name speaks for itself? It's a blank check company?
Yeah, it's a company that basically just absorbs other companies to bring them onto the market. Like if you ever heard Chairman Powell or whatever his name is, he has multiple SPAC companies that strictly, that's all they do is just bring corporations to the New York Stock Exchange.
Thank you, Miles. Thank you.
Yeah, not a problem.
Hey guys, just a heads up. I know I brought it up yesterday. UEC, Uranium Energy. It was up almost 20% yesterday. They actually went all the way up to almost $4, $3.99 in the after hour, but then they dropped all the way down to $2.88, and then they made their way back up to $3.15. So they were still 16% up. But they're at a decent buy point right now if you want to keep an eye on that one. But I don't know what caused them to hit $3.99 in the after hours, because I totally missed that. But just to keep an eye on that.
Did I tell you guys? We're not on the air yet, are we? Oh, good God. Hold on. Can we move over to movie time for 2 minutes?
It looks like for UEC, that was because it says,
Oh shit. What's up, man? Waiting for a call back from this place, see if I got this job. That's about it. Yeah, I would hope so. It'd be really nice. It's a natural gas generator technician for a company called Mesa Natural Gas Solutions. What are you up to, man? Yeah, I'm doing horrible, stock-wise. Absolutely horrible. Well, if you wanna check out my stream, I can like show you a little bit better. Yeah, that's probably it, honestly. I can't tell you how many times I've gotten fucked over because of extremely volatile stocks. What's that?
Yeah, if I get fucked over like Robinhood, I was gone. Let me see what you have. I gotta make it bigger.
I did have I've had a variety of stocks in the past 3 months, I guess. I hopped in around like right around the time that everybody started talking about AMC, and I was doing pretty good. I had a couple shares in Cash App and a
Oh,
couple
you bought
shares.
some calls for risky
Yeah.
boy. How much you pay for that
Yeah.
GameStop fractional?
Oh, dude, fucking not even shit. I put like $1 in just for fun, just to fucking mess around.
Oh, okay. And you have what is SENS? What did you buy that for?
So Senseonics.
I know what it is, but what did you pay?
Let's see over here. For this call, I paid like $140 some, I think.
Ooh.
Yeah, $140.
July
and I
for
bought,
$8.
yeah.
Oh, okay.
Yeah. I did that, and it was doing pretty good.
You think this
doing
stock will
really,
reach $8?
I think it has potential. It really just depends on how soon the FDA approval for the new device comes out.
Oh, okay. It's crazy. All right.
Yeah, man. It's I mean, I'm hoping it does good, but the way it's looking right now, it's mirroring a lot of other tech stocks.
You sure that wasn't just pumped by Wall Street bets?
I'd like to think it wasn't, but if you look at the
Well, you know today's going to be a red day, so be careful.
yeah, for sure. I don't plan on making any trades or buying anything today.
Yeah.
Just gonna hold on to what I got.
I'm gonna hop over to other Discord and see what's happening this morning.
All right, for sure, man. It was good talking to you.
All right, see you.
Yes, sir. See you later.
Which is awesome. It almost hit $1.30.
You know what I like about that is on Dunny, Dunny posted St. Patrick's Day symbolism and how the serpents are a symbolism of the Druids and the pagan religion. It's really interesting because, Mouse, that VR thing that I saw, some of the symbolism that I saw in there was like snakes and almost like this Hades sort of like thing. And it was interesting because it was tying into like the unity of everything
I dig it.
in terms of like spirituality. So that was really, really cool. Because
Cut out.
I'm using like push to talk on my phone because I'm being lazy.
So, what time is that conference today? Was it 2:00, right?
2:30.
So I guess we having a bloodbath today.
Yep, because the market wants to throw a temper tantrum and they don't want to believe Jerome Powell.
Pretty much. Nailed it.
So would it be best to just take your profits and chill for the day? Let the market do what it's going to do.
Well, keep an eye on AMC and GME and SLGG and the meme stocks because of the stimulus. So we might see, we've already been planning to see a spike here. But beyond that, I don't think we're going to go from $200 to, $800+ or some stupid shit, an actual squeeze today. So you really don't have to worry about it. Your other shit, I would just leverage down, honestly. We're probably going to bleed heavy up until Jerome Powell comes out and speaks. And then once he says the same damn shit he's been saying for weeks now, we'll probably see the tech sector bounce back first. And then that will catapult some other things on up. GME will probably continue to go up along with it. I don't see GME being in the red for too much longer today. So we're already green, and that's about the only thing that's green today is GME and AMC right now. The overall rest of the market, I mean, the Dow's down, S&P's down, NASDAQ's up by 9%, but yeah, it's going to be one of them days.
Do you see us taking any, not massive hits today, but is it possible that we can go back down to like 170 or something like that?
I don't know. Maybe, maybe not. Depends on how much, how far we go up with, hold on. No, we're already stepping up and making floors here. So from here, we should continue to probably go up. I hope we come back down too, because I got to buy limit set at 200, but we'll see.
So on days like today, Carolina, if you got long positions, just hold and ride. But I always look at this as an opportunity to buy down my average. So
yeah, for sure.
If I'm in a medium to long hold and it tanks really hard, I take advantage of it and just make my position better in my longs.
Oh yeah, that's what I was trying to do, average down today on some of my positions, things like that. So like CCIV, well not CCIV, I said that wrong. Not CCIV, Disney, Apple. I know Apple's probably gonna go down a little bit more. I could have got down on Apple, but I didn't have the funds because I had to put them in the GM.
Should I buy some more torch?
Yes, sir. Go ahead, drop 1,000 in torch.
All right. You guys ready for this bloodbath of a trading week?
Yeah!
Valhalla.
This is Sparta. I'm joking. People are gonna get slaughtered on the markets this week. Be very careful buying today.
We buy the dip.
These dips probably going to keep dipping until Monday pre-market. I'm not talking about the specific stock tickers on the screen. I'm talking about the whole market. You got to be careful.
Mm-hmm. I would say study the price action from the past year or longer if you need to for stocks and figure out where the...
God, I love Sundial. You guys got enough liquidity. It's barcoding right now, dude. You can easily get in and get out.
Which one?
SNDL, dude. It is barcoding across perfectly 10 cents to the cent.
Nice.
And Sundial has their earnings call today after hours. Boom, 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 boom.
What's that ticker?
SNDL.
Let me look at futures.
Susie, Natalie, Danielle.
Oh shit, we're probably gonna see. Yep, hard dip today. Let's see from when. I'm gonna switch over and I'll be back in a little bit to do some analysis on this.
What are you talking about, GME?
No. I'll be back.
SNDL. Sierra, November. Delta, Lima, SNDL. They have earnings call today and they're barcoding.
Hey, what does that crab from Futurama sound? What did he do? I forgot.
I don't even know. How did you make profits, Frank? What did you sell this morning? No, barcoding is kind of like what Dogecoin looks like the chart. It's going up and down, very vertical lines. Looks like a nice barcode picture.
So, any of you guys, obviously, I know you guys know I'm a big Kathy Wood fan. So there's another ETF that is very similar, but not quite as similar to ARK, and it's called Moon. And they are kind of following the same strategy as Kathy Wood, except they're more into the biotechnical side instead of just the tech industry. But they're actually outperforming Kathy Wood so far this year. So might be an ETF you guys want to look into. It's actually relatively inexpensive at the moment, but they're up 35% on the year, I think.
What's the ticker?
MOON, Moon. It's
ETF.
Moon. It's Moonshot ETF.
What time is this? What time is this speech gonna be at the Fed chair?
2:30.
Oh my god, it freaking lines up exactly. Okay. Let me tell you something.
Button.
No. I'm gonna.
Ooh, buddy.
I'm gonna go to movie time for a sec.
All right.
Disney's barcoding from 192.31 to 193.20.
What do you think will happen today during that press conference with Jerome Powell? You think stock's going to dip before that or right after? Or slowly trickle a few days after?
I think it's going to start dipping right after.
They're in the movie time channel because they can't talk about it on the YouTube. But it's pretty interesting information. If you guys want to see what they're talking about, hop down to the movie time channel. I think you can have up to 25 people in there for the video. GameStop hit 217 again, and looks like it's going up. See a baby green candle forming. I'm not sure why they don't want you to hear it, Joey. We can't always share everything on the air. We don't want too many people knowing ahead of time when it's something really good.
Sorry about that, guys.
That's all right, man. Some things we can't put on the air. You know, we can
Yeah.
put as information as we can on the air for everyone, but some things do have to stay behind closed doors. You know?
Yeah, that was just
Yeah, I knew it this morning, man. I woke up this morning and I was ready. I think I was on the computer at like 4:17 this morning, and I'm like, what's going on? It wasn't like it was like the market was still closed this morning. So that right there, I already knew what the day was going to be like after that.
yeah.
Mouse.
What's up, buddy?
Look at the freaking extended hours on Disney right now.
Hey, I like Disney. Disney's dope, dude.
I know, I do too. But seriously, look at the extended hours right now on Disney.
All right. Yeah, Disney's got some room to grow. They got that new movie coming out.
That is so funny. They think the movie channel is like another YouTube channel.
That's awesome. Yeah, that's the premium channel. You guys got to pay $29.95 per week.
Man, I don't even pay that.
That high premium subscription.
It's like options. You got to pay the premium for that information.
How about this? I'll give you a one-time payment of $1,000 for that information, Mouse.
Yeah, right.
Who's getting that $1,000?
Mouse.
Good God.
No, I owe Mouse. Mouse owes me too. We owe each other.
That means you guys, it cancels out.
Mouse, you want this lumber?
Sure.
You guys see the price of lumber to build homes now? How inflated that is?
Dude, I like that 3D house print and shit. There's actually, I don't know if you guys are looking into it. I got, what is it around here? Where's my notes? Hold on a sec.
There's also the recycled water bottles that they're turning into bricks.
Look into time SQ4D. They're a 3D printing company. They've been printing houses. They actually got tangible houses already built. So out of all the 3D printing companies, they're actually really good. And I think they've already put up a small subdivision of all 3D houses. But that could be the other company I'm looking into. I don't know if it's this one. But either or. This company already has a house that's already built 3D printed, and they actually can do it in a decent amount of time. So the future for the next 10 years here, we're looking into where it's going is 3D printing.
Yes, sir. More than likely, yeah. Because you said it, well, never mind. I ain't going to say what was said, but I'm just waiting until Monday, like you said.
Yeah, I would wait till Monday to buy stuff.
Yeah, that's what I'm saying. Like, I'm going to take mines and then just thug it out. Wait.
Yeah, you have to wait for your money to transfer all the way anyways.
Oh, nah. The money that I got from my stimulus check, I went to the bank. I went to the bank yesterday, but I couldn't take it out. I had to wait till the day, so
All right.
I'm not gonna be able to go to the bank with it. So
Sorry to interrupt you, but do you already have an order for 220?
What, to take it out?
To sell your GameStop, do you have an order for $220? Because if you don't, I would say 219.99 because there's a big wall at there. It just sold. If you had it, woo! Where'd this well come from?
Look at that, dude.
Some well just bought a shitload of GameStop at 220.
Holy yeah, man.
Yeah, I was trying to interrupt you until you change the price real quick.
No, I didn't have a sale put.
Alright. Yeah, some well just gobbled up all the 220s. I saw the wall disappear in front of my eyeballs.
Yeah, this is the FOMO right here. I mean, for as inconspicuous backdoor shit as they do sometimes, I wouldn't put it past them to alleviated everything last week to be able to taper this off until the FOMO is here on the retail side to be able to get it up throughout the gamma to get into the actual high-end short squeeze, dude. So, I mean, if they didn't, it lined up beautifully with stimulus checks coming out this week. Naturally, but, I wouldn't put it past someone to try to do some bullshit.
That's what I was thinking too while y'all was talking. In my head, I was like, what if they just gave the people the stimulus check for them to put it in the market today, knowing that people gonna have FOMO, they're gonna buy everything up and basically take that money back, and they're gonna just lose all their money.
It's a coincidence if it's just once, but the fact that AMC got clapped the other day and got knocked back down, basically resetting itself because it was climbing too high also, that's where I see, the possibility of some, left field, bullshit possibly, happening behind closed doors to get that set up. But then again, it's also a good thing because if you guys got any experience in it now, knowing what you're doing and knowing the mistakes that, people have made in the past since the last big squeeze, I mean, they can get in and get out and make some money this time around. So it can benefit a lot of people also.
Yes, it can.
Yeah, it went back down after that 220. And another sell wall at 220.
Just let me know when it hits like 180.
The net buy wall's at 215, so if somebody's buying GameStop, they're doing it past the order book, like they're waiting last seconds to place their orders.
Yeah, I'm gonna be real cautious today. Like I just said, I think they're trying to get people for their stimulus checks, basically. So I'm not really gonna fuck with it today.
No, I didn't mean for you to be scared like that. They're not looking to take it like that. What I'm saying is that it was, if there was something that went on behind closed doors, it's very convenient how it lined up to where people have an extra couple dollars to be able to invest in GME and AMC to be able to get the FOMO retail side that we need for this to happen.
Oh nah, I wasn't gonna put I wasn't really gonna spend no money today anyway like that. I mean, if I see something that I like and it's low and I feel like it's not gonna go no lower, like that's where it's consolidating at, then I'll get a couple shares of it. But I'm just saying I'm not putting no big money out there today, like no $500-$600. I'm not doing it, not today.
Leave the YOLO into AZ.
Yeah, it's your boy AZ Backpack. I'm not doing it, not today.
So, Moss, I got a question for you.
What's up?
So, do you think that they're going to keep the price where, like, roughly around where it is today while people are getting their stimulus, and then come Friday, Monday, whatever, drop it so people get scared?
Yeah, I would just watch the charts and the fundamentals with the TA fundamentals I keep talking about with the good candle that goes up and then across, your TA floors type of situation. So as long as we keep seeing a consolidated effort to where we are making floors consolidating and continuing to go up, then we're just where we were on Tuesday of last week before the Wednesday issue hit. That's where we would be. And basically just getting, like I said, I can 350, 400 range should be where we take off from. I can, just because of everything that's behind it, the option chains and the contracts, I don't see too much interest into next month as of right now. So we'll have to see the rest of the week of how that plays out. But there's still heavy interest on the high side with calls for this Friday and next Friday also. So that being said, we just kind of got to see how it's played out. I don't think we'll get too much of a dramatized drop because this was the opportunity for them to buy in and be able to play the upside. So, because at this point in time, I mean, you have retail that has cash in their hand, so it's going to be very difficult for them to do anything that they have done in the last 7 days since last Wednesday going forward here. So,
Yeah, like the hedgies don't want
10 seconds.
Hedges don't want the price to drop too low so that
5.
people can afford it, right? They want to keep it at a spot where it's not too expensive for them. But
Ding, 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 ding.
For their retail.
yeah, something like that.
Right. You think it'll go sub 180 next week, Monday?
No. We ain't going to see 180. I don't think again. If we see 180, it's going to be some kind of outside catalyst towards what's going on here. I'll be very surprised if we see that.
All right. Sounds like I'm going to be buying GameStop near the end of the day.
We have the institutional investors, to the whales, the big monies that are moving this, that want to see the good squeeze happen, that's making money off of these option contracts on a weekly basis, and looking for the big squeeze also. They're already somewhat got their feet wet in it and holding. As long as the volume's there of what we need to continue to catalyst this up, they will continue to keep buying them calls and to basically push the secondary leg of what we need to make the short squeeze happen.
Giant sell. You didn't get to sell, did you, again, Carolina Red? I think the price dropped after.
Nah, I didn't sell.
Alright.
It's still floating around 220 though.
Guys, I tried to warn you about Torchlight, how it's going to dip. Whoo, and it dipped.
Leave Torchlight alone, man.
Torchlight could go as low as 75 cents down to 60 cents.
Then Meta would have to go the same exact price. It's not going to go, I promise you guys that.
Did you read the updated thing, Mouse?
I did that, yeah, but that came out with someone that is short of. It's a hedge fund that's short with the company, so they're going to put out.
The CEO of the company put that.
What company?
The CEO of Torchlight. He said that the shares, one Torchlight will give you one metamaterial share, one of the new shares, but one metamaterial current share will give you 3 of the new shares.
Yeah, but okay. So if you guys are on the short end of this, okay, maybe it wouldn't be advisable to stick all your money in Torchlight as of right now. But I look at the end of the year, Catalyst, Q1 of next year, when this stock is $20+ a stock right now. So and even at that point, I will probably just take out my initial investment and then I'll leave the rest in there for another 8 to 12 months. You know, so this has always been a long-term play, especially with the speculation of Tesla involvement. The whole speculation that on the New York Stock Exchange that Torchlight is going to go down to 60 some odd cents. That would mean that metamaterial would have to go down to 60 some odd, 70 some odd cents for them to meet in the middle to be able to acquire the merger upon the end of the month or in 45 days, whenever this is going to actually happen with the official merger. It can't be to where Torchlight is 60 cents and then metamaterials is trading at $3. That's no way that's going to happen. Fundamentally, it doesn't happen. They have to, when two stocks merge together on the New York Stock Exchange, they have to meet in the middle.
Did anybody ever?
Well, I never.
Can you guys hear me?
Yes, we can.
Sweet. Didn't work the last 3 times I tried.
That's the push to talk thing.
Yeah, we didn't hear the last half of what you said though. You said, has anybody ever, and then that's it.
Ooh, GameStop's pumping. The MACD still shows it's going up, and the price is at 223. I don't see any downturn for the MACD at this moment.
GME's gonna hit 240.
Here comes a little bit of the downside for GameStop. A little bit. But the MACD doesn't show that it's going to be a downward trend.
We consolidating at least?
Not really. Not a lot.
Uh-oh.
It's still holding above 220. Roblox still down a little bit. Is Torchlight went up a few cents. Would you risk trading Torchlight, or would you rather do Dogecoin for day trading?
I don't like day trading crypto. I'd probably go with Torch. Honestly, I can't know. I've never day traded crypto, to be honest with you. I just kind of buy crypto and hold it. I like the shiny digital coins.
Well, the thing with Torchlight, the thing with Dogecoin, it's the closest barcode that I've seen for day trading.
Really? Where do you trade your crypto on, Game?
I'd buy it and sell it through people on PayPal.
Okay, so let me ask you this: what is the charts that you watch for your crypto?
I watch Robinhood charts for Dogecoin. At the same time, I'm using Crypto Watch. It's a free application, but you have to download it on a computer, and it will use a ton of your processor because you can change it up to 20 ticks per second. It's going to be like the most real-time data you've ever gotten for crypto.
And you say Crypto Watch?
Yeah, I'll send you a direct link.
Thank you, sir. Yeah, I need to start getting a little bit more heavy into it because I do want to branch off of Bitcoin and Ethereum. I want to get more heavily into Dodge and like Cardano, things like that, just on the off chance those hit.
So look in YouTube chat. I see it in there, Mouse. You see that Crypto Watch link I put?
Oh, hold on. I got to go back.
Or I'll send it to you on Discord.
Yeah, I appreciate it. Yeah.
Make sure you set it up right so your computer doesn't turn into a heater.
Yeah, I appreciate it. Yeah, I'll probably upload this when I got to take my computer into the shop. I got to get a new graphics card and things. They just released new things on Steam, and now it's running like shit. So I'm assuming I need a new graphics card or something.
Probably more RAM. You might need to put new thermal paste on your processor.
Yeah, I think it's the graphics card and the RAM. I think I'm only running 16 off of the RAM, so I'm going to up that to at least probably 32 or 64, and then I'm going to put a better graphics card in there. I'm still running, I think, the i5 or i7, one of the two, so I think I'm still good, because isn't it only the i9, or did they release another one?
Do you have an i9?
Or 211.
No, I'm saying, isn't the newest one the i9, or did they release another one? Because I got like the i5 or the i7 in here. I don't know. I don't know much about these
Well,
things.
generationally, every generation has a 3, a 5, and a 7, and now they're about to launch Rocket Lake after just finishing Kaby Lake, or was it Sky Lake? I don't remember, but.
Well, that is good to know there, so I probably have to upgrade the whole goddamn thing then.
It depends on how old it is. It could be getting to the end of its lifespan according to what Intel says life cycles are.
Well, you can make your processor last up to 20 years if you reapply thermal paste every few years.
Well, yeah, even just whether you're taking better care of it or even just not being on the cutting edge, they'll last for a lot longer than the product cycle.
Last even longer if you use an AIO.
All right, right here you're going to see GameStop dip a little bit. MACD showing a downward trend at this point.
Just let me know if it's going under 180.
That's right. It'll be good if we consolidate right here and make a floor. We're just going to keep going up for the rest of the day. First 45 minutes here will tell us.
But I don't want it to go up for the rest of the day. I want it to go down.
Listen, bro, we would all like it to go back down, but I can honestly say I'm kind of getting tired of GME. I want the squeeze so it can be over with so I can concentrate on other shit. I've been waiting long enough. I want my tendies again.
Remember what Warren Buffett said about patience.
Yeah, man, I've been in this since last year. I took the first tendies in January, and then I got back in, man. So it's still, to me, it feels like this has been ongoing since October, November of last year.
But also, if the price doesn't go down to like, well, put it this way, if the price keeps going up, like, a lot of retailers aren't going to have enough money to buy it.
Kitty tweeted.
What did he tweet?
A Donkey Kong reference, going up a tree and then reaching the top and getting the DK coin.
Yep, it's on.
Hola, ¿cómo estás?
What you mean it's on, Mouse?
It's on. We're climbing the tree, man.
Yo, speaking about climbing trees, if anybody's fucking with crypto, there's this cryptocurrency called Storm X. Bread.
Have you guys heard about Engine?
Storm
that
X.
That one's on. It's climbing too. It's climbing hard.
Yeah, I saw that one too. That one's good too. Engine.
That one's gonna release a video game too. It's gonna be popping on summer. I'm gonna buy into it.
Jimmy pushing that 230.
Those checks are making it up.
Oh my God, they finally gave Charles Hodgkinson a check mark. Thank God.
Wow, finally. That took long enough, huh?
Dude, it's taken like years. Well, he did a video yesterday and he was really pissed because apparently like somebody got scammed out of a big pocket. I mean, like people take his videos, they take his tweets, they make fake Twitter accounts. And the thing is like he's been like literally begging Jack Dorsey, like, yo, what do I got to do? Do I got to fly to you and show you my driver's license? Like, seriously, I got people getting scammed. And finally, so Charles Hodgkinson, he's the owner. He's the creator of Cardano, and since 2017, he's been basically like trying to do whatever he needs to do to get a verified check mark on Twitter because, you know, in the crypto space, unfortunately,
verified?
he wasn't until this morning.
What the fuck? I did not know that.
Yeah, and there was a fake Charles Hodgkinson that like had more followers than him, and he was like, look, this is getting ridiculous now. He's like, I just had another person reach out to me telling me how they got scammed out of all their Cardano. He's like, we literally have people losing hundreds of thousands of dollars because I can't get a blue check mark. And he literally, and I quote, he goes, Jack, what do I got to do? He goes, you follow me on Twitter already. He goes, you know I'm real. He goes, do I need to fly there and show you my driver's license?
It's not just that. His family was starting to receive threats, and they were posting pictures of his house and all kinds of stuff on social media.
Damn, it kind of doxed him, huh?
Well, yeah, because people were thinking that, like, you know, people were thinking that he legitimately scammed them, when it's not him. It's the only bad thing now is, I mean, a check mark only goes so far. They'll do just like Elon, where the hackers, what they'll do is they'll hack somebody who has a verified account and then change the name.
Yeah, put a dot in front of it or something.
Right, exactly. And then that you know, and they do that all the time too. That's why I tell everybody, like, if you see these things, these airdrops where it says like, you know, send 5 Bitcoin and we'll send you 10 back. Like, dude, don't ever do those. That's a complete scam.
Why would anybody think that's real? Like, that's
because
ridiculous.
I'll tell you why. Because startup coins actually do airdrops.
You have to send them Bitcoin first, or is just an airdrop?
No, so the way an airdrop works, it is a funding practice, but it's only done on baby coins, like when coins like first initially launch. And they do these, and they do these. They are
I
real.
understand that, but
And
you don't have to send them coin to get coin.
You do. Yes, you do.
You send your address. You send like.
You send your.
Coin.
No, you send. Typically, what you'll do is you're an initial investor in the coin, and like so there's a company doing it right now called Symbol. Okay, and they used to be, it's XYM. They used to be XEM. So what you do is you send your XEM, and they send you double the amount of XYM back, and it's ongoing right now, and it is legit. That's the problem, because there are legitimate airdrops that do happen, and so that's why these scammers latched onto this practice, because it seems legit. I mean, I've seen them. They've done it on Elon. Like they'll hack a verified person that has a blue check mark. They will change the name to Elon Musk, and then freaking put their link and everything. Dude, they'll even go into the comments on YouTube videos and like post links. It's bad, dude.
Even if Elon Musk's verified account said, hand over your title to your Tesla and I'll give you 2 Teslas, I still wouldn't do it, because there's nothing. I don't think there's. I mean, if it's too good to be true, I think it's too good to be true. Like,
Well, that's. I mean, that's because you are smart enough to logistically think about it. I mean,
I'd rather miss out on an opportunity to get something for free than to get scammed. So I just don't do any of that stuff.
That did happen, right? I'm pretty sure that was a thing that happened. Will reach like Twitter scam or scandal.
Well, Elon, yeah, some guy, like it was just in the news. Some guy lost $500,000 on some coin because he thought it came from Elon's Twitter account, but it didn't. Or I don't know. It's just people are just looking for something for free.
Yep,
This is what
Doge.
Crypto's 24/7. How's GME looking?
Nothing major. 225.
Just be that morning dip that everyone seems to get every day.
What's it at?
Well, GME is at 225 or 226. It's bounced between 225 and 226, so it's up 8% for the day.
Apple's at a very nice discount of 192.63. Excuse me, I'm sorry, not Apple, Disney. Excuse me.
It's like Apple's up 182.
Apple's actually up.
I was
Well,
gonna say, I was like, I bought into Apple.
from my position, I'm up, but not for the day. It's definitely going to be a bloody day.
Yeah, should be an experience.
Oh, I'm ready to buy some dips.
Me too. I got my money ready.
Is GME on the MACD looking like it's about to take a big dip?
No, not yet. It's actually on a rising wedge right now. 225.29.
Thank you. I'm driving, so I can't really look. So please don't be mad if I ask.
Nah, you're good, man. I'm watching it for you. I mean, it's kind of just made like a little mini Head and Shoulders on the 1 minute, so it could break this.
Mouse, are you still in here?
GME is dipping. It's down to 222, 223.
Let it dip.
Could be momentary. $222. Carolina, you hear me?
Yeah, I'm listening. I'm listening.
It's dipping. It's dipping. It's dipping.
Yeah, I hear
Where's your buying number?
you. 180.
I got one at 172.
It's trying to fight back. It ain't got a quarter of the wick it went down with, though. It's back at 223. I think that green candle's about to turn red, though.
Is in ARKK?
I like ARK.
That's Kathy Wood's ETF, right?
Correct.
Yeah, I'm buying to that one today, probably.
That's a good discount.
Yeah, the 5-day low was at 120. It's at 122 now. The high was at 130.80. That could be somewhere just to park some of my Roth money.
GME is forming a reverse pennant. Down to 221. $220. Definitely on a dip, Carolina.
Appreciate it.
$219. $218. It's trying to pull back, but it ain't got the gas.
So what do you think? Another day like yesterday?
Yeah, I don't think today's going to be very good. I think actually, depending on what Jay Powell says in the meeting this afternoon, I don't have a good warm and fuzzy feeling. Carolina is hitting 217. It's dropping again.
Appreciate it.
Check, check. Sounds fun.
Pretty quiet right now. Huh?
Yeah, what are you doing, bro?
Just woke up actually from I'm in Canada right now. Just woke up in Canada right now.
Snow up there?
Sorry, pardon?
So you got some snow up there?
No, actually, no. I'm in BC, Vancouver right now. I think there was one day max there was snow, and other than that, it was nothing.
Yeah, Vancouver doesn't get much. Eh? My sister lives there, so.
Let's go, Canada.
Oh yeah, it's more rain than snow oftentimes.
Yeah, and when it snows, all the cars slide down the hill.
Yeah, you bet. Yeah.
We buying the dips, buying the dips.
Is the MACD showing it's going to rise any?
I don't think you can really depend on the MACD right now, man. I mean, it just went almost all the way down to 214. It's back up to 222, but it could go right back down even more. I mean, it doesn't have a whole lot of buying gas right now.
All right, I'm good then.
I mean, you do you. I mean, it could do whatever, but I mean, it slingshotted all the way down to 214, 214.40, and it's fighting just to maintain 222 right now. No, it just lost it. Hey, Carolina, if you're not feeling warm and fuzzy about it, then just take like, a percentage, and that way you can, keep some in if you want to hold forever, and take profit while you can.
Oh yeah, I done took some profit the other day. Right now, I'm just trying to average down and add like another 2 shares on. I got 4.5. I'm just trying to make it like 5 or 6. I'm cool right now. I'm just trying to keep up with it.
Oh, if you're trying to buy the dip, then I would wait.
Oh yeah, that's what I'm gonna do.
Okay, yeah, I would wait at least until that call, because 2:30 this afternoon is probably going to be a bloodbath after that meeting.
Oh yeah, and that's why I said I'm just waiting right now, just chilling.
Wait, what's happening at 2:30?
Daddy Powell.
Ooh, okay.
Who's that and why is that important?
Jay Powell. You know who Jay Powell is?
No.
Who is your daddy and what does he do?
He's the chair of the Federal Reserve.
Oh, shit.
That's gonna be huge.
That's what she said.
So what could he say that could piss the stock off?
I mean, it really doesn't matter. Usually, anytime he talks, it pisses the stock off. The thing is like they're trying to get him to do more, but the thing is, like he's squeezed on the Federal Reserve side as much as he can pretty much be. I mean, I mean, you got banks that are doing negative interest already, so like they're charging you to hold your money. I don't know who would do that. I don't, but like there's not really much more he can do. So, and if he says he can't do anything, then that's just even blank bad news. You know what I'm saying? But it's still bad news. Whew. Man, I hope y'all are watching that UEC like I told you. It hit 288. It's already back up to almost $3. Not financial advice, though. You know, just for pure entertainment purposes.
That's a mining company, right?
Yeah, they do uranium energy.
What was the ticker again?
Umbrella Echo Charlie.
Thank you.
You're welcome.
Also, what bank is charging you to hold your money?
There's a lot of banks right now that are doing negative interest.
Really?
Yep.
That fuck sucks.
So what they're doing is they'll incur like, you know, minimum balances. And then if you go under that minimum balance, then basically it's considered a negative interest because they're charging you to hold your money and use it, which I think is absolutely ridiculous.
So is that like a monthly payment or a yearly interest rate, or like how does it work?
No, well, what it is it's based on your monthly average balance. So if you dip below whatever their minimum is for that monthly average balance, then they hit you with like a $25 fee.
Yeah, like a little penalty.
Yeah, well, you say that, but that $25 adds up, man.
Right.
I mean, you're basically giving your money away to the bank for them to hold your money, which is ridiculous.
Yeah. That's why cryptocurrency's the future.
And a lot of them freaking came out with letters. Like I know Wells Fargo, Citibank. I'm not sure Bank of America, but I wouldn't put it past them because I hate Bank of America. I know Wells Fargo did. They upped their minimum balance requirements.
That's crazy.
Hey, it just pushes more people to crypto.
Better for us. I
mean, technically, you could open up a Voyager account. You could put your money in your Voyager, put it into USDC, which is a stable coin, so you won't lose anything, and get 9% interest right now. And you wouldn't spend a thing.
Yeah, you see, about those that they're hot wallets, so they're always in some type of risk.
Yeah, but Voyager is FDIC insured up to $250,000.
You see, UEC did a 10 million share public offering to institutional investors.
I did not.
10 million common shares at $305 each.
When was that?
The article came out today at 9:25 a.m. on Seeking Alpha.
And they did what price?
It says that UEC entered into agreements with institutional investors to purchase 10 million common shares at $305.
Well, that's cool. I'm in at like 295 average, so. That should boost it. You would think.
That's why I can't understand why it's lower than the 305 right now.
Yeah, I mean, that's why I'm like, but everything's down. Like, everything is down right now.
Yeah, sure. I mean, if it was a normal day, it would probably be spiking, but I just dumped like most of my portfolio for my Roth into ARKK and ARKW just to sit because it's going to be a long-term play for me. So I've got like 800 to 1,000 left. I'm thinking I'm just going to dump it in UEC, just let that ride and let that play out.
If you like ARK, check out Moon also. They're another ETF very similar to ARK, but they do different. They're more into biotechnologies, not just like the tech space like Square and Twitter and stuff like that. But it's very similar. They've actually outperformed ARK by 25% this year.
It's at 4182 right now.
Yep.
You have a certain entry point you would look at on that? Or just
I was hoping to get in around 37, but I mean, if they continue their track record, it really doesn't matter. I mean, it would be a year. It would be for the rest of the year for me anyway.
Hey, is GameStop and AMC part of that ETF?
Negative.
Just because it's called Moon.
But they're into the same, disruptive technology space, just like Kathy Wood is.
Got it. Thanks.
Is it like a space ETF, or is it just kind of a mix of all kinds of stuff?
I mean, it's 42% IT, 20% healthcare, 19% industrial, 9% consumer discretionary, and then 7% communication.
There you go.
Right on. Sounds not too bad.
It's like their number one holding is Vuzix and Microvision, and Fuel Cell Energy is up there, Nano Dimensions.
Oh, I love Nano Dimension.
What's the ticker again?
MOON, Moon. As I was saying, if you like ARK, it's a good in addition to ARK, because they're both in kind of the same bubble, but in different areas of the bubble. If that makes sense.
Yeah, I got to start dumping my money and get out of these daily swing stocks, and just for my Roth, just put these into my longer term plays. Now that I doubled my Roth, I'm just going to take it and just let them play out now.
Wow, you doubled your Roth?
Yeah, I mean, I only started the Roth last year because I did my company started all new retirement plans. So I decided to do a Roth, and so I dropped the $6,000 in there, and now I did that in November last year. I put the $6,000 in there, and now it's at like 13.5.
Nicely done.
That was primarily buying AMC at 7 when the original spike went up, and then sold it off. I forgot, I don't know, 13, 14 or whatever, and then getting GME down to 78, and then selling off from 150 to 270. So yeah, my investor, my broker for that account, and I was talking to him. He's like, "Hey, I didn't know you put your. I told you to hold off this year to put your 6,000 in, because you might be going over where you won't be able to put it in." And I'm like, "I didn't put my 6,000." He's like, "What?" He's like, "You doubled your portfolio in 3 months." I'm like, "Yeah, I know." I'm like, that's the power of meme.
Very true.
But I'm not going to be able to put in to that account probably any longer. So it's only going to be able just to sit there and grow.
Hey, I know there was a few people talking about Carnival and a couple cruise lines that they were talking about. You might want to take a look at this article at Yahoo Finance.
I heard Norwegian. So I was big on, out of all the cruise lines, Norwegian was the one that I think people should have bought into. And I forgot what, I think I got it. It was between 9 and 11.
Well,
and then I sold all that off to.
This is in contrast to what people are saying. They're saying it's suggesting a 31% downturn. Additionally, that it's running out of steam and it's not going to pick up like people thought it was going to pick up.
Well, it's still going to take time. I mean, they're still not going to be able to do full blown, voyages right now. So they have to wait, but it's a long-term play. I mean, Norwegian was always at what, 50, 60 a share. So if you're buying it at 11 back last year, I mean, it's just a long-term play. You know, it's going to come back into business. It's going to restart. So it's just something to dump your money into a hole. But then I pulled all that out to trade GME and AMC, and then I could have basically made the same amount of money just leaving it in there because it would have tripled.
Well, yeah, but what I'm saying is like, if you were in Carnival, like it passed its 52-week high of $30.13 on Tuesday's pre-market. So that's what I'm saying. They're basically saying it's in a sell move right now because they're looking at a 31% downside. That's why I was posting the article.
Gotcha.
Basically, like, take your profits off the table.
I mean, they're at what today? They're at $29.89.
I mean, that's their 52-week high was $30.13. That's what I'm saying. I mean, it's you're at the peak. And you're looking at what, at least another 12 months of reasonable recovery.
I'm trying to find my transactions and when I originally bought that one right now.
All right, so here's what Barron's just reported on the Fed talk today. So we all know Daddy Powell's going to talk, ends this two-day meeting Tuesday at 2:30, and that makes it a big day for growth stocks like Apple and Tesla. The Fed, remember, has promised not to hike rates until 2023, but with growth picking up, there's a risk that the Fed becomes more hawkish, suggesting that the monetary policy could get tighter sooner than expected. That's what we don't want to hear. Standard Charter strategist Steve Englander wrote recently that a hawkish Fed would say things like the economy is approaching equilibrium swiftly, or that higher bond yield will be tolerated, or that two rate increases in 2023 are likely. That's what we don't want to hear. But a more hawkish Fed would mean better things for commodities because it could mean that the central bank sees more inflation. When inflation fears rise, investors like to look for things that have perceived intrinsic value like gold, crypto. Of course, the Fed could simply stay the course, in which the case NASDAQ could bounce back in a big way. Guess we will find out. We're looking at a proposed 1% decline today for the NASDAQ.
My crypto's taking a hit today.
Is that huge?
ADA's holding, DOT's holding.
Yeah, Bitcoin.
It's at its support line. We just don't want it to drop below 54.5. That's our. If it drops below 54.5, then that's when we can start worrying. Right now, we're still in the green zone. It can swing between 57 and 55, or 54.5 all it wants to. It just needs to figure out what it wants to do. Once people realize if there's a bottom and they see that there's an entry point and people get their stimmy checks, it's going to go up. Plus, there's big news on Bitcoin coming out next week anyway. 2 multi-million-dollar big investment firms are making announcements next week.
Hey, Nate, you heard about the Indian stuff that happened with like Bitcoin and stuff? The news? I haven't read into it, but I was hearing like they're trying to ban it or some shit like that.
Oh no, they tried to do that. So India did have a ban. Then they took off the ban because they were announcing their own CBDC, which is central bank
currency.
digital coin, CBDC. Then they basically put it to a vote, like for their people, which I don't know why. I don't know. It got a whole bunch of backlash back. They were basically going to try to ban all other crypto other than their own CBDC.
They do all sorts of crazy stuff there, though. They literally, like, I think, did some stuff with the currency where they got rid of. Wasn't this like they got rid of some note, and then everybody had to literally come in and turn it in, or it was going to be worthless. And this was all done like, yeah.
That was like overnight. That was crazy.
They did do that, yeah.
Yeah. They do all sorts of like unilateral moves that are just like crazy.
They came back out and put an article saying that no, people misinterpreted. They're not going to just ban it. I posted the article in.
Oh no, they did say that. They just came out. They just came out and re-clarified because of the amount of outrage that they got. But here's the thing. Here's the thing. Even if they tried, they can't.
Yeah,
that's the beauty of it. They would literally have to arrest their entire population.
Yeah.
And there are no names on wallets.
They always come out with bills, and the bills may not get passed, but it's like, again, the news articles are out there as
They
soon
can
as
ban
like
the ISPs
a day ago.
allowing crypto exchanges.
India's gonna ban Bitcoin and other crypto. People are gonna use VPNs. People are gonna whatever. You know, it's like
It's
I wouldn't worry too
FUD.
much.
That's one of the reasons why Bitcoin kind of like dropped a little.
It's FUD. It's FUD. Yeah, it did a little. You're right, because unfortunately, people believe FUD.
Yeah.
But it's FUD. It's garbage.
Yeah.
I mean, it doesn't matter. Even if the bill is passed, you know, it's going to have this world's strictest digital currency laws. People who own it or people who want to own it are still going to do it. Just like here, what we were talking about yesterday, that there are ways to get the coins that you want, even if they're not entirely allowed here.
So if they ban the ISPs for allowing crypto exchanges on their servers, then what?
I don't know. Then people just find
that would be the only way that they can actually do it is block.
I don't think you can do that.
Sure, you can. Look at China.
Yeah.
We're not China.
We're talking about India. I'm talking about India.
Look at Binance US versus Binance.com.
They're going through some shit too.
Starlink.
So if you can get blocked from Binance.com in the US, why can't you get blocked by every crypto exchange in India?
But some of the richest people in India own a lot of Bitcoin. This bill may be like out there for like public perception or whatever, but it's probably not going to get a lot of support. So I wouldn't worry too much about it overall. Bitcoin is still happening. It's still going to be a thing, and India is going to need to catch up at some point.
Personally, I think it's just a ploy. It's just, you know, they may have done it on purpose to buy, like, there's so, God, I don't put anything past anybody. I mean, like, they could have done it because they knew it could have caused FUD just so they could buy into Bitcoin.
The bill,
I mean, like, seriously,
but it's still in the works, though. The bill is still in the works. It's going to criminalize possession, issuance, mining, trading, transferring crypto assets. So it's not just Bitcoin; it's any crypto. So it's going to give again, it's a bill. It doesn't mean that it's going to get passed. It's going to give holders up to 6 months to liquidate, after which penalties will be levied. I mean, like the person in India who owns the most, I think he owns like almost $2 billion, or his net worth is like $2 billion. I mean, I wonder what the fines are going to be.
Me personally, I think it's FUD. Like, it's just FUD. It's not either that or it's just.
I'm sorry, what does FUD mean? What is FUD?
It's fear, uncertainty, and doubt. It's basically a propaganda tactic. It's
Gotcha.
an acronym for propaganda.
Gotcha.
Like when you hear somebody say, "Oh, that's FUD," or like it's used a lot, especially in the crypto space. But yeah, it's fear, uncertainty, and doubt.
After like a big bull cycle, they'll hit you with a bunch of FUD in the media to try bring the price down.
They don't even have to be facts. They could just be hypothetical questions to raise a specter of uncertainty.
Yeah, it's just to like scare the paper hands, the people that don't do their own due diligence, and they see something and they immediately like freak out, and they know it works, so that's why they continue to do it. Which is again why it's like, we always say all the time, like, do your own due diligence. I mean, and there's a lot of contradictory statements about that bill too. Like they've gotten a lot of negative feedback from even the proposal of it. And I can't remember what her name is, but I could probably find it. But basically she came out and she's higher up in the India bureaucracy or whatever. And she was like, no, we're not telling you can't have it, And like people commented on the Twitter, they were like, well, that's what the bill says.
Yeah, they're saying that it's gonna, it's gonna take some time for them to like pass it, if that's what it is, and then there's gonna be that 6-month period. But I think if people are in crypto, again, we have to go back to what was the purpose of crypto when it came about. Was exactly this. It was to counter this sort of government or central bank authority. It's the exact reason why crypto was created.
But okay, so just to give you like some backtrack though, like they're so back and forth on this that it's ridiculous. Like on March 6th, or excuse me, last year, okay, on April 3rd, the Supreme Court of India lifted the banking ban in favor of crypto.
They do this. This is India. If you're not familiar with Indian politics,
that's what I'm saying. Like it's absolutely ridiculous.
This is just and people don't necessarily, will not necessarily comply either.
Have you guys seen that Pakistan had started their own national cryptocurrency mining agency?
Go Pakistan.
It's gonna be everywhere. I mean, they have a massive amount of people?
And a lot of people who are like into technology and are a lot of expats.
Yeah, try to convince my brother to get into it because he's an engineer for a hydro company up here in Canada. I'm like, no, you got to do this with the extra power.
Wait, did you say that there's a lot of people in India that know technology? Come on, we never.
I was talking about Pakistan as well. Yeah. There's a lot of.
It's like half my virtual assistants.
Yeah, when you mentioned Pakistan, because there's a lot of people that went back and they're developing the infrastructure. They studied here and went back to Pakistan.
Well, I'll tell you what, after tomorrow, there's going to be a whole lot of countries that are going to be like, holy crap, this is happening. We need to get on board with this.
For what?
The Africa speech is tomorrow.
I was not aware.
They're tokenizing the whole entire continent. And it's ADA, providing a stable coin to the entire freaking continent.
So I'm assuming you're expecting a big jump in ADA?
Hey,
I am.
I'm there with you, Neat. I got me $100 worth of ADA, so I know it ain't much, but it'll be better than nothing.
I mean, this it isn't freaking something that's like a month-long thing. Like this is something that these people have been working on since literally 2017. This is years of negotiating with the government structure in Africa.
And we holding until it hits $100. God darn it.
Dude, I told you that's like people are like, well, what's a good entry point? I'm like, like anywhere, like. I mean, like that's why I'm like I've been buying everywhere. I bought it when it was $1.43 at its peak. I mean, I bought it $1.25. I bought it $1.19. I bought it 89 cents. I mean,
Yeah, I just brought my first ADA. What was it? Not yesterday, the day before, when it was like what 107, 108, something like that.
I mean, look, it's not financial advice. I could be completely wrong. I'm just a smooth brain ape like eating crayons. Like I say, the grape ones are the best flavor. But if you do the math, how many people are in Africa? If that many people start using Cardano,
Dude, I was just talking with my friend yesterday, and as soon as ADA pops off in Africa and others countries adopt to it, it's a wrap, dude. The cattle is gonna start, the snowball's gonna start, and it's gonna be nice.
Okay, see, there you go.
It says Africa is going to bring on 100 million users to DeFi in 3 years.
They're the largest. They have the fastest growing communities in the world.
Yes, and it's also I feel like this is gonna stabilize poverty out there.
Absolutely. That's the point. That's the point. That's why it's not. That's why. Okay, I'm sorry. I'm getting passionate. That's why I'm so passionate about it, because this isn't based on greed. This isn't based on money. Like, yes, is there going to be money to be made? Absolutely. It would be stupid to say there isn't. But the people that are behind this are already billionaires. They're not after making more money. They're literally looking to help these people because their currency literally fluctuates on like an hourly basis. Like even faster than that. I mean, these people have to like look up their currency before they spend it to make sure they're not getting screwed. Can you imagine like being at the grocery store and like having a cart full of groceries and like having to look up your currency and say, hold on, honey, we got to wait. Don't get in line yet. We need to wait till currency comes back up. Can you imagine having to do that? Because that's what these people have to do every day. That's their life. That's insane. Exactly. And this will be life-changing for them. Life-changing.
They literally buy cell phone minute cards and use that as money for the stability.
This is the biggest thing that could happen financially for that whole entire continent. Seriously.
It's a huge continent too, so it's gonna be awesome.
I'm FOMOing into Cardano like nothing else.
Like I said, it's not financial advice. I could be totally wrong. I'm just following stories.
He said anytime's a good buy.
I'm following.
I'm FOMO'd Monday.
I mean, I you can call me a shill because I'm already invested in it. But I mean, I just believe in it, man. I believe in the people behind it. I believe in the fact that I feel like they're good people. Like these people are already billionaires. If they wanted to go buy an island and go drink martinis and pina coladas the rest of their life, they totally could. They totally could. They totally could. But no, I believe the motives behind these people. I mean, if you think about it, Charles Hodgkinson built a program, built a coin that the people have control over it. Like he doesn't even have control over it anymore. The people do because of the governance system that he built into the coin. So like he can't even be like, oh, I'm going to shut it down today. Nope, can't do it. That's the way he built it. So it's when you dissect it and you look at it, completely from all aspects, you're like, this dude is not here. Like, he doesn't care about the money, man. He really doesn't. He truly believes he can change the world with this. And I believe that. I really do. And you can call me whatever you want. Have I drank the Kool-Aid? Sure, because I believe in it. I do. I believe in it. I think he's a genuine guy. I think he believes in the future. I think he thinks that this will help millions of people and change the world. And I'm on board.
His openness really helps too. The fact that he like gives his weekly addresses and all that, I really like that.
And he's legit AF.
Too, yeah, of course.
Is this a reverse cap and handle on 24 of half an hour Bitcoin?
Stand by. Yeah, it's a double hump, really. It kind of did it kind of did like a little double hump. I don't like it when I call this bouncy ball movement. I don't like bouncy ball movement. I like peaks and valleys. So it's doing a lot of bouncy ball stuff right now. Like if you look at the past few hours, it looks like a bouncy ball path instead of peaks and valleys. And but we're fine as long as we're above, 54.5. We're in the bracket. We're fine. I mean, we're fine anyway. If it dips below 54.5, then you just buy the dip and enjoy the profits on the way back up. Not financial advice. That Hydra on ADA looks great, though. Did y'all see my little two-headed sea serpent?
I did, yeah. So what can we expect out of that sea serpent?
Oh, and just so you guys know, like, this just isn't a Cardano thing for Africa. Like, they've got the CEO of Bybit is going to be there. The CEO of Celsius Network is going to be there. The growth lead, CT, I think they call him, from Kraken, is going to be there. The founder and CEO of FTX is going to be there. There's going to be some doctors talking about it because they're introducing blockchain into the medical field.
Do you know how that's going to be implied in the medical field?
Like, personally, I don't know. I just know that somehow they're applying blockchain to it in order to streamline the way it works. The platform Ask the Doctor has already said that they're already jumping into it and they're actually going to use Cardano. That's why I know that about that one specifically. You can look that one up.
Yeah, I'm gonna look it up. Sounds pretty
Yeah, just type in Ask the Doctor and then do like a space Cardano and it'll pop up immediately. But yeah, this is a huge, huge event. It's actually 2 days. It's the 18th and the 19th. And it's about, blockchain. It's called the Blockchain Africa Conference. It's going to be a huge event.
So neat. If you think ADA will potentially be the biggest winner out of the third gen chains, or like, do you have like a second place candidate?
I mean, I think the majority of the third gen coins are going to win. I mean, like I think the winners are going to be the ones that realize that there is no coin to rule them all. Like this isn't Lord of the Rings. And I think that that's going to define the winners from the ones that get left behind. The ones that can't let go of this competitive, my coin will be the best coin attitude, I think those are the people that are going to be left behind. The people that are moving forward are all working together. And they all see that it isn't going to be one coin to rule them all. It's going to be a basket of coins, a multi-asset culture.
Yeah, true.
And how all these different coins work together. You know, and yeah, you might have competitors, you know, for each of the little coins, and you'll see, you know, the better ones rise to the top and the lesser ones will probably disappear. Me personally, like I like Polkadot. Gavin Wood is one of the pioneers of cryptocurrency. He's incredibly intelligent. If you haven't listened to his TED Talk, I highly recommend it. I mean, the guy's not to mention he's a phenomenal coder. But like his definition of what Polkadot is vital, and nobody. Well, I guess you could say Uniswap is kind of doing it, but not to the extent that Polkadot is. So Polkadot is a way to inter-exchange between blockchains, and that's why it's so vital. So that's one of the ones I truly believe in. Again, also because Gavin Wood's a part of it. You know, obviously Cardano. I think Cardano, honestly, is going to be the second most popular coin right up underneath Bitcoin.
Yeah, multi-chain operability is like so big. And I guess like the whole thing with the third gen chains is it's ultimately going to be the chain that can scale, like, and be the cheapest, right? Like,
GameStop's going back up. The MACD is showing a nice trend. Is Carolina Red in here?
Yeah, I'm here.
Did you sell at 220 or no?
Nah.
Alright, just checking. I didn't sell any today. I've been busy. Roblox I like Roblox's current price.
Yeah, I sold 2 shares of GameStop at 230 and bought a couple more at 215, you know, just.
You might want to sell before 2:30 o'clock today. Not financial advice, just be careful at 2:30. If you can get out before 2:30, that's my strategy.
Get out of which one?
A lot of your positions before lot.
Yeah.
Like Bobby Axelrod said, sell all of our positions, but slowly.
What's happening at 2:30?
The Fed.
Oh, Powell thing. Oh yeah. Okay.
Well, you're only going to sell if you're day trading. I mean, you know, if you're looking at any longer term plays.
Yeah, but
unless
you
want to
buy
get
back.
in at you can get in at a lower position, so it'll be better.
If you're maxed out on your capital, sure.
I mean, if you sell, then
this is going to be more than one day though. The prices are going to dip for like a whole 4 or 5 days. I told people I'm buying back Monday pre-markets. I'm treating this like a vacation.
That's what's up.
I know what's going to happen. I'm going to enjoy the days off. I'll still do YouTube live talking, but I don't have to worry about making a lot of big trades until Monday.
You said GME is on its way back up. Art.
Yeah, the MACD was showing GameStop going on a positive trend. That's why when I come back in here and talk, let me refresh this real quick.
Yeah, it's going down right now.
What do you mean going down right now? I don't see the ticker. I don't see it moving. Is my thing messed up?
Yeah, it's 216 to 215.
215.71.
There it goes. I see that move, but the MACD does show it's going to go up. So it may drop to 215 here, but it still could go back up to like 217.
Yeah, for trading, it's pretty.
I mean, it's been shown
some key points this morning.
I mean, it's basically been showing that on the MACD though since it was at like 226. It's basically doing a downward wedge right now.
Oh, that when I saw that 226, Carolina Red.
What?
I was thinking about you. I was like, I hope he has an order in, but you didn't have an order in.
We were telling him. We were keeping him up to date.
Yeah, they was keeping me up.
I just don't want you to be a bag holder.
Oh, I'm not. I've been taking profit and buying back in at averaging down and stuff. So I've been doing it, kind of smart. I mean, I ain't perfect with it yet, but I've been getting it right.
Do you still have any shares of the stocks that you're anticipating are going to drop, Tame?
I could probably put 1,000 stocks on a piece of paper and pick one randomly, and it would drop. I am going shopping Monday, maybe even Friday aftermarket if it's really bad.
I think that also take into consideration what you consider, like, if things move in the same direction as GME and AMC, the ones that are being heavily shorted or being held that way, that those are likely, I don't know if they're going to be impacted the same way. I'm not offering financial advice, but that's how I'm treating it. So if I had long positions and stuff that may not be behaving the same way as those stocks, those are the ones that I think that will be going down. If that makes sense.
Could you say that one more time? Sorry, my brain just kind of didn't wrap around that.
Like, there's stocks that are behaving in line with GameStop and AMC, and these stocks that are being shorted, those may behave differently. They may behave in the way that they're getting shorted, and they may pop up versus dipping down. So that's kind of like the guideline that I'm taking when I'm going to be selling. Yeah. So I'm going to wait for those to get squeezed or make those moves up before I'm going to sell those. And I'm in the green in a lot of those, because those are the ones that have been moving in ways that just seem weird.
GameStop's 218.
Yeah.
What a beautiful lady GameStop is today. Yeah, but when Jerome Powell speaks, if a stock's not like heavily shorted or anything, it can drop today. Oh man, is it going to go straight to 219?
FOMO buy.
Let's see what the future's doing. See, when futures are going up, GameStop goes down.
There it goes. 219. I told you guys it was going to go up.
Yep.
I'm just going to get the MACD tattooed on my head.
You should get it tattooed on the inside of your lip.
I think that candle's fixing to turn red.
I don't think so. I'm going to have to disagree with you.
Sure.
Sure.
FOMO buy.
There's really not a whole lot of buying gas. Like, there just isn't.
There is a huge buy order at $210 for 5,800 shares. That's a nice wall for 210. I feel nice about that wall.
How big is it?
5,800 shares.
It'll push towards that
at 210, and that's for people trying to buy. But the next big wall for people selling, you got 1,000 at 222, and then after 222, there's not really a wall until 225. So if it's climbing, it's going to climb. It could climb up to 225 within an hour or two. If it's climbing. But last night we saw that 10,000 share wall just got gobbled up within 1 second after it hit that mark. That's when I was like, oh, 220. Sell.
The Powell speech, is it going to be like another stimulus thing, or we don't know yet?
No, he just pisses off
Talk about interest, right?
every time he talks. Every time he talks, he pisses everybody off.
He wouldn't be speaking about stimulus.
You guys
Take a shot every time he says the word unemployment today.
No, thank you. I value my liver.
Every time he says unemployment or interest, take a shot.
Dude, I'll be drunk by 3.
That's right.
Well,
having a good time.
I'm gonna go for this jog before 2:30.
You guys gonna start taking shots this early already?
Yeah.
Well, I mean, he's gonna be on what time? It's gonna be like 11:30.
Right. We're in California time. I
2:30
forget.
where I live.
Yeah, it's gonna be later.
2:30 is not bad because usually I go to bed at 6 o'clock.
It's gonna be closer to 11:30 our time, and if we've been up, I don't know. I got up around like 3 a.m. our time.
6:30.
Yeah.
Damn, you go to bed at 6 o'clock. What?
No, I said I got up at 6:30.
No,
Oh, Danny, why do you go to bed at 6 o'clock? What the fuck?
What are you, like 75? Go to Denny's for dinner at 4? Go to bed at 6?
No, I do that sometimes. I don't know what his prerogative is, but sometimes I go to bed at 8 o'clock. I'll be up at midnight and then start my day from midnight on throughout the whole next day.
Because I'll be up at like 1 my time, which is 4 when the pre-market. Yeah. I fell asleep early yesterday.
Busy, you wake up at 3 or 1 o'clock in the morning for pre-market?
Yeah, I check it out. If I either wake up at that time and check it out, or it's before I'm going to bed, I'll check it out, and then I'm up usually by 3-4 o'clock our time.
That's another reason to move out of California.
True that.
I don't mind it. Actually, I've done that most of my adult life, because even my career before this, I would be up at that time, 3 a.m., 4 a.m. I was up.
That's insane hours.
I've done that for over 20 years.
I go to bed at midnight Central Time and wake up at 5 a.m. every day.
There you go.
That's a good schedule.
Yeah, you only need 5 or 6 hours of sleep.
Yeah.
4.
4.
4 is too little.
I did 4 most of my life. 4 hours.
That's what she said.
Bruh, Carolina, what the fuck, bro?
What?
Hey.
I think you'll find I have an ever sharp penis.
So if everybody's betting that stock's going to tank tonight, wouldn't you be buying options for Friday?
Yeah.
I mean, I think that would be obvious, though. Like, wouldn't that kind of defeat the purpose? Because everybody would know that it's going to tank.
Well, not everybody knows.
Wow, Roblox hit its high again. That's $78.
Ooh, I got 4 shares.
I should have sold that.
I'm thinking about selling mine too, but I'm just sticking it out.
Yeah, that's like $12 a share return.
Yeah, I got 4 of them. I got it at 64.45.
Oh yeah.
I'm trying to wait till it hit like 80 or 90. Yeah, I'll just get rid of it. Fuck it. Bloop.
I wonder if it's gonna get squeezed.
The GME contracts are making back my losses.
Nice.
Anybody else here in Nano Dimensions?
Is that 3D printing company?
I am, Mouse.
I don't know. Somebody put it in general. I started looking into it. They got a high recently of $17. They're only trading at 10 right now.
Yeah, I got in when it was like $4. I got
What-
about 120 shares.
What's going on with them besides that the space station? Are they doing anything with future-wise here, or is it that just that squeeze because of the International Space Station thing?
I have no idea, dude. I've been like so out of the loop with them. I'll read into it.
I love you guys, dude. Like we don't know the financials. We just like the stocks. It's awesome.
To be honest with you, that was one of my the first shares that I bought when I first opened my account. I just got lucky with it.
Well, I like them even more. I say right here, Nano Dimensions Ltd is an Israel-based addictive electronics. Our other, what do they call it? What's in California? What do they call it?
They do a lot of 3D printing.
Silicon Valley?
Yeah, the other Silicon Valley, believe it or not, it's in Israel, guys. It's just not really talked about.
Yeah.
Oh yeah, for sure. There's a lot of stuff that's produced there that gets boycotted. I
Really?
think
I did not know that.
Nokia, I think, was doing stuff over there. Intel was doing stuff over there. But then it was like, if their factories are on occupied territory, they're not supposed to make profit on it, and American companies can't do that. So, yeah.
That's crazy.
Yeah, it gets on the BDS list, and then boom, it'll like tank.
This is crazy. They're using additive manufacturing to print like electric circuits. Pretty cool stuff.
Yeah, I'm looking at the financials right now.
I know they have a lot of capital because they're always raising money. Whenever their stock goes up to like 12, 14, they're always raising money.
I'm back. Oh boy, the MACD's down now at this very moment on the chart. People could have day traded GameStop, but I think Torchlight or Dogecoin are better for day trades for this. You want high volatility and low price if you want to make your most money day trading. Carolina Red, if you have time, like I would recommend somebody like you with very low cash flow to trade crypto.
I be trying to get it, but I like last week or this past weekend I did it. I made like $30, but I ended up losing 10. So I was just like, fuck it.
You could literally look at a chart at Dogecoin, and there's really no way to mess up on that unless you buy super high chasing. Like, if you see Elon tweet and then you buy right there, you might get a little bit messed up unless you sell right when it peaks. You can set your phone notifications so that every time Elon Musk or somebody tweets, you get that notification, and you can make it like a certain noise.
Oh yeah. I got it every time he tweets. But my thing is this: when it pops up hours after he tweeted. I don't know why, and I got it where.
Oh, your data, your phone data.
That's probably it. But I know every time Roaring Kitty tweets, I get it right when he tweets.
Well, I'm gonna go for a jog. Hopefully, GameStop doesn't go down too hard on me. I wanted to get out of GameStop around the earnings call day. By the way, if you earn more than $75,000 through capital gains, you might not qualify for that. I don't think there'll be stimulus next year. Don't worry about it. If you're earning $75,000 from capital gains, I don't think you need to worry about stimulus next year anyways.
Big facts.
I think it's weird those people that had $75,001 and then they're not qualified for the stimulus.
Dude, you know how mad I'd be if I was one of those people?
And that's when you ask your employer, like, hey, can you give me a bonus? I don't know. I think in the very near distant future, we may see like fast food workers earning $75,000 per year if minimum wage increases a lot.
It should be that way.
I mean, that means inflation would be up
Wait,
there
you think
too,
people
though.
should earn $75,000?
I think they should. I think that's barely enough to make the American dream.
It depends on where you live. I earn very little income, and I'm living the American dream.
I made more than that. I would make more than that, and it was difficult to survive here.
Where do you
I
live?
think the minimum wage should
In
be
California.
She's in California.
defined by the state
Yeah.
that you live in.
Yeah.
Like it's completely unfair to have a national minimum wage. It's unfair to everybody in every state. It should be a state thing. It should be, and the thing is, you
I think so,
should
too.
like if you're on minimum wage, like there should be a rule like where like you know if you cross over the state line and you work in that other state, then you're held to that state's minimum wage, not your own state. Like there'd be exceptions like that, but like because the cost of living is just like it's insane as far as like the differences. I mean, like, dude, you can. I'm not even kidding, and I'm not bragging. Okay, I'm just saying it's just a fact. Okay, you can live like a freaking king on $45,000 a year here in South Carolina.
I wish I could, do that. And the thing is that my partner made more than twice what I make, more than twice. And you can imagine that was still like poverty level here, like in the Bay Area.
Yeah, well, it's like my friends live in Daly because they can't even afraid. They work. My buddy and his wife both make over $100,000 each,
Oh yeah.
and they can't even afford to live in the city that they work in.
No, listen, I don't mean to cut in, but some of that I have, especially in the environment that I'm in, a lot of people that I have noticed that around me that have wealth, that have money, some of them people do not know what to do. That's why I tell you guys to get on the books of the loss of wealth, because even if you have money, if you don't know what to do with that money, it doesn't matter if you make $200,000 a year or $50,000 a year. I know some people that make $55,000 a year and have more in their bank account than the people that make $250,000+ a year.
Very true, but this is like strictly a cost of living aspect. Like, I mean, like if you only make $200,000 as a couple, and you're trying to live and work out of San Francisco, you're like you're below the poverty line.
Yep, it is true.
Well, that's
I mean,
not the federal government's fault.
before my buddy had his daughter, okay, him and his wife did live in the city, and it was like I guess you would call it a studio. I mean, technically the bedroom had a door and the bathroom had a door, but like the kitchen, the living area, and the dining area were all like kind of like this big L, and it was all open, okay, and it was $3,400 a month, and it could not even have been 900 square feet. There's no way.
Oh, I mean, even if it was 900, that's amazing. Honestly, like I've seen places that's actually decent over here. 900, if you could get 700 square feet, wow.
Yeah, it may have been. Yeah, I don't even think it was 900. I think it was probably like between 750 and 800 square feet. I mean, it wasn't like small,
I would take it,
but it was small.
Bay Area peeps out here really struggling.
But that's what I'm saying. Like, and dude, he was like, dude, like we loved our apartment and we would have loved to stay there, but we couldn't, like, we needed a room for the baby.
like yesterday when I had to bounce, it was because my partner came and we went to a beer place out there, brewery, and met up with one of our couple friends. They just recently got their second shot, and they've just bought a house in the Mission. Couple, like
in Mission
that. Yeah, that's and it's gorgeous.
That's
wait,
insane.
the day when we were. The day that we were doing the Cardano thing, remember I said I can't go to the housewarming because I was doing Cardano.
Right.
That's where so I met up with them. Oh my god, for a couple our age to make it and like have a place in the city, they are ballers, basically,
That is hella
to be able
baller.
to do that. Yeah.
That's so baller.
Especially in Mission.
Mm-hmm.
Could always move to studio apartments for like 500.
Where? Take my money.
Alamance County.
And see, that's what I'm saying. Like, that's personally, like, I'm not saying, like, I agree with the minimum wage, but I don't agree with the minimum wage because I don't believe in a federal minimum wage. I think it should be a state mandated thing because the discrepancy of where you live is too great as far as of cost of living for it to be even remotely fair. Because the problem is, if you make it equivalent to, like, say, let's say people who live in California, then you destroy incentivization for cost of living in places that is much lower, because then people just, like, if they can make $22 an hour flipping burgers, you're going to have people that are going to be like, well, why would I want to be an engineer when I can just go to Wendy's and flip burgers for 8 hours and make $22 an hour?
No, $22 an hour does not cut it. Not where and an engineer is not going to do with that. Engineers are making way more than that.
I was making $22.50 an hour working for an engineering firm for almost 17 years here in Columbia, South Carolina.
When you find
Speaking
your
from
passion,
experience.
when you find your passion, your true passion in life, for you, the money doesn't matter, man. It doesn't matter if it's 500 a week or 5 million a week. When you find your passion in life, when you're truly zoned into that, money is objective.
I agree with that too. That's why I do what I do now. But I'm to a point in my life where I'm able to do that. There's a lot of people that aren't.
Here, I'll blow your mind up.
Marketect's talking about in the YouTube chat. Imagine that places that have tons of illegal undercutting wages. No, these are wages that people don't want to. They don't want to do that. Who here wants to go work on a farm? Honestly, in California. Oh, I don't know what you're talking about there.
Here, I'll give you guys a better one. Hey, how about this? Universal basic income based on the providence that you live on and the means that needs to be able to live there. And then your jobs, what your passions are, what you truly want to do in life is your incentivized basic goals to be able to better your life from that basic foundation.
But who's going to pay for that?
What do you mean, who can pay for that? Everybody can pay for it, dude. We all pay for it together, and we wouldn't miss any portion of type of money. Listen, if I had to pay for it on my side an extra 15 to 23% tax, and everybody in a certain tax bracket above had to pay that said tax, and that trickles down to all people that choose to go out there and continue to work after this universal basic income is implemented through all of society, then it's trickled down to a water effect to where you barely even notice it. It becomes pennies on a dollar at that point in time.
But again, I think that falls back into the same premise that we're talking about with minimum wage. How do you define what a wage is when it's so different when you the cost of living between state to state?
It's the distribution issues and it's the gorging of prices. There's no reason it needs to be $1,500 for a closet, the size of a closet in New York City for a room. There's no reason it needs to be. That's just greed. So when you adjust the system to where there's a universal basic income, other things like housing issues will become quarterly adjusted. There's some people in California that's grandfathered in certain places, and same thing in New York, to where they have $1 million homes and yet they're renting it out for literally $1,200 a month. Yep. So you got $1 million flats that other people are paying hundreds of thousands, that everyday average person would have to pay hundreds of thousands of dollars to live there, but you have rich people that can do it for pennies on a dollar. Now, when all of that gets readjusted to basically what the moral high ground, which if you enforce a moral high ground on society, the market will adjust to that and everything will run accordingly. The only reason the market doesn't have the moral high ground is because because no one is implementing or forcing the fact that the market needs to take the higher road instead of the average lower road that it takes now. So if everything adjusts and we can afford there is we can afford universal basic income and nobody else is going to hurt. If anything, your life will get better because you're not stressing about paying the basic needs that you have to survive. And now you can go out, follow your passions, follow your dreams, and instead of just having to provide for your family, now you have time to really figure out who you truly are as a person, provide that passion for yourself, your family, but not only for yourself and your family, for your community and the world as a whole, that if you didn't have run out and make sure that the bills were paid every week, you could actually strive for the best person that you could be and whatever that you truly want to do. That could potentially change the world, and when everyone has that universal basic income to where they can just survive, they can put food on the table, they can pay their bills, then they have the incentive to not want to go out and sell crack on the street or go do bullshit, but they'll actually put themselves forward to do something better with themselves. Now, is ever 7 billion people going to do that? No. There's going to be some people on the high end of the spectrum, and there's going to be some people on the low end of the spectrum. But the general principle of it is that the general consensus of the population would go after their true potentials. I mean, it's been seen before. We've had little time and time again over the course of history to where things have been tried out in society and cities, and it has worked. But unfortunately, the general consensus of the population, it doesn't work for that. Look at Sweden. The way Sweden runs their country is phenomenally in and out, perfect, from their healthcare system to their drug systems to their schooling systems to everything is worked down to a T. Yes, it is slightly more expensive to be able to reside and live there, but you have so much that is paid for through the state that it balances itself out. It course corrects. And the poverty level is next to nothing. You have homeless people over there that are living and have a roof over their head, So, and while we, one of the richest nations in the world, have 70 million people living on the streets of California right now, there is something wrong with that. And you have a 4-hour wait to go through the hospital when there is other cities you go through. I mean, even Mexico, in Mexico's hospitals aren't the greatest. So that's just one example. But throughout the world, there's other places that are not as rich as us. And you can be in and out, see the doctor, get treated, and get treated correctly within 25 minutes and have a prescription in your hand.
Mm-hmm.
It's just an overall system, and things will change. Hopefully it's changing for the better, just all depending on, we'll see who's really running this country, within 12 months here.
Mouse, I'd like to run your campaign for your 2024 presidency.
Right.
I'm voting
Right.
for you,
Yep.
I don't know about 2024, maybe what is it, 2028?
I don't know. Maybe I'm just like, I'm not a pessimistic, but I mean, I love to be optimistic. Maybe I'm too much of a cynic. It sounds wonderful. Like it does. Like I can't not agree with what you said. Right. But the problem is like, I just
listen,
I wish it would be like that.
But it is. If you can believe that the hedge funds do short ladder attacks to where they'll set up the option chain to tank a price, right? Which you do believe that. Why don't you believe that the U.S. federal government has not only brainwashed you, but brainwashed your mother and brainwashed your grandmother and your great-grandparents into believing that there's not enough in this world, that you have to go out there, you have to work hard, you have to do a 9-to-5, you have to go through all these processes, and hey, guess what? If you're in a cage with somebody else and then somebody on the outside's rattling that cage, but you can't see who's rattling the cage, you can only see who's inside the cage with you, you're going to start fighting the person that's next to you, not the person rattling the cage.
I agree. And that's the thing. That's the problem I have with because I don't think they're going to let us peasants not be peasants anymore. They want us to be peasants. They want us on the outside of the wall.
No, it's
the
a
elitists
mindset.
are not going to let us inside the castle.
No, it's a mindset thing, man. That's how you got to start that mind balance, this whole thing. You got to start working on that mindset because there is a lot of people out there that is trying to change the system. You hear it as bad things in the regular news, but it's not. Even like your cynical look on Jack Dorsey. Jack Dorsey is a multi-millionaire going on billionaire, and yet he's giving a vast portion of his personal income to less impoverished cities, and not just one. He's doing 3 to 5 cities to where he's giving universal basic income to millions of people. You have people like, yes, Zuckerberg isn't the best with what his program's doing and everything like that, Facebook-wise. But aside from Facebook, even Mark Zuckerberg, his technology and what he's trying to do is all about innovating the future to better mankind as a whole, to get to that point to where robotics run all the day-to-day type of things, and we don't have to do the lesser type of jobs. That way we can iterate that universal basic income. All the little jobs that no one wants to do is taken care of, and then we can continue to grow as a society to be able to follow passions, to be able to do what we need to do. It's out there. It's recent, man. You know, the change has only been started recently, and I'm talking maybe the last 6 to 10 years, you know, little by little things, you know, and it's just, that's where from here, you just, it's a mindset, man. You got to look at the more positive, because when you look at the positive, that's what gravitates in your life. You are what you think about 95% of the day. So if you're always thinking cynical, that's all you're going to get. If you're always thinking positive, that's all you're going to get is that positive, you know. Even on your worst days, you lose an arm, you will still have a smile on your face. You know, that's the power of your mindset, man.
I just want to hop in on that real quick. Dude, you could not be more true in what you say there. I mean, yesterday I had such a difficult time, such a difficult day. Had to go play a show somewhere, and I was carrying my amp to this show and just twisted my ankle like the ever living hell out of it, and played 4 hours standing up. But it was the best gig that I ever played, you know. And this is coming from somebody who 2 years ago I was too frightened to even get up on the stage.
Yep, that's what it is. It's that mindset, man, and that overcoming within that mindset, looking at something, and you see most people see a wall and a problem, where others see the wall and a solution, you know, and see a window or a door. You know, that's just what it is, man. You know, no one can stop you, you know, if you have the correct mindset. That's for sure.
Fucking amen, dude.
Ernest Aspen in the YouTube talking about minimum wage went to $15 in Alberta. Service industry made 50% less in tips, $3,800 a year. Increase in wages, $15,000 less in tips. I mean, I'm just gonna say one thing about the tipping culture and tipping in general, and I think that people deserve a wage. And there's a whole number of problematic things that happen with tips being what people need to survive on to be able to pay their bills. There's like issues with them, like the way that tips are distributed. Like there's a whole slew of it that I've gotten into before when we've had this discussion here on the Discord, but I'm not going to get into like all of it right now. I do believe that people deserve to be paid. Like what it says on the menu is what people should get paid, and they should not have to rely on tips to survive.
Oh man.
Yeah. The idea, the whole way, the history of where tips came from, that is like a whole nother thing.
We're the only country that allows it.
People were not allowed to earn wages, and that's why they could only work for tips. Just think about that.
Like, it's actually seen as disrespectful in other countries if you tip them, because you're saying they're poor.
And we've taken this culture all around the world, where now people in so many places expect
weird.
tips.
I know, like we go to other countries and we just
What?
Bro, what's going on? What was that?
I don't know what is going on.
I thought I
Sometimes I just want to throw in. I help manage a restaurant. I help manage a restaurant. And,
hold on.
I think you're not muted there, Nate.
Is it breaking news?
I think Nate got a phone call and he's not muted.
So tax wise, so basically what restaurants do is they force their employees, which kind of is terrible, but where I worked at a restaurant, what happened was is I found out that well, the way they tax them is they take 10.5% of their sales out of their check, and it's a tax. And so they tell the employees that they have to make their 20% or higher, or their 18% or higher to make up for that loss in their check. Meanwhile, you have the waiters and waitresses having to tip the busser, having to tip the bartender, having to tip the expo. So it's just ripping them. And as soon as I heard that, as soon as I found that out, I was like, I'm out of this business. That's terrible. Like, basically, you're not paying your employees; they're paying themselves to work here. So
It's crazy. It's really crazy. Here in the Bay Area, we have restaurants that have moved towards living wages, and so they're not requiring I mean, nobody requires quote unquote tips, right? But you don't have to tip in those places because there's actually like it's all built into the price that you're paying for the food.
They implemented into the pricing. I like that.
Yeah, it makes it so much easier for I think everybody. And okay, so just to touch on one of the ways that it harms workers when you don't have a living wage worked in and they're relying on tips, when and if they need to rely on social services, for example, unemployment and all that, it's based on your wages, not your tips, so you're getting like shorted on that end on what your benefits are, because it's not counted properly. So that's just one bit, and you can do your own research and do your own due diligence on this. There's a lot out there. There's a big movement to stop this whole, to change over to living wages for the service industry.
Okay, Tam said breaking news, but didn't actually say anything.
Oh, I heard somebody had like the news in their background, like the breaking news noise, but they didn't say anything.
Oh, that was Nate's ringer.
Yeah, that's one thing. Japan really is ahead of the curve.
And so many things, aren't they? They're great.
Yeah, right. But me and my wife went there for our honeymoon, and we tried to tip a cab driver. We tried to tip a waitress at a restaurant, and both of them looked at us like we were just nuts. We just smacked their mother. Like, no, I'm doing my duty. What is this crap? Yeah, it really was to them. It was mind blowing to me because I've worked a $2.75 an hour job plus tips. I mean, I tip well when I can. It was just really weird to go into that.
So when I was in Japan, I had a similar experience. But there were to the places that were more like touristy, though, I did tip. And one of the girls was like, "Oh, you don't she spoke English. She's like, you don't have to tip here." And I was like, "That's okay. You can take it anyway." I said it's just like it's our custom, and I just was like,
"What does it cost?"
What?
Wait, Mika, what's the cost to go to Japan these days? Like, if I wanted to go to Japan and take my family, like 4 people, what do you think the cost would be to have a good time over there?
It's expensive. Like the hotels are expensive, and the flight. It's all about anytime you do any flight overseas, I always try to look at the busiest airports that connect. So for Japan, you're going to get a better deal flying out of California or Seattle or even Canada.
Mm-hmm.
If you do Air Canada and you fly it out of British, off the West Coast, that's usually anywhere from $400 to $500 flight. Where from Minnesota, what I did was would have been $900 a ticket. But because I flew out of DC, it was only $700.
So if you're on the East
California,
Coast, that's about.
I'm just worried about having a good time over there, cost wise. What am I looking at?
You're looking at if you go to hotels, if you want to stay in Tokyo, I mean, it could easily. You should just look online right now and see what the prices are, because it can range anywhere from $300-$400 a night. In some of the more popular areas, if you want to stay in Ginza or if you want to stay in Harajuku, maybe a little bit better, but it's common for it to be like $300-400 a night, and meals, you know,
My trip was
your tips are included.
That's pretty good, actually.
I was
Yeah, tips included too.
Aren't that much more than they are here, though. Like,
No,
food
it's
prices.
included.
Hotels are expensive.
Everything
yeah.
is.
So,
I mean, for me,
Well,
in
yeah, you see
California,
old
everything
tax
is like
price.
everything is more affordable than here. To be honest.
The other thing though about Japan is some hotels charge individually. So like that was one thing that
Yes.
we ran into. So like even if it's two people sharing a bed, they might actually just charge you for. They were going to still charge you individual pricing. So that's just
Yeah.
one thing to consider.
okay.
220.
It is expensive.
Yay.
The food though, like
Amazing.
7-Eleven has got it going on. I had the best food from
7 and I
7-Eleven.
holding. 7 and I holding. Lawson's. Dude, I've been there.
Yeah, go find
Dude,
you a
Fucking,
Lawson's.
if any of you ever go to Japan, you have to have an egg salad sandwich. Anthony Bourdain said it was the best egg salad sandwich in the world. I tried it and I agreed, and it's because of what they do and feed their chickens.
Yeah.
What do they feed them?
So they figured out that chickens don't taste spicy, so they actually feed them peppers, and that's why the egg yolk comes out a little bit more orange than Americans. Like it's got an orange
That's
tint to it.
Science.
Yep.
Does the egg come out spicy already?
Yeah, it has a nice flavor to it.
Fuck, I'm gonna start feeding my chickens fucking peppers then.
But I would research it because these are Japanese
Yeah.
chickens. Japanese chickens are very different and a different species from, or like it's different from American chickens. So just I would research that. But I know that Japanese chickens, that's what they do.
They don't mind GMO there. There's a lot of GMO.
Yeah.
I'm gonna put anime in front of it. At least I'll turn it into like a weeb chicken.
Hell yeah, dude.
My mic working now?
Your mic works absolutely fine. All right, Carolina Red, GameStop's at that 220 again. Hint, hint, hint.
Yeah, I see it.
I'm gonna go get vaccinated today. So I'll be
Congrats.
watching this.
What are
Yeah,
you getting
I'm
vaccinated for?
COVID.
All right. You got your measles vaccine?
Yes.
Do you have your flu vaccine for this new influenza?
Yep. I've got my flu and then the pneumococcal pneumonia.
Oh my god. I hope I don't get cockamamia. I can't have cock in my throat. I can't be choking. If anybody advice out there, if you like to date men and you want to keep your man, just get your tonsils removed, ladies and gentlemen.
True story.
That's the only advice I can give you guys. I can't give you financial advice, but I can give you that dating advice.
Or you can buy Orajel.
For you.
Maybe, consider taking your teeth in and out. That helps too.
I prefer to keep my teeth.
Well, you can just get dentures and pop them out when you don't need them.
That sounds horrible and gross and disgusting at the same time.
Get you a granny.
No, I'm giving people advice on how to make their partner happy. I'm not trying to tell them to find somebody else.
Oh, so you're talking about gummies.
And if you're a man, you can get a cow tongue surgery.
Yeah,
Look
we
into
call
it.
those gummies.
Getting the gummy.
Looking for a gummy bear?
Your tonsils do help your immunity, Xavier, but some people, their tonsils really help build up bacteria instead.
Did you just say cow tongue surgery?
Yeah, so you can make your tongue longer. Look into that. It's a cosmetic surgery, and it's well worth it.
Is that really a thing, dude?
Yes, but when you get it, you're going to sound a little bit weird when you speak, kind of like me.
But some people have like tonsillitis and stuff, and they have it removed when they're.
That's weird.
I had my tonsils removed when I was a kid.
Oh boy. It can cause, those tonsil stones are huge as fuck, too. Let me remind you guys. Let me get my camera out. If I ever get a tonsil stone, I will pull it out. I'll pull it out on live stream if I ever get one.
No, Tame, no.
I'm joking. I was gonna say a doctor.
What,
I've
girl?
seen some on TikTok. It is not nice.
No, I was on YouTube at like
Oh
4
my
o'clock
God.
in the morning watching Tonsil Sloan videos.
Let's go back to stocks. Stocks. Let's go
Anyway,
back.
meanwhile, in GameStop land.
Yeah. And all the other stocks.
GameStop took a dip when we started talking about that. Nah, I just want to hear Carolina say he sold at 220.
I don't know if he is.
He told me he was going to do it. When you have a plan, you should stick to your plan.
Huh. He was gonna sell it at 220 and then do what? Buy more?
He could have sold it at 220 and bought multiple times, but he never put the order in. He doesn't have an order in.
This last 220 I sold, so I'm gonna buy it after the dip. Whenever it hits its lowest, I'm gonna buy.
I would recommend, not financial advice, but keep an eye on other stocks besides GameStops, because this is not a big dip. You might see 40% dips in other places.
SLGG's on its way down. If anybody's in that.
Who was talking about Disney earlier?
Neat.
They announced, I put it in the chat, but they announced they're opening April 30th and they just shot up a couple bucks.
Oh, that's what you sound like, Miso Soup. Awesome.
I cannot wait to see what people look like on this chat, because some people I'm like, I have like a AZ backpack completely surprised me of how the
Right. I was so shocked.
From his YouTube videos? Yeah, I know.
Oh my God.
I was like, really?
Honestly, I thought he was going to be a white boy.
I thought he was going to be lankier than he actually is.
Are you talking about me behind my back?
No, Tame, we know what you look like.
Am I white?
Yep.
Am I white on my taxes or am I Latino?
You're Latino on your taxes, but white on the screen.
You're Latino Mexican.
You're white and
Mexican.
lanky.
On a stock note, Robinhood's first card is why are traders interested in options today? That's the first thing they show you when you get on the app. You about to be like, oh damn, I better start trading some options.
Alright, I was on the other Discord today. I hopped over when you guys were talking about that secret talk just to chat with my buddy, and he showed me some $8 call options he bought on SNES. And my heart sank a little bit for him.
I mean, I'm
Super Nintendo.
They're for July, but still, SNES, $8 before July. Ugh.
Yeah, it's at 168 right now.
I have 340 share or 350 shares at $4. So
Oh my! You bought it at $4, or you have?
I bought it higher. I had to like
That's
average down.
Tank.
Oh my
I'll trade you for my $6 Nokia shares.
So I don't know what just happened to Disney, but it just like catapulted.
Did it?
Still said something.
Buy puts.
It went from like 191 to 196, and like
They announced they're opening the April 30th.
Nice.
If you guys look at Disney, every
High
time
was
a
203
Marvel
though.
movie,
They're not above their high.
like right before a Marvel movie comes out, like a MCU movie comes out, their stock goes up. So if you look at the dates of back when like Infinity War and like when every time a movie came out, their stock would go up. It just kind of would climb. So I've always kept an eye on Disney, but it's just interesting to know that people really like Disney, and every time they do something cool like release a Marvel movie, that people really start buying the stock.
AMC's making a move.
Yep, both of them are.
I'm trying to do some research right now because I got my STEMI check, so I'm trying to figure out what I want to do.
Let's go.
Looks like it's three valleys.
Bitcoin.
3 valleys. We should be moving up.
Research, but I'm telling you, wait till after 2:30 today, and then watch this fall.
That's what I was gonna do. That's why I haven't like decided anything, but I'll probably go with Bitcoin just to like put the money somewhere for now.
Wait,
don't-
do you think
I got
Bitcoin's going to drop 40% though?
Let me look. I haven't been watching Bitcoin because I was even thinking Bitcoin or ADA. I already have ADA, but I want more.
I would say for the amount you probably got in stimulus by Ada.
Look at AMC.
I got a 25% profit going on AMC.
I just want to go to Carowinds. I want to ride the roller coaster, go all the way to the top, and then crash down through the ground. And somebody's hat flies off their head, hits me in the eyeball.
My theta for my AMC contracts is killing me.
Why?
Because it's higher than when I bought it at, but since like there's less time, I'm at a loss.
Oh boy. I don't think Naked has decent fundamentals. I don't know what's worse, if a company lies on their accounting and secretly bankrupt, or if a company tries to pump their stock when they're about to be bankrupt. Hertz was a great company that did that. They tried to pump up their stock by publishing some good news, and then filed bankrupt like the few days after. Shareholder equity in Hertz is negative $3.65 billion. The stock is worthless. It peaked at like, it peaked after they said that they paid off their debt or got a loan, and then the news came out that they were bankrupt and the stock went off the New York Stock Exchange. Just be careful on those stocks that crash like that. Make sure they actually have money in the bank. A good way to check, see if they have job openings and stuff on their website. If they don't even have job openings and they can't hire new employees, they may be struggling.
Doesn't anybody think about Uber as a longer term play as everything starts to open up again and Uber being more used and used?
So, I know from experience that if you look on the Uber app right now, I live in a very popular city, but it can take a driver 15 minutes just to get to your location. There's not enough drivers right now. Uber's definitely earning very little money right now, so what it means after COVID lockdown, they have so much more potential. They could be earning a lot more money.
Yeah, but you're thinking of only Uber for consumer. Like Uber Freight is getting really big also.
Oh no, the Uber Eats is worst. Your food's gonna come in like 1 hour.
We get Uber Eats in like 15 minutes.
Hope nobody has Wells Fargo.
Are bank stocks dipping?
Wells Fargo apparently is having multiple outages today. I'm sorry.
Who got their stimulus in Wells Fargo?
I'm just like, oh, they're getting killed on Twitter right now. Like they're just getting murdered. I mean, just murdered, like murdered.
Screw these banks.
Murdered.
You know, Wells Fargo stock is like the highest it's been in like the last year, though.
People are saying, so Wells Fargo is just not working today at all, huh?
They're taking Patty's day off.
Banking at Wells Fargo is like trading on Robinhood.
I would agree.
I had to leave Wells Fargo before because of their outage.
Yeah, I got out of Wells Fargo because they suck. And
Yeah,
my ex-wife works for them, so they suck.
Yeah, my parents are one of the people that has an account open on like without them knowing.
Yeah, same.
I was about to say I forgot all about that scandal until something like you just said that. I was like, didn't they open accounts like in people's names that didn't open them?
Yeah, I was too. They sent me a check for $35 that I still haven't cashed.
Chase or Bank of America? Which one?
Wells Fargo.
Chase. Definitely Chase.
I would do Chase.
I hate Chase.
I'm not
overall,
a fan
but-
of Bank of
I
America.
would do a credit union.
Yeah,
Yeah, I would
actually,
say credit
yes,
union
for
too.
sure.
Yeah, credit union.
Well, that wasn't one of the options. Chase, I hate them overall, but they're one of the better banks.
I have US Bank.
What is this GameStop hearing in chat?
Didn't know about the Senate hearing right now. Just
I
more
guess I'm
mumbo
behind.
jumbo like before.
So everybody dumped GME already, or what?
No,
Well, you're the one telling everybody to sell it.
at 220.
It's hit 220 like 1,000 times. How many times are you gonna wait for it?
I know, and it hasn't really went up much more than 220. Right here, it's about to go back down. No, I was saying that 220 because me and Carolina, I said 220 because he told me he's gonna sell at 220. So I like
Unless
to
you're
hold him to
holding
his
hundreds
word.
of shares, what's the difference of $1?
Yeah, I was trying to hold him to his word though because he didn't sell it like the first 4 times it went to 220.
Should have sold at 231
When could he have sold at 231?
today.
What time?
850.
Oh. Nope, we started talking after that.
I was 231.47.
What are you trading on again? Fidelity, Carolina, or Cash App?
I got my GME on Cash App for the time being. After the night, it's gonna go on Webull.
Oh, thank God you're making the bigger move now. Why didn't you do TD Ameritrade instead of Webull though?
Because when I tried to do TD Ameritrade, I still ain't got the $50 that I put in there over 2 weeks ago. And I called them and they was like, well, it's in the account. And I was like, well, I can't see it. It's not in my buying power. So ever since then, I just said, fuck TD Ameritrade.
Wait, it's in another place when you open your account though.
Yeah, TD. As soon as you deposit, it's available.
It's not called buying power in TD Ameritrade.
Okay, when I go to buy something, I still can't buy nothing. It's saying that I have to deposit money, and it took the money out of my account. And the lady said, or the guy said, well, we see where it took it out, but it's not showing up. And he just acted like he couldn't do nothing about it. So I said, fuck TD Ameritrade.
Just call your bank, tell them to recall it. Tell them it hasn't been completed to recall it. Let the bank work it out and just deposit more money into it.
Yeah,
TD's fine.
It could have been your bank side. TD is fast. Like I can put money in my TD and it would be there within 1 minute. And it may take 2 or 3 days for the funds to be available for trading. That's what they call it. They don't call it buying power.
I got an account. The day that y'all said something about TD Ameritrade, I made an account with TD Bank. And they took the money off of my debit card. I didn't have a bank account at that time.
Wait, did you say TD Bank?
Yeah.
No, then that's not going to be in your TD trading account. You need to call the local TD office. Just look up the local TD office for your home, call them, and have them look up under your social all the accounts you have open.
It's in a checking or savings account?
Yeah,
right
it's
now?
probably in a checking account. If it's TD Bank versus TD Ameritrade, like the brokerage account.
Yeah, they're completely different. What I told you was if you have a TD Ameritrade account, you can make a bank account with them at the same time, and then you can link them. But you had to go through TD Ameritrade to make that.
Yeah, but there's no reason to do that unless you need a bank account.
He needed a bank account at that time.
Oh.
He's just using
Hey,
Cash
guys.
App for a bank.
I would use the most popular bank around you, not just use TD.
TD this much.
But yeah, that's why the money's not for trading. We figured that out. It's a little bit confusing because the bank and the trading, they have the similar name. Kind of like, well, Bank of America. You have Bank of America Banking, but they call their trading platform Merrill Edge. You still have to put money in your trading account from your bank to use it.
Yeah, if it's been 2 weeks, you should have gotten something in the mail already about TD Bank with a new account.
What I'm saying is they took the money off of my debit card and it said it was deposited in there. I got the screenshot and everything. I saved it, so just in case they said, well, no, it didn't. They took the money off. When I go on there and I look, like I said, I don't know shit about TD Ameritrade, but I look all over it.
Wait, can I ask you a question?
You're looking at TD Ameritrade brokerage. You need to look at TD America Bank because you probably opened a bank account, not a brokerage account.
Again, when I went on TD Ameritrade, the broker, just listen, god damn. When I went on there, when you told me about TD Ameritrade, the actual trading platform, it took the $50 off of my card. When you said something about a bank with them, after I set up the account to trade, I made a bank account with TD Bank because it was right there on the same platform. Like, it was right under it. Like, well, make a bank account with us, whatever. So when I made the bank account, I didn't see the 50 in there. When I made the trading account, I didn't see the 50 in there. So I called them Thursday. I called them Thursday. I said, hey, I'm just calling to check up on a $50 deposit that y'all took out of my account, and I never got it on my trading platform. And they were just like, well, we don't see it, which it came out. I got the screenshot that says that it came out.
I don't see on TD Ameritrade where you can fund a brokerage account with a debit card.
I'm going to show it to you. 1 second.
Which is why I'm assuming you have the wrong account open.
Yeah, it took about a week and a half for my money to actually like clear for TD Ameritrade.
But either way, just all you gotta do is when you call them and they verify you, if they search by your social, they can see every single account under TD.
Yeah,
Now,
his money should have cleared.
Now, if you look in the general, it says TD Bank. And I did that through the brokerage thing, the TD. When I went on TD Ameritrade, like I said, it took the money off of my account because he didn't say nothing about the bank account until after he told me about the brokerage. But I'll call the bank today whenever I pull over. I'll call them and see if it's in there. But if it ain't there, then
if you Google TD Bank versus TD Ameritrade, they're separate, unaffiliated entities, not responsible for each other's policies or services.
Yeah, Carolina, there are two different banks. I used to live in New Jersey, and I know what you're referring to, TD Bank. They were famous back in the day because they were the only banks open on Sundays. But TD Ameritrade, that's a different bank.
Screenshot. That's actually to TD Bank.
Yeah, that's a different company than TD Ameritrade.
So that's TD.com. You want to check, Carolina Red. TD.com, not TD Ameritrade.
that's why I said I'll call them as soon as I pull over. I'm about to pull up about 4 minutes to this stop, and I'm gonna call them because I called TD Ameritrade, so I'll call the bank.
Yeah, Carolina, when you log into TD Bank, so TD.com, it says it on the main page. It says TD Bank and TD Ameritrade are separate, unaffiliated companies. That's where your issue is.
I just said I'll call them when I pull over. I got y'all. I've been listening.
We're gonna play a quick game. After the chair speaks today, after Jerome Powell gives that speech, I want you to say a stock ticker that you think is going to plummet the hardest. On YouTube, Juiceable thinks that Apple is going to take the biggest hit.
Tesla.
Yeah, I'm gonna say Tesla.
My entire portfolio. Literally everything that I have my money in.
Nvidia. I think Nvidia is going to take a big hit.
How about Geo's portfolio?
Kathy Wood, go ahead. Your portfolio, we're sorry for you, babe.
Oh, don't hurt my girl like that.
I better give her a back massage later. She gonna need it after tomorrow later.
That doesn't sound half bad, actually.
Yep. All right. So
Let's talk
another
about
good stock that's
TVs.
going to drop. Coupang. You know why Coupang? Because they have an early lockup release for 34 million shares held by employees. Oh my god, it's gonna fucking tank when their employees sell their shares.
Another stock that takes a really bad beating is Microvision.
Oh, yep.
Please don't say that.
I think Torchlight's gonna take a dip as well. Around.
Hey, I've got Microvision on my buy list. That's awesome.
I'm already down 20%.
Yeah, you're gonna see Trey crying tomorrow about his girl.
Yeah, I jumped into it on his recommendation.
I'm gonna wait to go shopping then. Damn.
Dude, like I'm telling you, that guy is like Dunning-Kruger effect all day. Why you gotta watch out for that guy, Trey.
I think
I don't know a single YouTuber that takes shots of Kraken or any type of alcohol at like 6 in the morning.
Oh, that's just the army in him, man. That's that, and he's at Fort Sill. I was there. There's nothing to do there, literally. It's like complete boredom.
Well,
did you guys see the news about how the CEO of Xpeng, he bought shares of Neo when the stock price was low? He said he bought the shares during the toughest time during 2019. I wonder how many shares of Neo this CEO owns. It says he invested $300 million during 2019 when Neo was really low. Oh, he said he did it just to help Neo. He said that if Neo fails, then it's going to affect other EV companies in China.
Nancy Pelosi's husband's getting put under the microscope pretty hard because apparently he had never owned any stock before prior to 2019 and like made a whole bunch of heavy stock purchases in 2020.
He should get a mental check for still being married to Pelosi. That's what he should be under the microscope for as a psychiatrist.
How do you divorce the Speaker of the House?
And the mother of your 5 kids.
Yeah, how do you go about that? You want to live in a cardboard box on LA streets?
First of all, I would never live in LA.
I mean, I was just talking about the fact that he didn't own any stock prior to 2019, and then he just bought a whole bunch of stock in 2020, and just kind of looks bad. Whether it was bad or not, it doesn't matter. Perspective is everything.
Guaranteed it's going to be bad.
Maybe he joined a Discord.
No, it's definitely the recovery effect, though. Because I didn't start until like after COVID hit because everything was on a fire sale.
No, it's because of the Joe Biden effect. They knew Joe Biden was running for president. They already had this plan in motion to try to convert all the American vehicles that are government owned into electric vehicles, and that's why they invested in these EV stocks.
Yeah, that.
Yeah, they were
Of
going.
course.
They had that Green New Deal.
But isn't Pelosi's shorting Tesla though, isn't she?
No, they own Tesla.
Yeah.
They bought Tesla when it was like really expensive, like $830.
They know.
That was deleted from Open Insider after that became public scrutiny. Try to find it on Open Insider.
Rude.
Hey, so what's on your buying list, guys?
Tesla.
Bitcoin.
Groceries and Bitcoin.
SLG.
Weed.
Yeah, weed is very important.
I want to see how oil and gas does.
Dude, Tesla's already going down, and the meeting ain't even happened yet.
Tesla already had their Tesla logo on the dip, so it's gonna fucking go after this.
Yeah, I'm gonna grab me some more.
That's what I'm waiting on. That's what my stimmy's going to. 2 shares of Tesla.
Tesla should do another stock split. That'd be great.
And then a week later, it was up like $110.
Yeah, Tesla could jump $100 in a day easily.
If retail traders lose, it's a lot of capital gain loss for the government. But yeah, as the hearing goes on, GameStop just got a really nice green candle. This might be one of the first times that Matt D's wrong.
I mean, this is where, if this chart pattern is accurate, we should see a breakout.
Yeah, if a whale's buying right now, whoo, buddy, it could go up to 250.
Well, we've got 1, 2, 3. This is where it should go pop, but who knows?
Need volume.
Yep.
Oh, the Matt D switch fast as fuck going up. Better do that
Let's
shit.
go. Let's go. Been waiting all morning.
Let's get it.
Yeah, 5 minutes and anything under that MACD's looking good.
Even the 15, not so bad. You know, like it may only switch here for a little bit, or it may just continue popping.
Yeah, 30 and after, it's looking good too.
If you bought GameStop at 290 earlier this week, put a diamond hand in the chat. I want to see how many of you guys bought at 290.
Glad I'm not on YouTube.
Oh, nobody bought at 290. That's great. Nobody's putting a diamond in the chat. That's why it's hard to put a diamond in the chat. Let me show you guys how.
You could copy paste it.
Isn't it hand, diamond, hand? Or something?
Oh, I see a diamond hand.
Alright, I was just teaching you how to type it. I did not really buy it at 290. Beautiful Heartbeat, you bought at 290? Was it this Discord when I was telling you guys about GameStop was about to do a really big dip?
Yeah.
That was a very sad time. I wish it wasn't true. I wish it could have just kept climbing, but life happens.
Ado, you did, huh?
Hey Keith, you still got your shares?
Anton Versage bought one at 283. James Lugman. Adam Hutton says, not me, bought GME at 97. Congrats. Beautiful Heart, 235, 50 shares minutes before it plummeted. Oh my god.
That's why he's not down that much right now.
Yeah, it's not so bad. Yeah, actually, it's good. 50 shares. Nice. Anton Versage won at 175 yesterday. Oh, good. Got that dip. Anton Versage says, I have 46 total. Nice.
You know, after this hearing, Keith Gill can post a screenshot again. Oh, you saw his Twitter earlier with the apes.
Yeah.
And I love that. God, those simple games were so fun. These games now where you have to shoot people, I don't feel comfortable with that.
Oh, it's going on right now, huh?
Yeah.
All right. This guy's funny. Andy Bar, Kentucky.
All right. So we're not smart enough. Let me just watch the hearing on my phone.
Where can I watch it at? Is it in the other chat room or?
I'm just watching it on YouTube.
Yeah, it's on YouTube. Can you just link it for
Can
Carolina?
somebody? Yeah, because I just pulled over. Thank you.
Yeah. We appreciate the work that you're doing, Carolina. Truck drivers are very valuable across the United States.
Damn Skippy, they are.
To y'all in here, they are. To these people out here, we are just shit. I appreciate it though.
Man.
How do I have a better web camera and microphone than these guys?
Look at their potato.
This is from CNBC Television. If you go CNBC Television on their YouTube, you can watch it.
Yeah, I just linked it in the general for us.
It's House Committee on Financial Services.
Or you just do GameStop hearing. Look for the live.
You can view their live stream. I'll put it in the YouTube chat, okay? This is directly from the government website.
You're right, A Beautiful Heartbeat. When we did the wildcat strike here some years back in Oakland, that was related to Occupy. When we had the unions, the truck drivers, and also the shipping companies, like what was it, the port here in Oakland, they joined us. Oh my God, everything got stopped. It was amazing.
I gotta tell the congressman about GameStop. And I hope they pass a law where politicians can't trade.
Yeah.
If they trade, they should not be able to propose policy changes that will affect their stocks.
Mm-hmm.
All right, buddy. Yeah, the congressman of South Carolina introduced a new piece of legislation yesterday. It's called the Cost Act. It's going to help spread transparency on government spending. Just at the end of the day, if you're a public servant that can change the law, you should not be able to buy and sell stocks. Your laws could really affect corporations. Capitalism is about the free market picking winners and losers, not government officials.
Amen.
Yeah, amen to that, yeah.
Makes it kind of interesting how they all become millionaires after being on the hill for a year.
We got that super. We got a super like. I gotta do something. Hit that like button. Diamond hands for GME. Hit that like button.
Yeah.
I have a GameStop song. GameStop's like my morning wood. Yes, it goes up. But by 12 o'clock it goes down, and then I'm upset. Boom, GameStop. But in the aftermarket, back again for more action.
I don't think I've ever heard anybody change keys 3 times in 2.5 bars.
I would liquidate my whole portfolio if I could magically become good at singing. Here's what a singing instructor told me one time. He said that he thinks I'm too old to stretch my vocals and that I would never be able to sing. Even with auto-tune, it's very hard. Auto-tune, I could spend hours and it still sounds like garbage. Miko can sing though. I can write it and Miko could sing it.
That's true.
Alright, Miko, here how it goes. So the words are, my morning wood goes up like GameStop, but by 12 o'clock it plops. Back in the after hours, ready for power hour, GameStop to the top.
Send it to me on DM so I can practice it for a second, see how to sing it.
Okay, I'll write it up. And here goes another thing you guys can practice saying. How much wood could Kathy Wood chuck if Kathy Wood could chuck wood? Type it in YouTube chat. You guys try to say that. How much wood could Kathy Wood chuck if Kathy Wood could chuck wood?
Apparently, she can only chuck wood until 12 o'clock.
Can any of you guys say that really fast? I know Kathy's a little bit upset about this hearing. She's probably going to go live tonight as well on Chatterbait.
Yeah, it's hard to say that. How much wood could Kathy Woodchuck if Kathy Woodchuck could chuck wood? Ah, dang, I messed it up.
Hit that subscribe button if you're not afraid of your portfolio crashing today. You know AOC needs to do Chatterbait also. She's already almost crashed Twitch platform just setting up her microphone for 30 minutes. Yep. People on Chatterbait upset when I stream about stocks on there. Only people on YouTube like this stock stuff. On Twitch, you get banned for talking about stocks.
Tame, I was checking out this decentralized YouTube crypto called Theta, and they pay you in cryptocurrency for broadcasting. Maybe something you should check out.
That sounds pretty cool. There's an Asian site I broadcast on too at nighttime. It's pretty cool. What is POF, Shaolin Kid? What's that acronym for?
Payment order flow. No.
Okay, I thought it was Plenty of Fish, the dating website. Okay, thank God.
I thought it was piece of fudge.
I don't think they're gonna ban payment of order flow.
They're trying to. That's what the discussion is right now. I mean, at least there's people out there who are against it.
They'll just be less transparent about it.
Yeah, that makes sense.
Ape.
Is Keith Gill on this hearing or no?
I don't. I'm listening to them go. It's hilarious.
Says GameStop. Who wins and loses when short sellers, social media, and retail investors collide? Part 2 in recess. They're taking a 5-minute break.
She wants her there.
A beautiful heartbeat said so Nadler can change his pants.
Hey, is there somewhere else I can watch this review or whatever, because the volume on it is ass cheap.
Here, I'll give you the direct from the government website. All right, and I'm gonna be honest with you. A lot of them have microphones like you, and you can't hear them that well.
I'll talk about my mic, man.
They're not using industrial microphones. They're not using blue microphones. Some of them are using a cell phone microphone.
Yeah, I'm using my Dr. Dre Beats. That's what I've been using. So.
All right, just look in general chat. I put it straight from the government website. It's from the Committee of Financial Services. If you guys want to work there one day, it's a great job. Easy pay. What did you link in here, Mouse, about Coinbase listing? Is that Oh, he's the CEO and co-founder of Coinbase. Man, when people write a lot of stuff, it's just wow. Oh, they already filed a registration statement with the Securities and Exchange Commission. Okay, that's great. So they actually put pictures of themselves on Reddit, the CEO of Coinbase and the co-founder. It's in a general chat. Mouse posted a link if you guys want to go read that. And the struggle they're facing because of the SEC rules when it comes to trading crypto coin on their platform.
Yep, and Dean, I think it is. All of these alignments with the Fed having a thing today and the GME hearing, all of that is all sketch. Stimulus coming out today, sketch. Oh.
just telling you guys, be careful. If you invest that stimulus from your bank to Robinhood and it's unsettled funds and they use margin, and then your stock drops 40%, you get a margin call, you're just giving them free money. You're going to be very upset. Unemployment hasn't even changed that much recently. I don't know why Jerome Powell wants to give another press conference. Yeah, a lot of people stuck in Robinhood. They didn't want to liquidate. It would have been a way easier to liquidate money in your bank than money into another brokerage firm. There's no reason to stick in Robinhood if you have access to all these other great American brokerage firms with trillions of dollars. How long is this recess for the hearing? I thought it was
5 minutes.
Yeah, I thought it was 5 minutes. Time's going by slow. Why don't they turn on comments?
Well, Grandma took the gavel back, so things are going to slow down significantly here.
Oh, it's back. It's back up. My bad.
Actually reached an all-time high of 82, and the Dow Jones proceeded to crash by 26%. On January 28th, the day that we have now dedicated 2 full committee hearings towards, and with more planned in the coming months, the VIX was in the 30s. So while a change in the overall market barely even registered. So while a few stocks such as GameStop may have seen some historic individual metrics in January, none of these individual securities appear to have posed a systematic risk to the markets as a whole. So rather than pursuing radical changes to our capital market structure, we should be looking at the very tailored issue that prevented retail investors from placing trades on securities that day owned when they wanted to. So, Commissioner Pivovar, can you discuss your views about how changes to market structure should be done, and if it makes sense for Congress to step in now instead of waiting for the SEC study that issue and go through a thorough rule-making process with a cost-benefit analysis?
Question. Thank you, having served both on the staff of the Senate Banking Committee and also serving at the Senate Banking Committee and also serving at this commission, I feel like because markets and technologies change all the time, I believe the SEC is better positioned to look at these changes and put it through their cost-benefit analysis. So the SEC is bound by statute, by a number of statutes, to take into account the costs and benefits of various alternatives that are out there, including the baseline scenario of what the existing situation is. So, for example, shortening the trade settlement cycle. The current situation is T+1, and they could evaluate that through the lens of cost-benefit analysis and say, well, what would be the relative costs and benefits of going or at T+2, what would be the relative costs and benefits of going to T+1 or T0, and explicitly look at those. Same thing in payment for order flow. They could look at likely effects. They can get the benefit from market participants, investors, academics, take all of that information in and adjust their regulations accordingly within the broad context of the federal securities laws. Now, that does not mean Congress doesn't have a role here. I think you all have a very important role here. To the extent that you think any of these market structure or market infrastructure policy changes should be prioritized by the commission, I believe that would be an important role for this committee to try to come together and find consensus on what are the 2, 3, 4 most important areas for the SEC to focus on, because as you know, you've given them a broad mission with broad authority, sometimes for prioritizing those.
Okay, thank you for that.
So
Secondly,
you want to find out what happened with
any American to be able to put some of their hard-earned paychecks in the stock market and have the same ability to succeed as any large institutional investor. Unfortunately, many Americans believe that the system will always be rigged against them, and they have no way to compete against the big players after watching this situation play out. Whether that view is warranted or not, we need to be working to continue to empower the retail investors. So, Mr. Blogren, I know there has been a lot of conversations around access to market data. Can you talk about the New York Stock Exchange and what it's doing to get better market data into the hands of the average American looking to make more informed investment decisions?
Thank you for the question, Congressman. NYSE publishes market data through the consolidated tape, which is an industry-wide utility, and also through proprietary market data products. All of these products are filed with the SEC, available broadly and according to a standard rate card. In general, the retail community consumes market data through the consolidated tape, which has largely kept prices steady for many years. The retail investor typically has their market data paid for by the broker, and it costs about $1 a month. Market data is now consolidated in a matter of about a dozen microseconds by NYSE and NASDAQ systems, and then rebroadcast to the retail community.
Thank you for that answer. And Mr. Chairman, I yield my time back.
Thank you. Mr. Lawson of Florida is recognized.
Okay, thank you, Mr. Chair, Madam Chair, and
GME at 224.
welcome all of the members to this panel today. And this question I have for the whole panel. Citadel Security reportedly handles almost as much trading volume as NASDAQ. Further, Citadel Security, along with the market maker Virtu Financial, account for more of the overall equity market than the New York Stock Exchange. With respect to Citadel, some have raised concerns about a single market maker managing such a large volume of retail order flow and what that means in terms of pricing. Others have questions whether Citadel have such dominance in the financial market that it poses a static risk, symmetric risk to our entire U.S. financial system. Can you all speak more on these concerns?
Hi, Congressman, if I may, this is Mike Pipavar, if I may, having been served as acting chairman and sat on Financial Stability Oversight Council and met with the other principals and the deputies who look through and look at sources of systemic risk. I don't have any concerns that Citadel market-making business poses any systemic risk to the system. And the reason for that is, even though they are a dominant player right now, we have to look at what would be the scenario if they failed. And the concerns that we have for systemic risk ultimately go to cascading failures. And what we really ultimately worry about is whether the banks fail because they're special. In the case of Citadel Securities, if their market-making function were to cease, let's say tomorrow, what would we see? Well, we see that there's an incredible amount of competition within that industry among market makers. And so we see that those market makers would come in and compete very quickly to capture that market share. And due to technology, they'd be able to scale up very quickly at low cost in order to do that. So I don't see any systemic problem with the Citadel size.
Congressman Lawson, may I offer a differing view?
Yeah, go ahead.
I believe that there are a lot of questions about systemic risk of Citadel overall and Citadel Securities. One thing that's important to do is look back a decade. Citadel Securities actually tried to become an investment bank in 2008. And one of the things that reporters and analysts said at the time is they had certain regulatory advantages over the large US banks because as a hedge fund and a market maker, they are not overseen by the Federal Reserve. And so there was no one looking at the holistic risk across all of Citadel's firms. And they gave up on their dream of becoming an investment bank in 2011, and they shifted to retail trading, which people on Wall Street widely see as, easier to profit from, quite frankly. Whether that's right or wrong, that is the perception on Wall Street. And Mr. Griffin, the CEO of Citadel, said in his written testimony to this committee that when no one else was able to provide liquidity, Citadel was there. And he has really talked up their dominance in the marketplace. And so I don't know that it is an open and shut case. I do think that there are risks of interconnection. I think there are questions about liquidity, and I do think that the FSOC should investigate it.
Well, Mr. Lawson,
I would like to add that as a market participant, I see the market makers as highly competitive and there's excess capacity. And I think the removal of Citadel, even though the largest, would have very little impact as someone looking to execute in the financial markets. And also liquidity is not a point in time, it's a continuum. And so when Citadel makes statements like they were the only ones there, perhaps they were the only ones there at the very, very best price, but an incrementally worse price was available from other market makers. So I would concur with Mr. Pivovar that my judgment is that the impact of Citadel stopping trading tomorrow would be minimal to the execution quality we receive.
I don't think there's any circumstance under which Citadel Securities is not a systemically significant firm and FSOC should investigate it. In addition, the SEC should not exclude companies like Citadel from Regulation SCI, which is supposed to have resilient infrastructure. And the SEC inexplicably excluded broker-dealers like Citadel from that regulation and those requirements. So there's a risk on the infrastructure side, and there's a risk on the systemic institution side. For anybody to say, if Citadel shut down today, even for a day, that means 26% of all U.S. equities volume in 8,900 listed securities would stop. It executes 47% of all U.S. listed retail volume. It represents 99% of the traded volume of 3,000 listed options. To say that the system would work perfectly fine if all that evaporated today and competitors come into the market, that may ultimately happen, but until it ultimately happens, you're going to have a systemic event. And to deny that is to deny reality.
Thank you. The gentleman's time has expired. I now happily read.
Did the stream just freeze for you guys too?
Yeah, it's
organizations interested in our tax system
it's
in
not just me.
opposition to the imposition of a financial transaction tax. And the second
He's
letter is
stuck.
dated March 17th from the Security Traders Association, also in opposition to a security.
All publicity is good publicity.
Without objection, such is the order.
Thank you, Madam Chair. This has been, as I said, such a very interesting discussion. I really appreciate the extensive discussion we had on securities lending.
Trying to be
I think the
optimistic.
committee took away good information there that we can ask the commission to follow up on. And I think we've had a lot of discussion about best execution and the obligations under best execution, that it is a mandate on the part of all
Sitting here
market
looking at Mr.
participants,
Dennis's face.
and that the SEC and their
Spitting thing.
exam process in this current period will be looking.
Internet connection just crashed.
At that as a special exam focus. Those are helpful points. Dr. Pivovar, there were a couple of points made I thought I'd get your comments on. Mr. Sherman asked about the ultimate cost, of course, in a retail trade is the spread between the bid and the ask. There's no doubt about that in a non-commission world. So I would say, does the competition among market makers under payment for order flow or not really improve that spread and thus lower the cost to retail investors?
Thank you, Congressman, for that question. We do have some insight into that. So as some people have mentioned, there is some transparency on this issue. So the SEC requires each of the market makers to file execution quality report in the language of the SEC Rule 605 report. And so we can see, for example, for Citadel is the one that comes up. We can see for them or whatever any other market maker has to put out
Mr. Dennis's
and we can
almost
look at
sneezing face.
things like the speed of execution, various order type, and what's called price improvement for those various order types. So we can actually see measured against the national best bidder offer whether in fact they're offering net price improvement, whether they're executing at the spread or whether they're executing outside the spread.
Yeah, that's helpful. And also, Mr. Sherman talked about the lit market, those quotes that go across an exchange. But as noted by our friend from the New York Stock Exchange this morning, all quotes are presented at retail in milliseconds, whether they took place off the exchange or on the exchange. Is that correct?
That's correct.
Yeah, thank you. I also was concerned, my friend Mr. Green from Texas made some comments about Citadel, and we had obviously some discussion just a moment ago about Citadel Securities. And I was curious as to your views about the separation of businesses owned by Citadel. So Mr. Green's allocation, I don't want to put words in his mouth, is that somehow Citadel could use the information that they garner from being a market maker, payment for order flow, understanding the stop loss position in a number of names, and somehow trade on that information over at Citadel's hedge fund. I found that shocking. That's against the law, is it not, Dr. Pivovar?
Absolutely, it's against the law. The SEC has put in place a number of restrictions, and so effectively, the hedge fund and securities market making divisions at Citadel have to operate separately. The SEC regularly examines to make sure that those that they've put in place proper protections in there, and if they find that any firm is violating those, they will vigorously enforce them.
Yeah, thank you. Mr. Gruchik, I really appreciate your testimony. I really enjoyed learning about your company today. We had a lot of discussion about the sales practices of Robinhood in the previous hearing. Quickly, could you address your policies on low dollar stocks, not penny stocks, but even if they're exchange listed, what your position is there and how you qualify your investors for either options or margin on your platform?
So we don't yet offer options on our platform. I have a lot of experience trading options, and we're thinking through how to best do that. We've taken note of the issues that have occurred at Robinhood and in general with retail investors accessing options markets.
Thank you, Madam Chair. I may submit some additional questions for the record. I want to thank the panel for their participation, and I yield back.
Thank you. The gentlewoman from Iowa, Ms. Axney, is now recognized for 5 minutes.
Thank you, Chairwoman, and thank you, witnesses, for being here today. My husband and I have a digital design firm, so one of the areas that I've been focused on in regard to this is some of the newer brokers having designed their platforms and how they've done that. Dr. Bogan, you've done some tremendous research in behavioral finance. Just a real quick question to start. Can app design influence what decisions people using that app make?
Thank you for the question. Absolutely. App design and the way the platform is designed and the user interface can influence the type of decision that a retail investor makes almost on an unconscious level. And so I want to make a clear point. There is a difference between, retail investor access, which is great and provided by the apps, retail investor environment, which kind of is ease of use, and retail investor manipulation, in that there are certain behavioral science techniques that are used to trigger investors to behave in a particular way that may not be in their best interest.
Well, and so that's why Robinhood has behavioral researchers, correct?
Well, I can't speak to why they have behavioral researchers, but I can say that some of the features of their platform have been shown in research to elicit particular behaviors like more trading. For example, they have a list of kind of the most popularly traded stocks. That brings attention to particular types of stocks. And we know from the research that just having attention to particular stocks increases trading in those stocks, whether or not it's in the best interest of the investor to do so.
So as you mentioned there, it increases trading. And do you think that encourages savings and investment, or do you think that just encourages a greater tendency towards more trades?
Yeah, so there's a difference between investment and trading. And so just trading multiple times a day for trading's sake, the research is very clear that that is never in the best interest of a household. Buy and hold is the conventional wisdom, and so buying is fine, but this multiple trading and churning portfolios has never been shown to be beneficial to a retail investor.
Well, I appreciate that. I'm especially concerned about this given the fact that Robinhood's incentives are so heavily weighted on making sure that their users trade more, because that's what puts money in their pocket. Mr. Arnook, Robinhood has said that if its payment from market makers like Citadel is based on a percentage of bid-ask spread, can you explain why that's different from other firms and how that incentivizes Robinhood to have their users trade wider stocks or even riskier products like options?
Thank you for the question. I really appreciate it. First thing we should notice is that 92% of Robinhood users' trades are outside of the S&P 500. which is to say that they're in stocks where the spreads are 5 times as wide as they are for the S&P 500. These are widespread stocks. At some point in late 2019, Robinhood understood this and renegotiated the way they collect payment for order flow from the other market makers. It's always been a fixed mill per share. In other words, 15 mils per share or 20 mils per share. That's how it's always been done. But presumably because Robinhood noticed the trading patterns of its users, they negotiated to instead receive a percentage of the spread. So this is an amazing misalignment of interests. The Robinhood trader wants the stocks they trade to have the smallest spread as possible. The market maker who's buying the orders wants the spreads to be as wide as possible. And Robinhood, their agent, the broker, wants their spreads to be as wide as possible. I think that's fantastic in a negative way.
So Massachusetts found that 68% of Robinhood's options approved users in the state had limited or no user experience. When you talk about this, the options and the risk of the spread there, what do you think is going to be the outcome for 99% of these users who don't have the experience in getting into this type of market?
It's going to be unfavorable. And in the end, if you look at the average account size across different retail trading platforms, the average account size at, E-Trade may be 250,000. At TD Ameritrade, it's 150,000 or 110,000. And Robinhood, it's 5,000. And they are outsized trading options. And while spreads in stocks are wide, yield back.
Thank you so much.
Thank you. The gentleman from New York, Mr. Zeldin, is now recognized for 5 minutes.
Thank you to the witnesses for being here, to Chairwoman Waters and Ranking Member McHenry for holding today's hearing. I represent the 1st Congressional District of New York, which encompasses much of Suffolk County on Long Island. My home district is full of people from all walks of life and industries, and having access to cost-efficient investing is crucial. Mr. Pivovar, a lot of my constituents were concerned with the inability to buy certain stocks when some broker-dealers placed limits on trading those stocks. And the main reason why this happened is because many broker-dealers had to post additional collateral to comply with capital requirements at clearinghouses. You have written about shortening the trade settlement period to both increase efficiency and lower the cost of investing. Can you speak a little bit more to how using technology to shorten the trade settlement period could benefit retail investors and limit the potential for broker-dealers to have to impose restrictions on certain trades?
Thank you, Congressman, for that question. Yes, the shorter the trade settlement cycle, couple things. One, investors get access to their cash sooner or their securities. And 2, the less margin that brokers have to post at the DTCC in order to guard against failures to deliver. And so it takes a number of risks out of the system. As I mentioned, counterparty risk, market risk, credit risk, and liquidity risk, as well as systemic risk of cascading list of failures. So shortening the settlement cycle would provide those benefits. Again, going to real time, it possibly increases operational risk to make sure everything works correctly. So what we need to do is find the right balance.
Thank you. It is also important that the data privacy for these investors is protected against any potential vulnerabilities. In the first hearing in this series back in February, I asked Ms. Schultz from the Cato Institute whether we should be concerned with companies with ties to the CCP investing in broker-dealers operating in the U.S. She responded that it is a potential national security concern and that the rules that the broker-dealers have to comply with regarding user data should be applied equally to broker-dealers, no matter whether the parent company is a U.S. or foreign company. I've been concerned for some time in general with the sharing of U.S. individual user data with the Chinese Communist Party. I sent a letter, for example, to the Treasury Department in October 2019, expressing concern with the potential sharing of U.S. user information by TikTok to its parent company ByteDance, and asked for a CFIUS review. Additionally, yesterday, I urged Treasury and Commerce to take immediate regulatory action against companies with ties to the CCP that have the capability to acquire Americans' biodata, specifically by sending letters to Treasury Secretary Yellen, urging her to direct CFIUS to reassess the Chinese company BGI's acquisition of Complete Genomics, and to Acting Secretary of Commerce Wynne Coggins, urging her to place all of BGI's subsidiaries on the department's entity list. Chinese companies are required by law to regulate online behavior that deviates from the political goals of the CCP, obey the CCP's censorship directives, and participate in China's espionage. These policies regulate companies like TikTok in the China market and increasingly their overseas business. I remain concerned that broker-dealer trading apps that are subsidiaries of Chinese companies with ties to the CCP, like Webull, which has significant investment from Xiaomi, have not received enough regulatory scrutiny and can pose data privacy concerns for U.S. retail investors. Mr. Pivovar, I think these issues are particularly timely to discuss in light of the upcoming U.S.-China meeting in Alaska. This isn't the first time Chinese investors have tried to buy into our capital markets. You were an SEC commissioner in 2018 when the commission rejected the proposed acquisition of the Chicago Stock Exchange by a Chinese-led group of investors. Can you speak a little to the concerns the SEC had at that time?
Yes, thank you, Congressman. Yeah, as you mentioned, there was a Chinese-led investor group that wanted to buy the Chicago Stock Exchange. It had passed CFIUS review, and it came to the commission. And under our statute, there are certain prohibitions and limitations in terms of ownership of the exchanges to make sure that we're protecting investors and that they're fulfilling all of their obligations. All we did was simply ask questions about who the investors were, who their investors were, and very quickly, some of those investors fell away. And in other cases, they were not able to provide us with answers that made us comfortable that they would in fact be able to fulfill their duties under the federal securities law. So that was the basis for us rejecting that application.
Thank you. I yield back.
Thank you. The gentleman from Illinois, Mr. Caston, is now recognized for 5 minutes.
Thank you, Madam Chair, and to all our witnesses. I want to echo what my friend Mr. Hill said. This has really been an exceptional hearing. I've been learning a ton. Mr. Arnick, you made a comment in your opening remarks that was really struck me, and I want to make sure I understood this right. If I scribbled it down right, you said spreads become narrower when Robinhood servers go down. That is a heck of a statement. That's causal. Can you just comment on? Can you explain that in a little bit more detail and whether, to the degree you have any confidence in whether that's a correlation or causality?
Thank you for the question, Congressman. When Robinhood would have a technology outage, those retail orders would not go to off-exchange venues and would come back to the exchanges. And when those orders came to the exchanges, not surprisingly, more order flow migrating to the exchanges would narrow spreads. So first of all, that meant that the retail investors who are trading through any other app are getting narrower spreads and better price improvement and an improved experience and less costs. But it also means that the rest of the market, the institutions, the pension funds, the mutual funds that really represent 90% of the long-term investors, they're able to interact with that order flow on the exchanges. And that order flow, for the same reasons that the market makers want to monopolize it just for themselves, when it's participating in a diverse environment on a public sunlit exchange, the best outcome accrues to everybody with those narrower spreads and less toxicity on the exchange.
That's really remarkable. And, as I'm sure you saw last month when Robinhood CEO Vlad Tenev testified before us, he said that Robinhood customers received more than $1 billion in price improvement in the first half of 2020. Can you just tell us briefly, is price improvement a proxy for best execution?
No, not at all. Thank you again. Price improvement is an arbitrary calculation. It's based on a construct that we created, the national best bid and offer. So it does not include odd lots. 50% of the orders and trades on the exchanges are odd lots. And the NBBO does not include those. And those odd lots are in between the spreads. It doesn't take into account hidden orders on the exchange. Exchanges have hidden midpoint orders. It doesn't take into account dark pool midpoint orders. So there's a whole mess of liquidity that demonstrate that the best available price is certainly not the NBBO. So to say that I price improve the NBBO by X, I don't care, 1 billion, 2 billion, 3 billion in aggregate, it rings false. It's not the truth.
Well, I want to then get to a more general question, and it's not just about Robinhood, but again, that's why we're here. As you mentioned in your exchange with Ms. Axney was really remarkable about the trajectory of Robinhood shifting from flat rates to a % of the spread payments for their payment for order flow. But in his testimony, Mr. Tenev not only acknowledged that point, but said that in their options market, this may be true in equities as well, but he said in their options business, they categorically do not route trades to anyone with whom they do not have a payment for order flow agreement. So without speaking to Robinhood generally, if you are a brokerage that is earning your revenue as a % of the spread, and you are only routing trades to people with whom you earn payment for order flow, is there any universe where that is consistent with actually fulfilling your best execution obligations?
I believe absolutely not. They have no mechanisms to trade directly on any of the numerous venues that exist to trade. Dark pools, exchanges, these cost money. And apparently Robinhood is more interested in the revenue side of their business model than actually incurring cost where they can fulfill their duties to seek best execution, the best prices everywhere.
Mr. Kelleher, with 30 seconds left, is there anything you'd like to add to anything that Mr. Arnick has said?
No, he's exactly right. I mean, frankly, the SEC should consider taking fraudulent action for people who claim price improvement off of NBBO because it's at best misleading, if not a fraudulent claim, and knowingly so.
Thank you, and I yield back.
Thank you. The gentleman from Georgia, Mr. Laudermilk, is now recognized for 5 minutes.
Well, thank you, Madam Chair. I appreciate all the witnesses being here. And I want to associate myself with Mr. Hill's comment earlier, which was regarding the content and the discussion that we've been having in these two hearings. I think it has been very informative. It's been very interesting content. And I think this is discussions that we should be having. Now, with that said, in the first hearing on this topic, I raised concerns about the fact that some of my colleagues on the other side of the aisle were using this situation with GameStop as an opportunity to push for more regulations, even before we had all the information in. Now, it's ironic because regulation is exactly what caused the trading with Robinhood in the first place. As I mentioned that, the chairwoman responded and said that no one is calling for more regulations at that time. But I had already known at the time that some had been asking for regulations. And obviously, we live in a political era to where a crisis can't go without using it to do something. And as we know, Elizabeth Warren and others are using this issue to demand a laundry list of new regulations on options trading, payment for order flow, short selling, even a devastating financial transaction tax that would require the average person to work 2.5 years longer before they can retire. Now, we all know in a free market system, which truly investing is within that free market, especially when you bring in the average consumer, they know that there is a risk involved. The greater the potential profit that you can make or the return, the greater the risk you're going to have. That's just a basis of the market and of any free market system. And so we have to be very cautious as we're going forward and trying to make a risk-free environment, but with high returns. It just doesn't work in that environment. In fact, I know of several people who had never been involved in the stock market, but they took their stimulus money. Several were working. They said, look, I don't need the stimulus money, but I know that eventually the government's going to tax it back from me. So I will at least start making some money. I can't make any money by investing in a savings account because interest rates are so low. Money markets are useless. So they've opened these these trading accounts, and they're actually using some of the stimulus money to invest, and they're concerned about some of what's going on. Now, these calls for more regulation, I think, are ill-advised and premature for multiple reasons. And witnesses at the first hearing said that markets are not broken, and the SEC chair and the SEC commissioners have said that core market infrastructure has been resilient through all of this. What's more, the SEC is looking into these events and so far has not indicated that there was market manipulation. Adding more regulations would now be like a judge handing down a sentence before any charges are actually filed. So my question, Mr. Pivovar, can you describe how options trading, payment for order flow, and short selling are already regulated by the SEC and other agencies?
Yes, no, they're highly regulated, right? So short selling, there's a number of requirements that I take them one at a time. Short selling, the SEC has done a number of things to prohibit what's called abusive short selling, the illegal short selling, things like naked short selling, not locating or borrowing the securities before short selling. So regulation SHO, which was passed in 2004, and putting on not only the obligations to make sure you deliver those shares, but actually putting on the penalties for those to the brokers themselves, not to the individuals. So it was an interesting way they dealt with that. And so the number of fails to deliver went way down. Now, again, that was 17 years ago. So was that a rule that the SEC should possibly revisit? Absolutely. They should be doing that, right? Options trading also is highly regulated by the SEC. There's a dedicated team within the Division of Trading and Markets that oversees just the options market. And the Division of Examinations and Enforcement team also have individuals that monitor for noncompliance in wrongdoing in those markets. And I apologize, was there a third one that you asked about?
It was the short selling and order flow and options.
Payment for order flow. Yeah, no, payment for order flow. That's another one where the SEC has regulations on that. We've talked extensively about the best execution obligations. Of course, they should revisit whether they're working well in here. Of course, they should revisit the transparency of payment for order flow. Some of the witnesses have talked about the fact that some of the measures of price improvement in the 605 statistics are not perfect. Rather than just throw them out and say we can't use them, I take a different approach. Why don't we make them more transparent, more useful for investors so that we can actually see how much price improvement is actually being given in the markets?
Well, my time is up. I'll submit the other questions for the record and I yield back.
Thank you very much. The gentlewoman from Massachusetts, Ms. Presley, is now recognized for 5 minutes.
Thank you, Madam Chair, for convening this hearing and all the witnesses for joining us here today. I represent the Massachusetts 7th Congressional District, and like all districts across the country, is reeling from the economic impacts of this pandemic. In Massachusetts, since February 2020, over 200,000 fewer people are employed. Children in 12% of households do not have enough food to eat, and many of the smallest businesses have permanently shuttered their doors. Research shows that following the 2008 recession, gambling and cheap lottery tickets increased among those who continued struggling financially. In this economic recovery, I'm concerned that Robinhood has positioned itself well to take advantage of this trend, but with much higher stakes for my lowest income constituents. Robinhood boasts that the platform is democratizing finance for the benefit of everyday Americans, positioning itself as the great equalizer of capitalism. Meanwhile, it's running targeted advertisements on social media that say, and I quote, "Millions of people will soon begin receiving stimulus checks. As you consider whether to spend, pay down debt, or save, we want you to be prepared." With a link back to their own blog, which says that, quote, "never investing at all is a missed opportunity." Many of my constituents now just have a $1,400 stimulus, or what I call survival check, in their bank account to get them through months of expenses, and are positioned to lose hundreds of thousands of dollars in options trading if they take that gamble. Ms. Goldstein, what do you make of these targeted advertisements under the guise of promoting financial literacy? Is Robinhood really increasing its own profits by attracting new users after many existing users left the platform due to the trading halt in GameStop?
Congresswoman, I have seen the same advertisements you are talking about. I keep getting them over and over again, in fact. And I do think that Robinhood, there was a survey that was done by Fortune in the wake of Robinhood freezing trading in GameStop and other meme stock names. And they found that some half of their users were considering leaving Robinhood for another brokerage in the wake of that. And so I absolutely think that Robinhood is looking to attract a new user base that hasn't previously perhaps participated in the financial markets to account for what I suspect is a large amount of users that they lost as a result of freezing trading in GameStop. And I should just flag that I disagree with the assessment that regulation is the reason that Robinhood froze trading, or that, the clearinghouse capital requirements is the reason. Most major brokerages have very serious, dedicated teams that evaluate the risk and the capital that they need to put forward every day. And I suspect it may be Robinhood's inability to manage its own risk and not any fault of any regulation.
Right. Well, look, providing an opportunity for people to make informed investments in part of their financial planning is not a bad thing. However, targeting the vulnerable Americans receiving federal relief during a pandemic certainly is. And this is not the solution to their hardship. Ms. Goldstein, Robinhood proposes that turning everyday Americans into day traders is democratizing finance. But you've written that the real solution to breaking the power of finance is to rebalance the recession-wracked economy. What does democratizing the economy really look like?
Congresswoman, I think it means that we need to rebalance our economy so that everybody isn't struggling or looking for the next gold rush scheme in order to pay their rent if they're facing eviction. I mean, I think you've been a real leader in this space, and so has the chairwoman, and so has Representative Adams and many others who have called on the president to cancel student debt through executive authority. I think there are a lot of different ways that we can tackle this problem. But I think one thing that we should think about, and you all as policymakers can think about, there's no way to save for retirement right now that doesn't give a cut to Wall Street. Unless you buy a savings bond or unless you are rich enough to purchase a municipal bond, we always have to give a cut to Wall Street if we want to save for our future. And 47% of Americans have no exposure whatsoever to the stock market. And so they're not going to be able to use Robinhood to try and, make some wealth for themselves. And I think we need to come up with other solutions in order to figure out how we can build wealth. And there are a lot of potential solutions for that. The American Rescue Plan is a part of it, but I think we need to do much more. And I thank you for your leadership on the resolution on canceling student debt.
Thank you. I have tons of ideas. Canceling student debt, federal job guarantee, baby bonds. One thing's for sure, we need to be investing in people and in jobs, and thinking about transformational, bold policies. And that's what I'll continue to push for, to close the wealth gap and to create opportunities in our communities. So thank you for being here today.
Thank you very much. The gentlelady yields back. The gentleman from West Virginia, Mr. Mooney, is now recognized for 5 minutes.
Thank you, Madam Chairwoman. In the aftermath of the market volatility in January, Acting Secretary of the SEC, Allison Herron-Lee, released a statement saying that the SEC would, quote, act to protect retail investors when the facts demonstrate abusive or manipulative trading activity that is prohibited by federal security laws. So my question is for Mr. Pivovar, will you discuss the types of fraud that are currently prohibited and detail the breadth of securities laws that govern manipulation and false statements?
Thank you, Congressman, for that. I'm not sure I can address all of them in 5 minutes, but I'll maybe give you an overview of some of them, right? So one is, you cannot trade on material non-public information in the breach of a fiduciary duty. So that would be insiders having information that they are using to disadvantage retail investors. You cannot engage in manipulative trading activity, and that can take the place of doing, for example, the typical pump and dump schemes, where people put out into the marketplace and the internet, wherever, false and misleading information that would paint a rosy picture of a particular company, trying to increase the share price after they've already bought the securities. So they pump up the securities and then dump their shares at the high price and leaving retail investors holding the bag afterwards. You cannot engage in other manipulative trading activity. In the case of very high frequent trading, you cannot do spoofing and those sorts of things to give the appearance that you're providing liquidity and pull that away in order to induce traders to trade in those sorts of things. So there's all kinds of different securities laws that protect investors. I will also note that the SEC's enforcement division has a specific enforcement group dedicated to market abuses, and it's one of actually the most effective and most productive enforcement teams at the SEC in rooting out these abuses. You're on mute, Congressman.
Sorry, quick follow-up, Mr. Pivar. You indicated in your testimony that you have confidence the SEC is well equipped to identify and act upon market manipulation as it relates to the GameStop case. Is that correct?
Absolutely correct. For the reason if one, they have the authority to do it, and two, they have an incredible enforcement staff, particularly the market abuse team is very good at looking at these. There's not only the enforcement staff in Washington, D.C., but also 10 different regional offices across the United States are looking into this.
All right. Well, I just want to say, listening to the interviews from some on the left, you might not realize that the SEC already has the tools to go after market manipulation. Instead, you would hear accusations from those from Senator Elizabeth Warren that our capital markets are rigged for the rich and powerful. If anything, GameStop case is an example of how lots of small retail investors can bet against a large hedge fund and win. It's not a rigged market, it's a free market. So when I hear some of the so-called solutions offered by my friends, my Democrat colleagues that they put forward, I'm reminded of the quote from the great Milton Friedman. Many people want the government to protect the consumer. A much more urgent problem is to protect the consumer from the government. So as we hear these proposals from Democrats on these panels, I think we should ask ourselves, will this actually help retail investors? A couple questions like, would really restricting or banning payment for order flow help retail investors that benefit from no commission trading? Would a financial transaction tax benefit the retail investors that would be forced to pay it? The answer to both those questions is no. So instead of using January's market volatility to advocate for new legislation, we should allow and protect investors from these attempted, going to fail so-called solutions that will do more harm than good. Thank you, Madam Chair, and I yield back.
Thank you. The gentleman from New York, Mr. Torres, is now recognized for 5 minutes. Is Mr. Torres on the platform? Not the Democrat. Not the Democrat.
Who?
Is Mr. Torres on the platform?
Alma?
If not, we're going to move to Ms. Adams. The gentlewoman from North Carolina is now recognized for 5 minutes.
Let's see. Thank you, Madam Chairman. Thank you very much. Thank you to all of the witnesses as well. Mr. Blagman, did the markets operate the way they were supposed to, or are there some fundamental vulnerabilities that have been exposed? From the vantage point of the stock exchanges, where, if any, are the existing weaknesses within the system?
Thank you very much for the question. I think as the SEC reported and as a number of the panelists have noted, the core market infrastructure operated very well. It was very resilient, it was very available. From the exchange's perspective, our job is really to do 4 things: ensure continuous price discovery, facilitate risk transfer, regulate our members' activity in the market according to exchange rules and securities laws, and then to ensure compliance of listed companies with their continued listing standard obligations. All of those functions operated well. However, it certainly is the case that the retail investor experience was uneven across retail brokerages. And it's the case that for a listed company like GameStop, you're left with a lot of confusion about how a modern market structure could result in your stock having such volatility in such a short period of time. So I think when we look at potential reforms for the marketplace, there are a couple relatively low-hanging fruits that we can focus on that would have significant benefit and reasonably low impact in terms of unintended consequence.
Okay, thank you, sir. Let me move on. Ms. Goldstein, I'd like to bring up the problematic use of forced arbitration by both financial institutions and tech companies. Section 921 of Dodd-Frank gives the SEC the authority to limit or restrict forced arbitration, which currently is overseen by FINRA. Should the SEC use its authority under Dodd-Frank Act to examine whether it makes sense to curtail forced arbitration for gamified investment companies?
Congresswoman Adams, thank you for the question. Absolutely, I do think the SEC should take a long overdue action to restore investor choice and make sure that we are prohibiting forced arbitration and prohibiting class action bans. There's a lot of talk in the discourse right now about cancel culture, but I like to think about forced arbitration as cancel culture for companies who try to cancel the victims of crimes by silencing them and putting them in arbitration and not letting them speak their voice in a court of law and tell their truth. They don't have a right to appeal, and it's the secretive process that, in my opinion, tries to cancel their own customers. So I absolutely think that the SEC should do whatever it can to restore investor choice and prohibit forced arbitration.
Well, thank you, ma'am. You believe that the current arbitration process works, or should SEC step in, exercise its authority under the Dodd-Frank Act when it comes to fintechs in particular?
Congresswoman, I think that arbitration can work for some people, but it is by no means a guarantee. And I don't think that companies should be forcing their customers into arbitration without having the choice of going to argue their case in a public court of law if they choose to do so. And so I think it should be up to the customer, and I don't think that companies should be forcing them into arbitration.
Thank you very much, Madam Chair. I yield back.
Thank you. Our chair is voting now and has asked me to take over and represent recognize Mr. Davidson of Ohio.
I thank Mr. Chairman. I thank you, and I thank our witnesses for your explanations. We're all reading through your comments and drawing our own conclusions. I don't know if we'll have moved any closer to consensus, but I hope that we'll look at some important work done about blockchain. So on the day of our first GameStop hearing, I sent a letter to the DTCC to request a status update on two of their internal projects, Project Ion and Project Whitney. These projects explore the potential future use of blockchain technology within our capital markets infrastructure. Last week, I received a response from them, and I'd just like to take a second to thank DTCC for their ongoing transparency with me and with my staff. And between their response and my letter and their February 24th white paper, I'm optimistic that we will find a solution to improve upon our current capital market infrastructure. I look forward to continuing our ongoing conversations with the issue and hope to expand that with colleagues. When you talk about market structure, Mr. Pivovar, you're clearly an expert on the cycle. And, as we talk about the clear feasibility of moving from T1 to from T2 to T1, even to T0, could you differentiate between, say, T0 and, same day settlement as an example versus real time, and basically focus on netting? Why is that something people focus on? And you could be the same day and do it real time, or you could be same day and do it in a netted effect. Could you explain that?
Yeah, thank you, Congressman. And I think some people refer to that same day, but allowing netting would be like T plus a half or something like that, as I think people are talking about it. Yeah, so what happens is, that you have multiple market participants bringing a number of transactions to the clearinghouse, and they could clear those on a gross basis, which means they have to clear every transaction that's there, and that would be hundreds of billions of dollars. But what the clearinghouse can do to improve the efficiency of doing this is to net some of these trades. So, for example, if you and I are two market participants, maybe we're algorithmic traders, and we have two orders that are of the same size and happen to be the same price, we could net those out and not even have to clear them. If I'm on one side and you're on the other, and there's ways to do partial netting and those things, and it induces a lot of great efficiencies to the system.
Yeah, thank you for that. And I understand some of those efficiencies, and it's similar to like a sweep account. There's no benefit beyond, the one day and in terms of intraday for a lot of things. But there are times where it does make a difference. One of the key things is custody, and part of the challenge is how do you prevent multiple claims to the same shares? As Mr. Perlmutter highlighted, clearly when you have that gap, you had people promising the same shares to multiple parties. And that's what you can clearly do with real time. Do you think you can get there if you settle for anything less than real time?
Well, it's a couple of points there. One is we talked about the rehypothecation situation in securities lending, and I think that's where I think there's consensus among the panel members here to getting greater transparency into that market and look at whether there's any regulatory actions that need to be taken there. In terms of T plus a half or T plus one, this is where the SEC should put this out for comment. There's competing costs and benefits on both sides of this. One issue that has not come up in this hearing that I've pointed out in my Wall Street Journal op-ed and in other places is that it's not only the SEC. Once you get to T1 or same day, the SEC can't do this alone. You also have to get the bank regulators involved because we need to make sure the cash gets there. And now you're bringing in bank regulated payment systems, ACH. Add to that, what about foreign currency transactions for cross-border trade? That has to be settled. So not something that is you can't overcome, but this is one where the SEC is going to have to coordinate with the bank regulators to make sure that all of these pieces fit together.
Yeah, I thank you for that. And I will say that the blockchain coupled with a payment system, smart contracts could settle all that without an intermediary. And I think that, at scale is the question, and we may be a ways out from that. I want to highlight just the SEC suspending trading for certain shares based off of essentially social media posts. So, you talk about stocks that are not paid much attention to with the democratic access to capital that's happening because of fintech, because of technology broadly, and because more people are looking at doing it. Essentially, the SEC is saying, well, we are going to intervene, and just because a stock gets more attention, we can suspend that. I think that's a dangerous thing for them to filter. Just because a stock starts getting attention, they're going to close off the market access. I wish I had time to explore this, but the ramifications for the SEC doing that are really big. It essentially says they're going to impose a value range, and when you deviate from that, it's a problem. So thanks, and I yield.
Now I yield 5 minutes to Ms. Tlaib of Michigan.
Thank you so much, Chairman, and thank you all so much for being here. Mr. Kaller, I want to, I know that earlier you had
I think her connection cut out.
testified about that our market
I can hear.
Yep, and the face is amazing.
Tlaib?
Yep.
Yeah, Tlaib is frozen.
Yep. It's a wonderful face.
That was my face this
It's
morning.
like, I'm shocked and scared.
The face we all made when we saw GameStop stopping pausing.
I think old buddy was about to touch a valid point where he said that it's wrong that y'all should try to shut down a stock just because it's getting more attention than another stock because of the internet. I wish we would let him finish
Ms.
that out.
Tlaib, so why don't you proceed?
The fact that no.
All right. Thank you so much, Chairman. I apologize for that, Mr. Kaler. So one of the things that I would like to hear from you, if you agree, yes or no, do you think the current regulation of private equity meets your standard of, quote, transparent, well-regulated, and policed? Yes or no?
Absolutely not.
Yeah. Is it true that private equity firms don't have to share data on their climate risks?
Correct.
How about how they treat their workers in their portfolio companies?
Not that I'm aware of.
Isn't it true they don't have to share data on whether they're promoting racial equity and diversity?
They do not. They're private companies. The disclosure is almost zero.
That's right. And even though they control more than like double the number of companies publicly traded on the US, I mean, it's double. It's 8,000 companies in the United States. So I thank you for that, Mr. Kaler. Ms. Goldstein, would you agree that private equity firms use this lack of transparency to shield themselves from harm they do to our workers and our communities?
Yes, Congresswoman, I agree.
So, Ms. Goldstein, we know that pension funds are some of the largest investors in private equity. That's where it impacts my residents, right? Many of my residents in my district are relying on their pensions to retire with human dignity. Aren't their retirements at a higher risk because we don't require private equity firms to make the same disclosures as publicly traded companies?
Congresswoman, yes, I think that's a risk with private equity. I think it's also a risk with hedge funds who also lack many of the disclosure standards that other types of firms have to submit. So yes, I would agree with you.
So I'm asking many of my colleagues, I think this is something that we can work together in a bipartisan way. And I'm really grateful for the committee to be focused on making public markets fairer and more transparent for retail investors. But we truly do owe it to our working people, our neighbors around the country, to hold private equity firms to the same standard, rather than allow them to continue looting businesses across the country. I thank you, Chairman, and I yield.
Thank you. I now recognize Mr. Budd from North Carolina.
Hey,
Thank
he's
you, Chair.
ready to represent somebody.
So this is the second committee hearing on this topic. And once again, I'm appalled by some of the comments I've heard from my colleagues on the other side of the aisle. The notion that retail investors are even referring to them as dumb money, I think it's absolutely insulting. Let's remember that retail investors are smart and they're a force to be reckoned with. And they're revolutionizing the market, and any legislative or regulatory changes to interfere with their ability to trade and have access, I think that would be an absolute tragedy. So, Commissioner Pivovar, do you believe that the SEC is well equipped to make value judgments as to what constitutes a good or a bad game-like feature? And in your opinion, do you believe that gamification is actually this grave systemic danger that my friends on the other side of the aisle make it to sound like?
Thank you, Congressman, for that question. In terms of the gamification that Robinhood is apparently using, I'm not a customer. I don't have the app, so I can't comment on that. Certainly, the SEC is well equipped to look at whether certain gamification features violate existing standards under the law, and they will prosecute accordingly to that. One point I will mention is that gamification as a term, as being used here very narrowly, is to point out that there are types of games that are out there, simulations that are very valid ways for people to learn. In fact, business schools, MBA programs are abandoning many of the traditional case method and lecture type classes and in encouraging the students to learn through gamification, simplification. Cybersecurity classes are being taught through gamification. You can't teach it out of a textbook and those sorts of things. So this is part of our society that's going forward. It's actually, it's obviously something the SEC has to look at, but to paint a broad brush and to say the gamification is necessarily bad or a systemic issue, I think would be too broad of a brush.
So, my opinion is this makes the SEC take their eye off the ball. Do you think the SEC should instead focus on the traditional role of determining when investment advice has been provided by a brokerage?
Yes, in fact, they're well equipped to do that, and they in fact just updated the regulations on that. The SEC just recently promulgated regulation best interest, which was on the broker-dealer side, what was the old suitability standard has now been enhanced to be called the regulation best interest. making it very close to the, if not higher than the fiduciary standard on the regulated investor side, or in the investment advisor side. And also the SEC doesn't do it alone. They also have FINRA, the self-regulatory organization, that has its standards and polices those standards.
Thank you. Commissioner, there's been a lot of attention given to the clearance and the settlement process. So in your former capacity as acting chairman of the SEC, you led the effort to move officially from T3 to T2. So following up on my friend and colleague from Ohio, I look at the blockchain and I see a potential avenue for innovation in this area. So is it possible for clearinghouses, in addition to real-time settlements on a blockchain, to coexist while pursuing something like T1 or T0?
Yes, I mean, I think there's a couple ways we could do this, right? So when we moved from 3 to 2, we put in the final rule that the SEC should continue to study and look at what the industry, enhancements were in terms of technologies to facilitate moving to one or real-time settlement. I think real-time is further off. And the question is, do they want to put all their eggs in one basket and try to pursue real-time, which could take a long time? Or the SEC could do a dual track approach, which is, let's look at potentially moving to T1 in the short term, but also signal to the industry that in the long term, they're thinking about moving to same-day settlement to the extent that that things like blockchain evolve to that point. And again, having to coordinate with the banking regulators to make sure that the cash actually gets there through the bank payment systems. Their systems are outdated too.
Thank you. So, as technology evolves, we still want to have the position that we are the financial envy of the world. The financial markets are the envy of the world. So what sort of regulatory requirements should the SEC update and review in order to remain and continue to grow in our strength?
Thank you, Congressman. I think as a general matter, the SEC should be in the habit of periodically reviewing all the rules. I think, to your point, in the markets in particular, because markets and technologies evolve so quickly, things like payment for order flow, things like transparency in that market, things like making the securities lending market more transparent are all fruitful areas for the SEC. And to your point, we are the envy of the world, but everybody's gunning for us. So we need to make sure that we maintain our leadership.
The time of the gentleman has expired. I now recognize Mr. Torres from New York.
Thank you, Mr. Chair. I have concerns that payment for order flow perversely incentivizes the highest payment for the broker rather than the best execution for the customer. There's a reason we call it payment for order flow. No one calls it best execution for order flow. My first question for Ms. Goldstein, should payment for order flow be permitted?
Congressman, thank you for the question. I always refer back to the 2016 SEC memo where they asked this question. I think that's one approach we could take. We could just outright prohibit it. Another thing the SEC could do would be to require the brokers to pass on the payments for order flows to their customers. And another approach could be requiring that customers be able to opt out, or I think there's multiple approaches that they could take, but I do think that we do need to do something. Yes.
So I'm concerned about the conflict of interest, but about a week ago, there was a hearing in the Senate. And according to Duke University School of Law professor Gina Fletcher, who testified at a Senate hearing, the racial gap in retail investing has been cut in half in 5 years. And so here's what I'm struggling with. How do we address the conflict of interest? How do we ban the worst of payment for order flow without losing the gains that appear to have been made in market access?
I mean, Congressman, I think it's a great question. I think we need to just ensure that the SEC can take all of the enforcement actions that it needs to take. I've been very enthusiastically listening to all of the Republican members in particular, giving the SEC lots of work to do. And I would encourage those members to make sure that the SEC is adequately funded so it can pursue all of these investigations into whether or not best execution is being upheld by brokerages and whether or not there are any particular conflicts of interest. And so I would encourage them to make sure that there are the right appropriations. And I think we just need to make sure that the markets are fair. And that doesn't just mean funding our agencies, but that means looking into whether there are regulatory blind spots. And I personally think that there is a big regulatory blind spot in hedge funds and in private equity funds. For example, we don't know what amount of stock hedge funds are shorting, because the Form PF that they have to disclose their positions on do not include shorts of stocks. And so I think we have a combination of, we need to make sure we are enforcing the law and have the resources to do it, but also make sure that, perhaps we need more legislation to address regulatory gaps. And then we won't have to choose between those two things that you outlined.
And I certainly support greater transparency. I have a question about brokers. The controversy surrounding the GameStop short squeeze arose from Robinhood's decision to restrict trading. Setting aside Robinhood for a moment, it seems to me that brokers in general have almost absolute power to restrict whatever retail trading it wants, whenever it wants. Should there be any legal limits on the ability of a broker to impose trading restrictions? Should we limit trading restrictions to conditions of market volatility? What are your thoughts on that?
Congressman, I think it's a good question for the committee to consider. I do think brokerages need to make sure that they don't go belly up. And I do think that, Robinhood in particular perhaps was facing a period where they didn't manage their own internal risk sufficiently. Perhaps they didn't predict what their capital requirements would need to be to the clearinghouse. And so I think that might have been a failure of their own business. But if the choice is between prohibiting trading in a stock that they might not be able to handle because perhaps they haven't managed their business well, or, just going under, I can understand that you might want to take the less drastic approach. So
I want to interject because my time is running out. I have a question about market makers. Suppose there were a company named Goliath with a market making arm and a trading arm. And suppose the market making arm collects vast quantities of real-time information about vast numbers of retail investments. Could the market making arm legally share that information with the trading arm?
No, they need to have a firewall between, if they have a prop trading desk and their market makers, there must be a firewall.
That's great. That's the extent of my question. So thank you.
Thank you very much. The gentleman from Tennessee, Mr. Kustoff, is now recognized for 5 minutes.
Thank you. I'd like to thank the chairwoman and the ranking member for convening today's hearing. I'd also like to thank all the witnesses this morning and this afternoon. Director Pivovar, if I could with you, I think one thing that, or at least I would think everybody could agree on, regardless of what side of the aisle you're on, is going back to GameStop to that day in late January. We don't want any investor or any trader being shut out, if you will, not being able to make a trade, to buy or to sell. When we had our hearing last month with GameStop, I talked and questioned the CEO about his arguments about the settlement time, T+2, T+3. What I got out of it is he essentially thought that if it were same day settlement or even T+1, that they may not have been in the situation that they were in, having to deny people access to their app. My first question to you is, would you agree if it were T+1 or same day settlement, would we have seen the scenario that we did in late January with GameStop?
Thank you, Congressman. I don't know the exact numbers, but I do know that if there was a shorter trade settlement cycle, Robinhood's margin calls would have been a lot less. Now, I don't know how much they would have been relative to their financial resources, but it would have been a lower likelihood, certainly. And if I may, there's a point that Ms. Goldstein is bringing up is that the situation was uneven across broker dealers here, right? So one of the things the SEC is looking at is not only what across the industry, whether the trade settlement cycle, but also whether or not Robinhood's risk management policies and compliance procedures were actually adequate, and that's something that they're looking at in here too. So I don't, when I say we should look at shorting the trade settlement cycle, it's not because of the particular performance of one broker. They happened to bring the issue up, and it's something that I felt very passionately about when I was at the commission and started a path on and continue to do that. But I don't think we should overlook the fact that we had different impacts across different brokers.
Thank you. I may have said CEO of GameStop. I did mean CEO of Robinhood, and I appreciate you interpreting that and correcting that. You went through this exercise when you were with the SEC and helped to lead the effort to to shorten the settlement time. Can you take the other side of the argument, if you would, and why would people advocate against going from T+2 to T+1? What are the arguments against that?
Sure. So one is cost, right? So the industry is going to have to incur some costs in order to do that. Now, what the SEC has to do is weigh those costs against the benefits from shortening the trade settlement cycle. Again, the benefits are you're lowering market liquidity, credit, and systemic risk in the system. Once you start approaching real time, you're actually increasing operational risk because everything has to work perfectly together at the same time. The cash has to get there, the securities have to get there. If you have foreign currency, settlement, that has to happen at the same time. And so the arguments are just based solely on a cost benefit framework. Now, 4 years ago, cost benefit analysis showed that T2 was the clear winner. 4 years have passed. We've got changes in technology. We've got changes in markets. It's time for them to reevaluate. And I wouldn't be surprised if T1 were the clear choice, but maybe not, right? That's why I believe the SEC should at least go through the exercise.
And if you were to project, let's assume that the SEC does make the decision to go to T+1, what's a realistic framework or time period?
Thank you, Congressman. Again, the SEC can't do this in isolation. Once you go down to 1, they're going to now have to get the bank regulators involved because you have to make sure that the cash payment systems align with the security settlement system. And that then, the SEC could put itself on a timeline, but you have to also, get all the bank regulators. So that's why I was advocating that Secretary Yellen should start a work stream at the Financial Stability Oversight Council, which is the coordinating body among all the regulators. And so using her power as chair of the FSOC, she can actually help shorten that that time period by getting the regulators to all row in the same direction.
Thank you, sir, and I yield back.
Dean is now recognized for 5 minutes. Is Ms. Dean on the platform? If not, we will move to Mr. Garcia. The gentleman from Illinois, Mr. Garcia, is now recognized for 5 minutes.
Thank you, Madam Chair and Ranking Member for the discussion today, and of course, all of our witnesses. Last month's GameStop hearing revealed a lot of different viewpoints about what happened, who's responsible, and what we can do we can do about it. As always, there are a lot of technical details, but when people in my neighborhood think about finance, they aren't thinking about these details. They're thinking about losing their house as many did in 2008. They think about the stock market at record highs during this pandemic while unemployment soars. In short, they think about a game rigged against them. And if you ask me, what happened to GameStop earlier this year proves them right. So some questions for a couple of our witnesses. Mr. Kelleher, people talk a lot about how retail trading is democratizing finance and helping the little guy. But from your testimony, it seems like the current system of retail trading does the opposite. It rewards huge firms that can handle lots of trades, and it rewards high frequency trading. Do you think that payment for order flow model of retail trading actually entrenches big players?
It does. And the fact that those big players have almost no disclosure obligations and very few regulations makes it even worse. And one thing that hasn't been brought up that is a major problem, which is the citadels of the world are a big part of the shadow banking system. There's a lack of transparency, there's a lack of regulation, there's a lack of oversight, there's a lack of accountability. All of that enables secret wealth extraction by the big dogs in finance, all at the expense of the retail investor and the retail trader. And that all needs to be looked at and changed. But the one thing we know for sure, and Sal talked about this earlier, the retail investor ends up getting time and time and time again the worst deal. That doesn't mean we're not in favor of more retail investors. We'd love to see more retail investors. We just think it should be a level playing field. We think they should be treated fairly, and they should, right now, they're discriminated against dramatically. They are in a terrible position and being picked off, and they shouldn't be. So we're not against democratization. What we're for is level playing field, transparency, accountability, and fairness. And that will increase confidence, and that will increase retail investors.
Thank you for that. Ms. Goldstein, in your testimony, you mentioned that GameStop incident revealed more than just volatile stock prices. You mentioned that the rise of retail trading and the dominance of certain hedge funds like Citadel could threaten the stability of our financial system. What do you think that regulators such as FSOC should do to keep the volatility that we saw in January from infecting our whole financial system? And what can Congress do to help our regulators do their job?
Thank you for the question, Congressman Garcia. I think there used to be a hedge fund working group at the FSOC that was shut down under the Trump administration. And before they created it, one of the things that they noted in a report was that there was no single regulator that had all the information that they needed to look at a complete risk profile of hedge funds. And so I think an easy thing for Secretary Yellen to do would be to restart the hedge fund working group to look at risks to the system that hedge funds possibly contribute. I also think that Citadel Securities is a particular thing that they should look at closely. I want to flag that almost 10 years ago, when Citadel tried to start an investment bank, there was a lot of reporting at the time that people were confused about how they were going to have success in investment banking because they were known as a business partner who charged their clients more than most funds did. And I feel like that reputation perhaps may have followed them into electronic trading. But Citadel has talked a lot about their importance in the marketplace. My question is, are they systemically important? Congressman, you, I think, have an important bill to make sure the FSOC has the tools that they need to identify systemic risks. And I think Congress should continue to ask the question, is there more legislation that's required to make sure that we do have the tools we need to identify systemic risks in the system? And I think the regulators should ask themselves the same question.
Thank you very much. And given that I have to run to vote, Madam Chair, I yield back.
Next, we will have Mr. Rose. You're recognized for 5 minutes.
Thank you, Madam Chair, and thank you to Ranking Member McHenry, and thanks to our witnesses for your testimony and participation today. 1 month later, the committee investigation is barely underway, and I view any policy proposals so far as premature. At the core of market regulation is transparency, providing investors information and giving them the opportunity to make informed choices. We should not be adding regulatory barriers to keep people from participating in our capital markets. Instead, we should be opening up our markets to everyday investors and providing them with the information and transparency to participate in an informed way. Despite the intense volume and exposures presented in the markets, the broader infrastructure of our financial markets has performed well. My concern, like those of many of my colleagues, is that forging ahead with new regulations or ideas like the financial transaction tax at this point would be harmful and have unforeseen consequences. Dr. Pivovar, you highlight the importance of a comprehensive economic analysis as part of the rulemaking process, as it allows us to evaluate trade-offs. I agree with you. Will you detail the implications of a knee-jerk reaction to the events that occurred in January?
Thank you, Congressman, for that question. Yeah, the SEC is well equipped to do economic analysis, and in fact is required by law to do so. When it comes to market structure issues, as I said in my written testimony, there are no solutions, there are only trade-offs. And the reason for that is multidimensional. One is that our market structure is very complicated. It's a consequence of dozens, if not hundreds, of decisions that have been made over the course of decades. And so any change in one area will necessarily have likely effects in another area. Now, that doesn't mean we shouldn't go forward and make changes. What that means is that when we do think about making changes, we need to think about what the likely effects are, what are the trade-offs, what are the costs, what are the benefits, what are the expected changes in behavior, and then evaluate all of those. Also, explicitly look at alternatives to the possibility that's there, right? So, for example, payment for order flow, right? We could look at the existing situation. One alternative is to ban it and look at that. And Ms. Goldstein has brought up a couple of other in-between steps in there, and explicitly look at all of those. And then based upon that analysis, you can do a reasoned, rational approach to come out with which of these is the best path forward.
So if we were to review and reform payment for order flow, Dr. Pivovar, what reforms do you think the SEC could implement to increase transparency for retail investors?
Thank you, Congressman. I think, as I mentioned, there's these things called 605 reports, which is just a fancy SEC rule on that. And they give a little bit of information in terms of execution quality for retail investors. And the SEC has revised them over time. And some of my fellow witnesses have pointed out some of the problems and holes in it. It doesn't, the national best bidder offer doesn't necessarily include all the odd lots, and there's some other things that we should do to that. And so I think that what the SEC should do is consider looking at those 605 reports that firms like Citadel have to do. And so we get a better sense of what the execution quality is, not just price improvement, but speed of execution. What is the real MBBO? Separately, there are different types of reports that firms like Robinhood have to do, which are called 606 reports. They're not very granular at all. And I think that we could do a lot to provide some more transparency into the 606 reports and the 605 reports, so that we can find out for particular customers at particular brokers that send their trades in particular stocks to particular wholesalers, how well are they doing? I think that would help shed a lot of light in terms of public transparency of best execution.
Thank you. In a challenging global economy, the strength of our capital markets is vital to long-term economic growth. Yet regulatory burdens and increasing amounts of red tape prevent small businesses from thriving and stifles American innovation. The advances we have seen over the last decade in technology have improved the way Americans and our businesses perform financial activities. Due to these advancements, we are seeing more investors who have historically been left out, active in the markets, and we should not stand in their way. And with that, Madam Chair, I yield back.
Thank you. The gentlewoman from Pennsylvania, Ms. Dean, is now recognized for 5 minutes.
Thank you, Chairwoman, and I thank all of our testifiers today shedding light on these important questions and issues. I'm thinking back, Madam Chairwoman, to our hearing a month ago. At that hearing, I questioned, and we all did, Mr. Tenev of Robinhood, and he acknowledged mistakes or failures by his company about actions that the company took to inform customers, but he struggled to tell us what he was acknowledging or what he was apologizing for. We did not receive a clear, direct answer about when and how customers were notified and whether customers had the ability to contact a customer service representative with any concerns about their positions and holdings. He was simply unable or unwilling to express what he was apologizing for. Ms. Goldstein, I've had the chance, my office has had the chance to discuss with you servicing failures in other industries. What failures, and I'm a former professor of English, I just want plain English here. What servicing failures or mistakes by Robinhood on January 28th would you observe?
Congresswoman, thank you for the question. I think that they probably, I don't have a crystal ball, right? I don't have insight, but I think they may have failed to manage their internal risk. My understanding anecdotally is that major brokerages typically have very large teams of people that model the capital requirements that they will likely need to give to their clearinghouse on any given day. I would be very curious to know how many employees at Robinhood were dedicated to that task. Was it 10? Was it 20? Was it 5? Was it zero? I also think that, at least historically, they have not done a great job of disclosing to their customers how they make their money, although I don't think, to speak to your question, that that was true on that day in January.
I'm wondering, what should we now consider new best practices or best practices going forward to avoid what we saw on January 28th?
Congresswoman, I think we need the regulators to do an investigation, get all the information. I think we need to make sure that there aren't data gaps. So one of the big questions I have is not what was the retail footprint, but what was the footprint of institutional players? And were institutional players exacerbating the volatility because they were watching what was happening on Reddit and deciding to go along for the ride and maybe make GameStop shoot up higher or come back down lower in the days that followed? And I think one of the questions that I have is, are there regulatory gaps in the reporting of what are called over-the-counter options, which are options that are not traded on exchanges, but are traded between big Wall Street players between themselves? And could that kind of trading, which is often counterbalanced or hedged with stock, have contributed to the volatility? And that's one of the questions that I have.
That's really interesting. Dr. Bogan, I know I have very limited time. Could you tackle the same question? What were the failures? And I'd also like to hear more about how do servicing practices nudge user behavior?
Well, I'll start with the last one first. I think when we think about these online brokers that use gamification, I think, just to be clear, access is a great thing for users to have, but developing techniques that push retail investors to trade a particular way or elicit particular behaviors that they is not beneficial for retail investors. And so some of the practices they have that have been mentioned that are encouraging trading behavior to the detriment of the investor are things like having lists of 100 popular stocks, which draw attention to particular stocks, which cause people to trade, even though it may or may not be in their best interest. There are push notifications, which elicit this kind of response of fear of missing out, which encourage people to trade because it's triggering a particular behavioral bias. Additionally, I know people have made a lot of talk about kind of the confetti and it looks like a game. That does make it fun, but it does belie the real risks that investors are taking on. Another important point, too, that I don't think has been brought up is that some of these investors are targeting kind of the younger market, which is great to encourage new people into the markets, but they're specifically targeting a segment that is less literate, less financially literate, according to every survey, and less likely to be sophisticated. And so I think those are concerns as well.
Certainly concerns. And real quickly, with the time remaining, Dr. Bogan, you talked about clear, concise disclosures about customer risk. Can you point to any best practice examples of those?
I'm sorry.
I yield back. I'll submit more questions.
Thank you. Thank you so very much. The gentleman from South Carolina, Mr. Timmons, is now recognized for 5 minutes.
Madam Chair and Ranking Member McHenry for convening this hearing today, and to our witnesses for their time and expertise. Since the first hearing in this series, I've continued to research and attempt to understand the root causes of trading halts for retail investors, the dynamics of trade settlement, and the other issues in this hearing. While these topics can be overly technical, it remains imperative that our financial markets continue to function effectively while not limiting the increased market participation of investors of all income levels. We also should not rush to any rash decisions that could have unintended consequences further down the line. My first question is for Mr. Powell. As you've stated, you were involved in the transition from settlement going from T3 to T2. In your opinion, what roadblocks will market makers and participants face in the transition from T2 to T1, and do you believe that this can be achieved earlier than the initial timeline?
Thank you, Congressman. I don't think there are any roadblocks from the market participant side. In fact, when we went from T3 to T2, we worked very closely there was an industry coalition that came together called the T2 Coalition that was buy side, sell side. exchanges, the clearing agencies, also even a group representing retail investors. And what they did was they were able to tell us what a reasonable timeline was for all of them across the industry. And so I think similarly, they could, start that group again, call themselves the T1 Coalition, and talk about particular challenges. One of the things I will note that 4 years ago we went through this, the big challenge of 2 versus 1 was that with few exceptions, going from 3 to 2 was just taking existing back office processes, which are very complicated, and for many of the firms, were just effectively speeding those up. They didn't have to retool and set up new systems. Once you start going to 1 or 0, the costs go up because you're going to have to retool some of the systems. Now, the benefits may outweigh those costs, and so that's what the SEC should go through from a public policy perspective and look at those. But I wouldn't say those are roadblocks, but those are the challenges that they would face.
Sure, thank you. And do you believe this can be done by the industry without any government or limited government involvement beyond cheerleading the effort?
The SEC has to make it real. So the industry, when they came to us and said, could you please make this real? And here's why, right? So yes, they could do it, but what would happen is it's a collective action problem. If you get one holdout or a couple holdouts, then you can't do it as a voluntary effort. So what they did was they did a lot of the work in terms of how they were going to get it done. They went out and got third-party costs and did timeframes and all this sort of stuff. So this is the one thing I think government can be very helpful in doing, is solving the collective action problem, and then explicitly looking through the costs and benefits. The other thing I will note, as I've mentioned before, is the SEC can't do this alone. Once you go to 1 or 0, because you have to get the bank regulators involved to make sure that the bank payment systems, the cash gets there too. So it's a little bit more difficult going to 1 or 0 than it is going to 2.
Sure. Thank you. Mr. Grujic, what would be the trade-offs if we were to eliminate the accredited investor standard?
There's an obvious benefit to allowing more investors to access private markets. And as I previously said, I think this is a very important part of where investors should put their money. So there's a lot of benefits. On the side of concern about education and understanding, we'd have to see where we want to land on those if we want to, explore whether exploring qualifications as a substitute for wealth in terms of access is appropriate. I think we have to, I just want to say, I think we have to take the lessons of history. About 20 years ago, when we talked about ECNs and the fragmentation of the dominant few market exchanges, there were these sorts of similar concerns. What we wound up with is a far better marketplace. We had to enact regulations to solve the issues of fragmentation, but where we landed was something much better. The post-ECN world is vastly better than what it was before. But we should take the same approach here now with private markets, with PFOF, with gamification, where we recognize that innovation is good, and innovation and regulation are yin and yang. And so when you look at gamification, building habits like regular savings, regularly looking at education, rewards for things that are healthy are clearly good. How to regulate that is challenging, but that's our natural path forward. We should open up the private markets. We should open up gamification in healthy ways. We should innovate and regulate in lockstep.
Thank you very much.
Thank you for that answer. I yield back to the chair. Thank you.
Thank you. The gentleman from Massachusetts, Mr. Auchincloss, is now recognized for 5 minutes. Is Mr. Auchincloss on the platform? If not, the gentleman from Guam, Mr. San Nicolas, is now recognized for 5 minutes. If not, the gentleman from Indiana, Mr. Hollingsworth, is now recognized for 5 minutes.
Well, good afternoon, and I appreciate all of our witnesses being here today, and certainly appreciate the dialogue that we've had. I've touched on this several times in previous hearings, but wanted to touch on it yet again. Again, none of my comments should be construed as being in favor of or opposed to dark pools or lit trading or exchanges. I certainly believe in an even playing field where all competitors can compete for flow. But I wanted to really specifically dial in on some of this. Can you hear me?
Yes, I can hear you.
Okay, great. Sorry, I think it cut out there for a second. Sorry about that.
Sorry.
Mr. Blaugrund, you mentioned in your testimony that 30% of market volume is artificially constrained by this penny-wide regulatory requirement, end quote, on exchanges. Can you expand on that a little bit? What are some examples of how tick size restrictions can affect liquidity in the nearly 8,000 stocks that trade above $1?
Thank you very much for the question. As I mentioned in the testimony, there are effectively two regimes functioning in parallel. On exchange, there's a rule called Rule 612 that requires that exchanges accept and display orders only in penny increments and stocks priced above $1.
Right, and this doesn't apply in dark pools, correct?
Correct. Off exchange, they can trade it at 1/100th of a cent increments.
Correct.
The implication is that price discovery, particularly in very active low price names, should occur within that penny wide spread. As a result, public investors on exchanges are restricted. They can only narrow the spread to 1 cent wide, when in fact there might be millions of shares that trade in some of these names in that sub-penny increment. As a result, if you haven't been invited into that particular dark pool or single dealer platform, that liquidity is simply inaccessible.
Right, and there's some implications here for both price discovery, as you said, right? The ability for investors to be able to trade inside that increment, but also challenges from a competitive footing between the two. Can you talk a little bit about how volumes might be shifting to dark pools versus exchanges on account of the current disparity in regulatory regime?
Yeah, thanks for the question. So as a number of the panelists have noted, in aggregate, on-exchange trading is now its lowest proportion of the overall market than it's ever been. And there were some days at the end of last year where actually most trading happened in the dark. In retail names, and particularly in these lower priced, very active securities, 60, 70, sometimes 80% of trading activity will occur off exchange in sort of private pools. So I think there's a real public interest in trying to ensure that, one, the price discovery process is efficient, which goes to the questions we've been discussing previously about having good benchmarks for measuring things like price improvement, and also to encourage the broadest set of investors possible to compete and offer one another the opportunity to interact with their liquidity.
Now, certainly there's been an abundance of evidence that's shown the amount of savings retail investors are achieving by virtue of payment for order flow and other market makers that might lead to dark pools. However, there might be some hidden costs associated with the increase in volume on dark pools versus exchanges in price discovery or price movement. Can you talk a little bit about that?
I think you have two different regulatory regimes. You have a regime with dark pools, which doesn't have a fair access requirement, allows for privately negotiated commercial terms, allows for a customer accommodation should there be some sort of dispute, and generally doesn't have any sort of Reg SCI or sort of stability regulation. We're not asking for those regulatory burdens to be shifted to dark pools as well. We're simply hoping for a level playing field and let the public investors who participate on exchanges trade at the same price points.
And it certainly stands to reason that retail investors and investors writ large would benefit from a competitive platform that was agnostic between players.
Correct. To the extent that there's another public investor that's going to offer a more competitive price, that accrues to the benefit of the end investor.
Thank you very much. The gentleman from Guam, Mr. San Nicolas, is now recognized for 5 minutes.
Thank you, Madam Chairwoman, and thank you to our witnesses for being here today. This hearing has been very, very informative. and your background and expertise are very well noted, and I am absolutely interested in considering policy options as a result. I wanted to circle back on the purpose of why we have markets. You know, I think we get so caught up on the trading aspect of it and the volatility of it. But really, Mr. Kelleher, you I think in your opening statements really captured the fact that markets exist for us to be able to grow our commerce, grow our private sector, and it's supposed to be providing environments for those kind of activities to take place. And when I dug deeper into the whole GameStop trade that kind of precipitated all of these inquiries, one of the things that really jumped out at me was the fact that, at least on what I was able to find as a layperson, the information on the short interest on the GameStop stock was indicating that it was at 150%. And you know, that really just kind of jumped out at me for a number of reasons. And Mr. Blogren, your testimony about the opacity of short selling data really captured my attention as well. And I wanted to kind of tie it all together before I get into my questions by stating this. You know, when we have short selling in the market, it is intended to kind of be a balancing component. But when you have 150% of a stock's float short sold and the price compressed as a result of that, you're inhibiting businesses from being able to go out and raise equity at a higher price point. And so, Mr. Blogren, can you expand on your testimony on the opacity of the short selling that is going on and how that potentially could be inhibiting businesses from being able to go out and raise equity capital at a rate that would be more, I think, reflective of the fair market value of the stock?
Thank you very much for the question. With respect to raising capital, you're certainly right that if a stock price is depressed, then the cost of capital for the company would be higher than it would otherwise be. With respect to short positions, that data is now reported twice a month, and it certainly provides a lens into the relative activity, but it's really not actionable. It doesn't allow a market participant, whether they're hoping to borrow the stock or whether they're considering lending their securities, regulators or the issuers themselves, to understand if there is risk developing, if there is this potential for rehypothecation to introduce some significant problem. And so our view after discussing this issue with issuers and investors is that you really need to go one step upstream. You have to look at the securities lending market itself, which currently is relatively anachronistic. And there's an opportunity for the SEC to promulgate rules that they were directed to promulgate under the Dodd-Frank Act. So they have the authority today to bring transparency to this marketplace. And so we would urge that the SEC consider doing that as a high priority.
Mr. Kelleher, would you be interested in offering some comment on this discussion?
Yes, I agree that the upstream disclosure increase for the securities lending part of these activities needs to be addressed, either through legislation or through regulation. That's clear. But we also need increased disclosure of the short activity that we currently have, separate and apart from what we need for the securities lending. But for the short activity, we need greater disclosure on the timing and the frequency, or increased disclosure on timing and frequency of that disclosure. We need to expand the firms that are subject to the disclosure. It needs to cover hedge funds, broker-dealers, and everybody else engaged in those activities. And it has to expand to cover all the products that are being used. It's not just puts and calls. You've got equity derivatives, total return swaps, synthetic synthetic exposure of all sorts of ways. So multi-layered increased disclosure and transparency will benefit everybody in the market.
Thank you, Madam Chairwoman, and I yield back.
You're welcome. Mr. Stile is now recognized for 5 minutes.
Thank you, Madam Chair. I also look forward to the day where we can be back in person and not on Zoom. I know we've had some broadband issues here in the House. It'll be good to all be together soon. If I can dive in particular, as it relates to settlement times, Mr. Pivovar, you recently wrote an op-ed. We've talked about it a little bit here today, supporting a move to faster settlements. In the op-ed, you wrote that U.S. securities markets to really benefit from some of the technology and operational advances in back office administrative functions and a move to shorter settlement cycles. You oversaw the process of the SEC in particular from T3 to T2. And during that process, the commission looked at the possibility to move to T1. I know Warren Davidson earlier brought up the ability of blockchain of possibly being a solution. Can we look back a little bit, is in particular what's been changing since 2017 that may make the move to T1 settlement feasible as you kind of look at that broader picture?
Yeah, thank you, Congressman. One, just, technology costs decrease over time, and market participants, find greater efficiencies in their operations over time. There's new innovators in this space. There's new third-party providers that do a lot of things in the back office things. So that alone are changes, right? And you mentioned blockchain. So, 4 years ago when we were going through this, and we started the process 2 years before that, so between 4 and 6 years ago, the advocates of a real-time settlement, we would say, well, how do you get there? And they would say blockchain. And we would say, well, explain to us how exactly that happens. And they would just say the word blockchain louder. And so there was no, thought process exactly how this would. What's that?
So we have some of that in Congress that often occurs when people, with lack of depth, they'll just go louder. But keep going.
Yeah.
Sorry to cut you.
No comment. And what I learned in the regulatory process is if somebody explains something back to you louder and makes it imply that you don't understand what they're saying, it really means they don't understand what they're saying. So blockchain has a lot of progress, a promise to it. I really believe that it can be transformative in the future. We weren't there yet 4 years ago. Now, 4 years have passed, and there's been a lot of cool innovation in this space. Again, some people just say blockchain louder, but other people have actually come forth with some interesting ideas. So it's time for the SEC to talk to those people and understand how feasible it is.
So to build on this, what do you see going forward, or the biggest obstacles we have to overcome to get from where we are today to T1 if we look at it from the other direction?
Yeah, thank you. So again, I don't think they're really obstacles. I think the biggest challenge that we didn't have to face going to 2 is the coordination with the bank regulators. Again, the cash has to get there, not only the securities. And so I'm not an expert in this, but some of my colleagues at some of the other think tanks, for example, Aaron Klein at Brookings has written a lot about this, the antiquated bank payment systems. And he's been doing it in the context of the stimulus payments getting so slow to get out there. There's kind of a fight going on between the Fed and the industry as to who gets to control that payment system. I hope they sort of figure out that fight because, that's actually probably the biggest sticking point. And so that's why the SEC, shortening it even further, has to coordinate with the bank regulators.
Thank you very much. I know this is an important topic for both myself and my colleague, Anthony Gonzalez, as well. Shifting gears to Mr. Blogrund, if I can, for a minute. I think you really touched on the unequal footing between trades that are placed on and off exchanges. You commented, we've discussed a little about the limited price increments to a penny on the exchange. Could you just go back and highlight again what you think the attractiveness would be to on-exchange trades if this was adjusted?
Thank you very much for the question. The way exchanges and more specifically the investors who are trading on exchanges compete for order flow is they display their prices. And in so doing, they signal to the market their intent, they draw in counterparties, and the trade is consummated. If they're unable to display that interest at a competitive price, one, they don't get the trade, so they're discouraged from doing so in the first place. And two, the price discovery that ought to have occurred at that sort of intermediate price is impossible. So we think that by permitting a level playing field in terms of the price increments, a broader set of market participants will be encouraged to participate the price discovery process will be more robust. That will result in, equal or better outcomes for the retail investors today, and that there's, generally a public interest in having an efficient price discovery process. Right now, about 30% of all market volume occurs in securities that are pegged at 1 cent wide.
Thank you very much, Madam Chairwoman. I yield back.
Thank you. Mr. Auchincloss, it is now time for you to be recognized for 5 minutes.
Thank you, Madam Chair. I want to raise the issue of the wealth gap in this country as it relates to what we've seen over the last few months. The stock market overwhelmingly benefits higher income households, and for many middle income or lower income households, the interaction that they have with the stock market is through retirement accounts, pension plans. Only 10% of US households own 87% of all stocks in mutual funds. I don't think that's sustainable for us to have a form of capitalism that works for everybody. I want to tackle this question of wealth inequality from 2 angles. First, with a question for Dr. Bogan. We have seen, I think, in the last few months, examples of what does not work in terms of fintech and people's psychology. I raised in the last hearing my concerns about inducing people to trade options through a gamification on an app. But I would welcome, Dr. Bogan, thoughts from you about what types of gamification, what types of fintech actually promote healthy wealth building activities that are more inclusive of the American population.
Well, I think that, well, first of all, thank you for the question, Congressman. I appreciate it. And I think that it's important to make a distinction when we're talking about gamification between having a platform that is accessible for all households to participate in financial markets. And at the core, I think that that is a good and beneficial thing. What I think we need to carefully think about is the way people access those platforms and the user interface. I mean, we've talked a lot about the evolution of technology, and that's how people interface with financial markets, but the research on sort of behavioral cues has advanced quite a lot over the past decade. And there is a lot of information about how to set defaults and push people to use it for good and for bad. And I think where we need to take a careful look is at these user interfaces. I think access is great, but are the nudges and behavioral techniques being used for good or for bad and to manipulate customers in a particular way? I think that's a key area to investigate.
To be looking at, as Cass Sunstein would say, the nudge factor for default choices in terms of how people save.
Exactly right. Exactly right. And Richard Thaler does a lot of work with that too as well for retirement savings.
And the second question is for you, Mr. Blaugrund, and it's about IPOs, which might seem like they're not really related to fintech or to wealth inequality. But my concern is that over the last 20 to 25 years, IPOs have become more rare. And when we have less private companies going public, we have fewer Americans able to access the value creation that happens. And increasingly, we've got companies raising in the private markets for valuations that are astronomical by the standards of even the 1990s or early 2000s. And a lot of that value capture is happening for a smaller and smaller pool of investors. Can you talk about things that the New York Stock Exchange and other organizations are doing to make IPOs easier and to democratize the access to the wealth that's being created there?
Thank you for the question. It's a issue that we spend a ton of energy thinking about and trying to influence in a positive way. As you know, public companies are now larger and older when they have their IPO. And so we are keenly interested in trying to find more innovative ways to bring younger, faster growing companies to the public market. Two of the ways that have been introduced recently or have achieved more interest recently. The first is a direct listing. That is a mechanism that allows any investor to participate in the IPO-ish first trade in a way that democratizes access to the capital markets that we think is ultimately going to be and a very effective way for companies that are interested in issues of equality to participate in the market. The second is the growth in special purpose acquisition companies, or SPACs.
But Mr. Blog, I apologize for interrupting you, but our time is limited here. The SPACs are not, though, really going to democratize access to the value creation that's happening pre-IPO, because these are still private vessels, and the value is still being captured by a small number of investors in the know. I mean, you have to explain to me how that's going to democratize it.
I think there's more work to do, but SPACs offer, in some ways, a retail-oriented product that's offering exposures similar to private equity.
Thank you. The gentleman from Ohio, Mr. Gonzalez, is now recognized for 5 minutes.
Thank you, Madam Chair. Thank you for holding this hearing and for all our participants. This hearing is supposed to be about GameStop and Robinhood, and I thought it was supposed to be about preventing a halting in trading that we saw that day. It seems to have morphed into something completely different, where many of the ideas, unfortunately, that I'm hearing from my colleagues on the other side of the aisle would actually cut off access to the markets for retail investors. I spent a lot of time thinking about retail investors and how to give them more access, in particular, into the highest performing asset class net of fees, which is private equity. One idea, and this is for Mr. Pewar, that I've had is to provide that access through closed-end funds. What safeguards exist inside of closed-end funds that would help in this regard?
Thank you, Congressman, for that question. Closed-end funds are regulated much in the same way that mutual funds and other open-ended funds like ETFs are regulated by the SEC and are subject to the Investment Company and Investment Advisors Act. It's a well-established regulatory framework that's been around since 1940. I believe that private equity investments, private company investments are it's particularly appropriate to put them in the closed-end fund structure. The open-end funds, either mutual funds have daily redemption liquidity, or ETFs have almost instantaneous liquidity. These are less liquid assets, and so the closed-end fund structure, and in particular a subset of them, the interval funds, which allow for periodic redemptions rather than daily redemptions, would provide a nice vehicle for that with all the protections that we just talked about.
Thank you. And moving back to the T2 versus T1 debate. So, one of the reasons, or the reason why Robinhood had to restrict buys is because they didn't have the capital. We uncovered that last time. They didn't have the capital to make their deposit at the time it came in. And so they stopped the order flow. If we move from T2 to T1, what effect would that have had on the amount that would have been required at that time? It would have gone down, correct, Mr. Pewar?
That's correct. It certainly would have gone down. Now, I don't know the exact formula that DTC uses, but it is a function of the amount of days. So it certainly would have gone down. Would have been more than half or less than half? I don't know, but it would have gone down.
But all else being equal, Robinhood would have had a lower deposit number, and so in theory may not have been forced to halt the buy side, which again I thought was the point of this hearing. So hopefully we can coalesce around a T2 versus T1 debate. I'm in the T1 camp. Additionally, another way that they could have lowered the risk is if they had stronger capital requirements potentially. Do you have any thoughts on that? Because as you probably know, Schwab did not have to halt buy orders. Robinhood did, and they are under two different capital regimes and have two different business models. So I'm curious if you have any thoughts on the capital side of this requirement as well.
Yeah, thank you, Congressman. I believe Mr. Tenev testified that they met all of their SEC net capital requirements and were in compliance all that time. And so net capital requirements are one way that the SEC protects customers. The other is explicit customer protection rule, where they have to segregate the assets and the firms can't use them. The SEC's net capital requirements were established in the 1970s. They've been revised over time. One of the areas of concern for me is that those requirements aren't as transparent as they should be, particularly for new entrants. If you're an established entrant, you can hire broker-dealer lawyers who've been around for a long time and know the intricacies of this. And so I think one thing the SEC should look at I don't know whether we have the right levels or whether the right securities are given the proper haircuts and all those sort of things, but at least certainly make it more transparent so that new firms like Robinhood are know ahead of time what.
Good afternoon. I would like to start by noting that it has been a full year since the pandemic arrived with force on our shores. Looking back, it was clear that addressing a fast-moving global pandemic would be plainly and primarily the realm of healthcare providers and experts. And we are grateful to them and to all the essential workers for their service and sacrifice. The danger to the U.S. economy was also clear. Congress provided by far the fastest and largest response to any post-war economic downturn, offering fiscal support for households, businesses, healthcare providers, and state and local governments. Here at the Federal Reserve, we rapidly deployed our full range of tools to provide relief and stability, to ensure that the recovery will be as strong as possible, and to limit lasting damage to the economy. We are strongly committed to achieving the monetary policy goals that Congress has given us: maximum employment and price stability. The economic fallout has been real and widespread. But with the benefit of perspective, we can say that some of the very worst economic outcomes have been avoided by swift and forceful action from Congress, from across government, and in cities and towns across the country. More people held on to their jobs, more businesses kept their doors open, and more incomes were saved as a result of these swift and forceful policy actions. And while we welcome these positive developments, no one should be complacent. At the Fed, we will continue to provide the economy the support that it needs for as long as it takes. Today, the FOMC kept interest rates near zero and maintained our sizable asset purchases. These measures, along with our strong guidance on interest rates and on our balance sheet, will ensure that monetary policy will continue to deliver powerful support to the economy until the recovery is complete. The path of the economy continues to depend significantly on the course of the virus and the measures undertaken to control its spread. Since January, the number of new cases, hospitalizations, and deaths has fallen, and ongoing vaccinations offer hope for a return to more normal conditions later this year. In the meantime, continued observance of social distancing measures and wearing masks will help us reach that goal as soon as possible. The economic recovery remains uneven and far from complete, and the path ahead remains uncertain. Following the moderation in the pace of the recovery that began toward the end of last year, indicators of economic activity and employment have turned up recently, although the sectors of the economy most adversely affected by the resurgence of the virus and by greater social distancing remain weak. Household spending on goods has risen notably so far this year. In contrast, household spending on services remains low, especially in services that typically require people to gather closely, including travel and hospitality. The housing sector has more than fully recovered from the downturn, while business investment and manufacturing production have also picked up. The overall recovery in economic activity since last spring is due importantly to unprecedented fiscal and monetary policy actions, which have provided essential support to households, businesses, and communities. The recovery has progressed more quickly than generally expected, and forecasts from FOMC participants for economic growth this year have been revised up notably since our December summary of economic projections. In commenting on the stronger outlook, participants noted progress on vaccinations as well as recent fiscal policy. As with overall economic activity, conditions in the labor market have turned up recently. Employment rose by 379,000 in February, as the leisure and hospitality sector recouped about 2/3 of the jobs that were lost in December and January. Nonetheless, employment in this sector is more than 3 million below its level at the onset of the pandemic. For the economy as a whole, employment is 9.5 million below its pre-pandemic level. The unemployment rate remains elevated at 6.2% in February. This figure understates the shortfall in employment, particularly as participation in the labor market remains notably below pre-pandemic levels. Looking ahead, FOMC participants project the unemployment rate to continue to decline. The median projection is 4.5% at the end of this year and moves down to 3.5% by the end of 2023. The economic downturn has not fallen equally on all Americans, and those least able to shoulder the burden have been the hardest hit. In particular, the high level of joblessness has been especially severe for lower wage workers in the service sector and for African Americans and Hispanics. The economic dislocation has upended many lives and created great uncertainty about the future. Overall inflation remains below our 2% longer-run objective. Over the next few months, 12-month measures of inflation will move up as the very low readings from March and April of last year fall out of the calculation. Beyond these base effects, we could also see upward pressure on prices if spending rebounds quickly as the economy continues to reopen, particularly if supply bottlenecks limit how quickly production can respond in the near term. However, these one-time increases in prices are likely to have only transient effects on inflation. The median inflation projection of FOMC participants is 2.4% this year and declines to 2% next year before moving back up by the end of 2023. The Fed's response to this crisis has been guided by our mandate to promote maximum employment and stable prices for the American people, along with our responsibilities to promote the stability of the financial system. As we say in our statement on longer-run goals and monetary policy strategy, we view maximum employment as a broad-based and inclusive goal. Our ability to achieve maximum employment in the years ahead depends importantly on having longer-term inflation expectations well anchored at 2%. As the committee reiterated in today's policy statement, with inflation running persistently below 2%, we will aim to achieve inflation moderately above 2% for some time, so that inflation averages 2% over time and longer-term inflation expectations remain well anchored at 2%. We expect to maintain an accommodative stance of monetary policy until these employment and inflation outcomes are achieved. With regard to interest rates, we continue to expect it will be appropriate to maintain the current 0 to 1/4% target range for the federal funds rate until labor market conditions have reached levels consistent with the committee's assessment of maximum employment, and inflation has risen to 2% and is on track to moderately exceed 2% for some time. I would note that a transitory rise in inflation above 2%, as seems likely to occur this year, would not meet this standard. In addition, we will continue to increase our holdings of Treasury securities by at least $80 billion per month, and of agency mortgage-backed securities by at least $40 billion per month, until substantial further progress has been made toward our maximum employment and price stability goals. The increase in our balance sheet since last March has materially eased financial conditions and is providing substantial support to the economy. The economy is a long way from our employment and inflation goals, and it is likely to take some time for substantial further progress to be achieved. Our forward guidance for the federal funds rate, along with our balance sheet guidance, will ensure that the stance of monetary policy remains highly accommodative as the recovery progresses. Our guidance is outcome-based and ties the path of the federal funds rate and the balance sheet to progress toward reaching our employment and inflation goals. Overall, our interest rate and balance sheet tools are providing powerful support to the economy and will continue to do so. To conclude, we understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. We are committed to using our full range of tools to support the economy and to help assure that the recovery from this difficult period will be as robust as possible. Thank you. I look forward to your questions.
Howard from Reuters.
Hi, Chair Powell, and thanks for that. So could you talk us through how the forecasts for 2021 map into the substantial further progress definition? 2.4% inflation, I understand that's considered transitory. That still seems like some progress there. 4.5% unemployment. Is it time to start talking about tapering yet?
Not yet. As you pointed out, we've said that we would continue asset purchases at this pace until we see substantial further progress. And that's actual progress, not forecast progress. So, and that's a difference from our past approach. So, and what we mean by that is pretty straightforward. It is we'll want to see that that the labor market conditions have moved, have made substantial progress toward maximum employment, and inflation has made substantial progress toward the 2% goal. That's what we're going to want to see. Now, that obviously includes an element of judgment. And when we see, we'll be carefully looking ahead. We also understand that we will want to provide as much advance notice of any potential taper as possible. So when we see that we're on track, when we see actual data coming in that suggests that we're on track to perhaps achieve substantial further progress, then we'll say so. And we'll say so well in advance of any decision to actually taper.
If I could follow up on that, the shift in the dots, why wouldn't that suggest a weakening of the commitment here? An awful lot of people shifted into 2022, it seems.
Yeah, I don't see that at all. We have a range of perspectives on the committee. I welcome that, and we debate things, we discuss things, and we always come together around a solution. But the strong bulk of the committee is not showing a rate increase during this forecast period. And as data improve, as the outlook improves very significantly since the December meeting, you would expect forecasts to move up. It's probably not a surprise that some people would bring in their estimate of the appropriate time for liftoff. Nonetheless, the bulk of the committee, the largest part by far of the committee, doesn't show a rate increase during this period. And again, part of that is wanting to see actual data rather than just a forecast at this point. We do expect that we'll begin to make faster progress on both spending, labor markets and inflation as the year goes on because of the progress with the vaccines, because of the fiscal support that we're getting. We expect that to happen, but we'll have to see it first.
Great, thank you. Victoria.
Hi, Chair Powell. I wanted to ask about the supplementary leverage ratio. There's been a lot of talk about what you all are going to do this month, which I'm happy to hear an update if you have one. But just sort of more broadly, do you think long term that the leverage ratio poses problems for implementing monetary policy at a time when the reserve supply is going to remain large? And if so, do you think that changes to the leverage ratio, including the SLR, are the way to deal with that problem?
Victoria, we'll have something to announce on that in coming days, and I'm not going to expound upon your questions. Why don't you ask another question if you'd like to, because that one I'm just going to say that we're something in coming days.
Sure. Okay. Well, then I'll ask about unemployment. There's the unemployment rate is you all have projections for the U6 rate, but you've also been, really emphasizing the fact that that's not the only thing that you all are looking at. You're also looking at labor force participation and things like that. So are you all looking at ways of maybe adding to how you're projecting the unemployment rate to the summary of economic projections?
Well, let me say, as we say in our statement on longer run goals and monetary policy strategy, we look to a range of indicators on labor market. We never only looked at the unemployment rate, which is the only indicator of labor market outcomes that's in the SEP. We look at a very broad range. You hear us talk all the time about participation, about employment to population, which is the combination of the two, about different measures of unemployment. So it's wages, it's the job flows, it's all of those things they go into an assessment, disparities of various groups. All that goes into an assessment of maximum employment. The trying to incorporate all of that into the summary of economic projections would not be practical. Obviously the thing that we do include is just the unemployment rate, and that's a very insufficient statistic, so it doesn't include a lot of other things that we do look at. And I wouldn't want to say that we're looking to include the other dozen things that we look at into the SEP, but from time to time we do look at adding different things. But I would just say the SEP it's a summary. It's one device. It's not going to include all of the things that we look at. I think the things that we look at. We talk about them all the time. So we're not actually looking actively at significantly broadening those indicators in the SEP right now.
Thank you. Chris Rugaber, Associated Press.
Thank you. Chair Powell, I wanted to ask about the forecast overall. You're forecasting a very low unemployment rate next year, and in 2023, you have inflation, or the Fed overall is in the SEP forecasting inflation at or above 2% by 2023. Yet no rate hike in any of this forecast horizon. So is this telling us that to see a higher inflation rate than what's projected, or do you not, as you've been talking about, is the unemployment rate insufficient, or what is this telling us about the Fed's reaction function, that it seems you're meeting the Fed's dual mandate by 2023, yet again, no rate hike expected?
So I guess the first thing to say is that the SEP is not a committee forecast. It's not something we sit around and debate and discuss and approve and say this represents our reaction function as a committee. It's a compilation of projections from different people, and but since we don't debate it or discuss it, it would be hard for me to say exactly why each participant did what they were going to do. So all I would say about this is that we've laid out what I think is very clear guidance on liftoff. And it's really three things: labor market conditions that are consistent with our estimates of maximum employment. And as I mentioned, we consider a wide range of indicators in assessing labor market conditions, not just the unemployment rate. Inflation that has reached 2% and not just on a transitory basis, and inflation that's on track to run moderately above 2% for some time. The first two of those three are very much data-based. The third does have a little bit of an element of expectations in it. So we are very much determined to implement this guidance in a robust way. It is the guidance that we chose carefully to implement our new framework. And to meet these standards, we'll need to see data, as I mentioned. So what does this SEP really say? It says that we're committed to our framework and to the guidance we've provided to implement that framework. We will wait until the requirements set forth in that guidance are clearly met before considering a change in our policy rate. And the last thing I'll say is this. The state of the economy in 2 or 3 years is highly uncertain, and I wouldn't want to focus too much on the exact timing of a potential rate increase that far into the future. So that's how I would think about the SEP.
Thank you. Paul Kiernan.
Thank you, Chairman Powell. My question is twofold. One, how high are you comfortable letting inflation rise? There is some ambiguity in your new target, as you mentioned, expectations driven. And do you think that ambiguity might cause markets to price in a lower tolerance for inflation than the Fed actually has, thereby causing financial conditions to tighten prematurely? Is that a concern? Thanks.
So we've said we'd like to see inflation run moderately above 2% for some time. And we've resisted, basically, generally, the temptation to try to quantify that. Part of that just is talking about inflation is one thing. Actually having inflation run above 2% is the real thing. So over the years, we've talked about 2% inflation as a goal, but we haven't achieved it. So I would say we'd like to, perform. That's what we'd really like to do, is to get inflation moderately above 2%. I don't want to be too specific about what that means because I think it's hard to do that. And we haven't done it yet. When we're actually above 2%, we can do that. Look, I would say this. The fundamental change in our framework is that we're not going to act preemptively based on forecasts for the most part. And we're going to wait to see actual data. And I think it will take people time to adjust to that and to adjust to that new practice. And the only way we can really build the credibility of that is by doing it. So that's how I would think about that.
Thank you. Matthew Bosler.
Hi, Chair Powell. This is Matthew Bosler with Bloomberg News. So there's a widespread presumption at this point that the U.S. will reach herd immunity sometime this year. And all along, you've said that the path of the economy is going to be determined by the course of the virus. I'm curious, based on the projections that you released today that show unemployment will still be above estimates of maximum employment through the end of next year and perhaps sometime into 2023, do you think policymakers need to be doing more here to sort of align the herd immunity and full employment timelines, if you will? Thank you.
So on herd immunity, I'm really going to leave that question to the experts. We don't control that. We're not responsible for defining it. We'll leave that whole discussion to the experts. I mean, what we're focused on is the part that we control, which is the support that we provide to the economy. And there we provided very clear guidance. And in the case of asset purchases, it's at their current level until we make substantial further progress. There is an element of judgment in that, and we'll supply clear communication well in advance of actually tapering. And we just went through the criteria for raising interest rates. They're very specific, and we're very much committed to having them fulfilled robustly. I would agree with you that the path of the virus continues to be very important. We have these new strains which can be quite virulent, and we're not actually done yet. And we're clearly on a good path with cases coming down, as I mentioned, but we're not done. And I'd hate to see us take our eye off the ball before we actually finish the job. So that's how I would look at that.
If I could just briefly follow up, how do you see sort of the disconnect in terms of an economy that is expected to be widely reopened this year, but full employment taking longer to achieve? Is it the case that factors related to the virus will still be with us over the coming years? Is that how to interpret the forecast?
I think there's some of that. Sure, there'll be some of that. There'll still be some social distancing. People may be, for example, going into spaces that involve close contact with others. Some people will do that right away. Others will hold back, and so I think there'll be some of that. In addition, though, remember there are 10 million people, in the range of 10 million people, who need to get back to work, and it's going to take some time for that to happen. It can happen. Maybe more quickly than it has in the past, because it involves the reopening of a sector of the economy as opposed to stimulating aggregate demand and waiting for that to produce job demand for workers. This could be a different sort of a process, and it could be quicker. We don't know that. But it's just a lot of people who need to get back to work, and it's not going to happen overnight. It's going to take some time, no matter how well the economy performs. Unemployment will take quite a time to go down, and so will participation. So that's all I can say. I think the faster the better. We'd love to see it come sooner rather than later. We'd welcome nothing more than that. But realistically, given the numbers, it's going to take some time.
Thank you. Steve Leisman.
Mr. Chairman, thank you. I wonder if you could, kind of a three-parter here, but all related. Would you comment on the current level of the 10-year yield and some other long rates out there, whether or not you think they would have a negative effect on the economy? And if not, is there a level that would give you concern? And finally, the third part, other central bankers have expressed concern about what's happened to yields in their countries, and even some taken action, but not you. Could you give us your general idea or orientation towards the idea of coming into the market and affecting a particular tenor of the bond market? Do you like that idea? Do you not like it? Is it at the top of your toolbox, or is it something that you think is at the bottom of the toolbox?
Sure. So we monitor a broad range of financial conditions, and we're always attentive to market developments, of course. We're still a long way from our goals, and it's important that financial conditions do remain accommodative to support the achievement of those goals. And if you look at various indexes of financial conditions, what you'll see is that they generally do show financial conditions overall to be highly accommodative, and that is appropriate. So that's how we look at it. I would add, as I've said, I would be concerned by disorderly conditions in markets or by a persistent tightening of financial conditions that threaten the achievement of our goals. We think the stance of monetary policy remains appropriate. Our guidance on the federal funds rate and on asset purchases is providing strong support for the economy, and we're committed to maintaining that patiently accommodative stance until the job is well and truly done.
Could you give us an idea of how you sort of feel about that tool of being able to come into a particular part of the market and either doing an operation twist or something like that? Is that something you feel to be the top of your toolbox or something that you don't really prefer?
You know, the tools we have are the tools we have. What I'm telling you is that the stance of monetary policy we have today, we believe is appropriate. We think that our asset purchases in their current form, which is to say, you know, across the curve, $80 billion in treasuries, $40 billion in mortgage-backed securities on net, we think that that's the right place for our asset purchases. Now, we can change them, of course, in a number of different dimensions, should we deem that that's appropriate. But for now, we think that our policy stance on that is appropriate.
Thank you. Rachel Siegel.
Hi, Chair Powell. Thanks very much for taking my question. You've spoken about the pandemic's disproportionate toll on Black Americans, Hispanic Americans, Asian Americans, and other groups in the labor market. And I'm curious if you can speak to specific indicators that the Fed will be using to measure job gains for groups that have persistently higher rates of unemployment compared to white Americans. And relatedly, since you've described vaccines as key to the economic recovery, is the Fed concerned about lower vaccination rates in communities of color, and what barriers do you think exist there? Thanks very much.
So which measures? So we do monitor and communicate very regularly about different labor market disparities in the labor market, let's say. So the African American unemployment rate is substantially elevated, and so is the Hispanic unemployment rate. So we look at those and we see those as, you know, it's slack in the labor market. It's sad to see because those disparities had really come down to record lows since we started keeping the data that way. As recently as a year ago, February of last year, we had those disparities quite low. What happens in a downturn, though, is they move up at twice the speed of white unemployment. So we monitor those things. Our tools, of course, affect unemployment generally, but we're going to look at those as a form of slack in the labor market and hope that that there's progress there. And this particular downturn, of course, was just a direct hit on a part of the economy that employs many minorities and lower paid workers. The public-facing workers in the service industries, in many cases, don't have a lot of financial assets. They're not tremendously well paid. They might have other jobs and things like that. So this was a direct hit on that part of the economy, and it's the slowest part of the economy to recover. So, we like to see those people continue to get supported, as the broader economy recovers, which is very much doing now. In terms of disparate levels of vaccination, those are facts, unfortunate facts. They're really not something we have within our policy toolkit to address, but it is true, though, that the data we have suggests that there are significant disparities between different ethnic groups, and but that's not for us. That's for fiscal authorities and the government more generally to work on.
Thank you. Gina Smialek.
Hey, Chair Powell. Thanks for taking our questions. I was wondering if you could talk a little bit about how you see the fiscal policy support that has come down the line affecting the economy's potential in the longer term, just in the sense that you've talked a lot about the potential for labor market scarring and how that might weigh on our sort of future prospects. And I wonder whether you see that sort of working in reverse. If we pull people back into the labor market more quickly, does that improve our chances?
So I do think that fiscal policy overall will have really helped us to avoid much of the scarring that we were very, very concerned about at the beginning. And I think that's just the size and the speed with which Congress has delivered, with the CARES Act and since then, is going to wind up very much accelerating the return to full employment. It's going to make a huge difference in people's lives, and it has already. As I mentioned in my opening remarks, the recovery has been faster than we expected. Part of that just is very hard to predict, given we've never seen an event like this. But part of it is just the strength of the fiscal response, which I think will look good over the years. Longer term, to really, the first part of it is about avoiding scarring, and I think we've not avoided all of the scarring, but we've probably avoided the worst cases there, and I hope we keep at it, and we will keep at it with our policies, of course, to do whatever we can to make sure that continues. Longer term, though, what it takes to drive productive capacity per capita or per hour worked to raise living standards over time is investment in people's skills and aptitudes, investment in plant and equipment, investment in software. It takes a lot of investment to support a more productive economy and raise living standards. And that's, that hasn't been the principal focus with these measures, our measures certainly, and we don't have those tools, but what Congress has been doing has mainly been replacing lost income and beginning to support people as the economy returns to normal. But there should be a focus on a longer-term focus, I think, would be healthy on the investment front.
Thank you. James Politi.
Thank you, Chair Powell. I wanted to ask a question about the Eurozone. While the outlook for the U.S. economy has much improved, progress in the Eurozone has been far less encouraging, and it's showing signs of serious weakness due to the slower vaccination rollout and renewed lockdowns and restrictions. How worried are you about transatlantic economic divergence and the possibility that that trouble in the Eurozone and weakness in the Eurozone could drag down the U.S. recovery as it did in a way in the aftermath of the financial crisis?
You're right. The pace of the recovery is, we're having diverging recoveries here, as we did after the last crisis. And in this case, as well as the other one, the U.S.'s recovery is leading the global recovery. And we conduct policy, of course, here. Our focus is on our objectives are domestic ones. It's maximum employment and price stability here in the United States. We monitor developments abroad, and we know that because we know that those can affect our outcomes. So I think U.S. demand, very strong U.S. demand, if as the economy improves, is going to support global activity as well over time. That'll be through imports, and when the U.S. economy is strong, that strength tends to support global activity as well. So that's one thing. I don't worry in the near term. I'd love to see Europe growing faster. I'd love to see the vaccine rollout going more smoothly. But I don't worry too much about us in the near term because we're on a very good track. Very strong fiscal support coming. Now vaccination going quickly, and cases coming down. I think we're in a good place. It's all ahead of us, but the data should get stronger fairly quickly here and remain strong for some time here.
Thank you. Hannah Lang.
Hi, thanks so much for taking our questions. I wanted to ask if the Fed is planning on extending the same restrictions on bank dividends and share repurchases that are currently in place into the second quarter, and if you're considering at all the scenario analysis and mid-cycle stress tests that were in place this year, and kind of what would make you consider doing something like that again.
So we haven't made a decision on that. We're a couple weeks away from announcing that decision. I won't foreshadow it here today. I will say we're going to continue our data-driven approach. You know that we restricted buybacks and dividends, so the firms are preserving capital. Through 2020, the banks actually increased their level of capital and their level of reserves. And the December stress tests showed that banks are strong and well capitalized under our hypothetical recessions. that we used in December, which were quite stringent. We're right in the middle of our 2021 stress test, and we'll release those results before the end of June, and that layers, very significant additional stress on top of the stress the banks have already absorbed over the past year, with the unemployment rate going to 11% and stock prices falling more than 50%. So, but all of that, the results of the stress test and the decision on distributions, all of that is to come fairly soon, as I mentioned.
Thank you. Edward Lawrence.
Thanks, Chair Powell, for taking these questions. You laid out the standards to lift off, and back in June of 2020, you said you're not even thinking about raising rates. But I see 7 members seeing liftoff in 2023 and 4 next year. How much debate and how can you characterize that conversation has there been about moving off the lower bound earlier than signaled?
Well, it all depends. We've set out very clear criteria for liftoff. Right, where we've said we want to see labor market conditions that are consistent with our estimates of maximum employment. And that doesn't just mean unemployment, it means a much broader set of criteria. We want inflation at 2% and not on a transitory basis, and we want inflation on track to run moderately above 2% for some. Those are the 3 conditions. Everybody on the committee agrees to that, right? So it comes down to what's your projection for the economy. If you want to, people will have a range of assessments for how good the economy is going to be, and we don't. I would say that we're in a relatively highly uncertain situation. If you look at the uncertainty, people on the committee broadly say that uncertainty about the forecast is very high compared to the normal level. We haven't come out of a pandemic before. We haven't had this kind of fiscal support before, totaling it all up. So you're going to have different perspectives from committee participants about how fast growth will be, how fast the labor market will heal, how fast inflation will move up, and those things are going to dictate where people write down an estimate of liftoff. Of course, this isn't a decision to lift off now. We make that decision then, but it's an estimate based on assumptions about growth, and it's meant to be a tool to generally show the public how our objective function works, how we think about the future. It isn't meant to actually pin down a time when we might or might not lift off. We're not going to make that decision for some time. The chances are that the economy in that time and place will be very different from the one we think it'll be. So sometimes with the dots, I have to be sure to point out that they're not a committee forecast. You know this, but they're not a committee forecast. It's just compiling these projections, really, of individual people. We think it serves a useful purpose. It's not meant to actually be a promise or even a prediction of when the committee will act. That will be very much dependent on economic outcomes, which are highly uncertain.
Thank you. We'll go to Brian Chung.
Other Chairman Powell, I wanted to elaborate a little bit on your commentary about the fiscal stimulus. So it sounds like you, I guess, see the case for even maybe more investment, at least from Congress, to support the more productive economy, as you answered to Gina's question. So we just had $1.9 trillion in spending. So where do you see the fiscal space right now? Do you still, I guess, maybe see the country in a place right now where it wouldn't be a concern if there were to be more spending at this time?
No, so Brian, it's not up to us to decide what Congress should spend money on or when. I was answering Gina's question, which really was, how do we assure lack of damage to scarring, for example, or lack of damage to the productive capacity of the economy? And I think what's happened so far has done a pretty good job of that. But really, I wanted to make the longer run point that if to work on the productivity over longer periods, that comes down to a number of things, but one of those things is investment in people, in their skills, education, aptitude, all of those things. I'm not in any way suggesting that that's something Congress should work on right now, or that that's not our job. I'm just saying that is what fiscal policy can do. That really monetary policy can't do is invest in the future productive capacity of the economy, raise potential growth. Those things are completely tools that Congress has. And again, I wasn't making a comment at all on the current fiscal setting.
Thank you. Next to Michael Derby.
Great, thank you for taking my question. I just wanted to get an updated view on your sense of your view on financial stability risks and whether or not you see any pockets of excess out in financial markets that concern you, either specifically to that area of the market or as in terms of like the threat that it could propose to the overall economy.
Sure. So, as you know, financial stability for us is a framework. It's not one thing. It's not a particular market or a particular asset or anything like that. It's a framework that we have. We report on it semi-annually. The board gets a report on it quarterly, and we monitor every day. And it has 4 pillars, and those are 4 key vulnerabilities: asset valuations, debt owed by businesses and households, funding risk, and leverage among financial institutions. Those 4 things, and I'll just quickly touch on them. So if you look at asset valuations, you can say that by some measures, some asset valuations are elevated compared to history. I think that's clear. In terms of households and businesses, households entered the crisis in very good shape by historical standards. Leverage in the household sector had been just kind of gradually moving down and down and down since the financial crisis. Now there was some negative effects on that. People lost their jobs and that sort of thing, but they've also gotten a lot of support now. So the damage hasn't been as bad as we thought. Businesses, by the same token, had a high debt load coming in, and many saw their revenues decline. But they've done so much financing, and there's a lot of cash on their balance sheets. So nothing in those 2 sectors really jumps out as really troubling. Short-term, I mentioned funding risk as the last one. So we saw again in this crisis breakdowns in parts of the short-term funding markets. Came under a tremendous amount of stress, and they've been quiet since the spring. And we shut down our facilities and all that. But we don't feel like we can let the moment pass without just saying again that some aspects of the short-term funding markets and more broadly non-bank financial intermediation didn't hold up so well under great stress, under tremendous stress, and we need to go back and look at that. So a very high priority for us as regulators and supervisors is going to be to go back, and this will involve all the other regulatory agencies. It does involve all of them as well, and see if we can strengthen those things. So that's a sort of a broader, detailed look.
Thank you. Michael McKee.
Mr. Chairman, can you help me understand something about the SEP and your forecasts? The inflation that you're talking about for this year, say, is transitory. Then by 2023, you're back down to 2.1%. There's no forecast for a rate increase for 2023. If you get to 3.5% unemployment, but inflation's only at 2 or 2.1%, are you willing to leave rates at 0 going forward from there, or roughly 0 going forward from there? In other words, could we be in a Japan-like situation where rates just stay low because inflation does?
Well, again, I wouldn't read too much into the March 2021 SEP dot plot. Remember what it is. It's a compilation of individual projections by individual members. They're all making different assessments. They have different forecasts, economic forecasts. Some have more optimistic ones, some less optimistic. And also remember that the SEP doesn't actually include all the things that go into maximum employment, right? It only includes unemployment. So I would just say we've set out clear guidance. The message from the SEP that I would like to leave with people is we set out clear guidance. I mentioned what it was. It's inflation it's labor market conditions consistent with our estimates of maximum employment, and that's not just unemployment, it's all the other indicators. But overall totaling up to maximum employment. It's inflation at 2% and not on a transient basis, and inflation on track to exceed 2% for moderately for some time. Those are the criteria. We're committed to robustly implementing that guidance, and that's what this says. That's really all it says. We're going to wait until those requirements are met, And again, the state of the economy in 2 or 3 years is highly uncertain, and I wouldn't want to focus too much on the exact timing of a potential rate increase that far into the future.
If I could follow up, I'm just wondering, before 2019, shall we say, you were focused on the problems with having interest rates too low. Now, are you saying we're willing to live with it until we reach these goals, even if you reach your goal on maximum employment?
So what I would say is we're committed to giving the economy the support that it needs to return as quickly as possible to a state of maximum employment and price stability. And, to the extent having rates low and support for monetary policy broadly, to the extent that raises other questions, we think it's absolutely essential to maintain the strength and stability of the broader financial system, and to carefully monitor financial stability questions, if that's what you're getting at. We do that. We monitor them very carefully. I would point out that over the long expansion, longest in U.S. history, 10 years and 8 months, rates were very low they were at zero for 7 years, and then never got above 2.4% roughly. During that, we didn't see actually excess buildup of debt. We didn't see asset prices form into bubbles that would threaten the progress of the economy. We didn't see we didn't see a housing bubble. The things that have tended to really hurt an economy and have in recent history hurt the U.S. We didn't see them build up despite very low rates. Part of that just is that you're in a low rate environment. You're in a much lower rate environment, and the connection between low rates and the kind of financial instability issues is just not as tight as people think it is. That's not to say we ignore it. We don't ignore it. We watch it very carefully, and we think there is a connection. I would say there is, but it's not quite so clear. We actually monitor financial conditions very, very broadly and carefully, and we didn't do that before the global financial crisis 12 years ago. Now we do, and we've also, put a lot of time and effort into strengthening the large financial institutions that form the core of our financial system are much stronger, much more resilient. That's true of the banks. I think it's true of the CCPs. We want it to be true of other non-bank financial intermediation markets and institutions. So I think that's monetary policy should be, to me, provide for achieving our macroeconomic aims. Financial regulatory policy and supervision should be for strengthening the financial system so that it is strong and robust and can withstand the kinds of things that it couldn't, frankly. And we learned that in 2008, 9, 10. This time around, the regulated part of the financial system held up very well. We found some other areas that need strengthening, and that's what we're working on now.
Thank you. Anakin, CNN.
Thanks for taking my question. Chairman Powell, could you talk to us a little bit about the relationship between the persistent pandemic unemployment and the expected increase in inflation? Does the former offset the latter to some degree?
I'm sorry, could you repeat that? You broke up there for a second.
Oh, no. I was hoping that wouldn't happen. Can you hear me now?
Yes, yeah.
Okay, great. I was asking if you could talk to us a little bit about the relationship between the persistent pandemic unemployment and the expected increase in inflation. I'm wondering whether the former offsets the latter and to which degree you guys are monitoring this.
You're asking about the relationship between unemployment and inflation? Is that the question?
Yes, exactly.
Okay.
They offset each other, the persistent pandemic unemployment.
Yeah, I think I'm hearing you correctly. So I would say a couple things. There was a time when there was a tight connection between unemployment and inflation. That time is long gone. We had extremely low unemployment, not extremely low. We had low unemployment in 2018 and 19 and the beginning of 20 without having troubling inflation at all. We were at 3.5%. We were bouncing around with unemployment 3.5% to 4%. And it wasn't just unemployment. Participation was high. Wages were moving up. It was a very healthy thing. And we didn't see price inflation move up. There is a relationship between wage inflation and unemployment. But that has not, what happens is that when wages move up because unemployment is low, companies have been absorbing that increase into their margins rather than raising prices. And that seems to be a feature of late cycle behavior. So we're not, when we seek to achieve low unemployment, high levels of employment, which is our mandate, we think we have the freedom to do that based on the data without worrying too much about inflation.
Thank you. Going to Greg Robb.
Hi, thanks for taking my question. I wanted to follow up a little bit. I understand what you're saying about the dot plot and the message you're trying to send with the dot plot, but does the same apply for the taper tantrum? You've said that it's going to take some time to get some fundamental progress on your goals, but it seems like some time could now be any time.
Well, so we've said substantial further progress. Now, if you go back November, December, and January, progress in the labor market slowed very sharply. So you had an average of 29,000 jobs per month. If you go back and look at the level of job creation before that was very, very high, very high. So we weren't making any progress on the labor market from November through January. February, we saw a nice pickup, a good jobs report, 379,465 private sector. So that's good. It can go so much higher, though, and it would be nice to see to really make faster progress. That's different from substantial progress. We'd like to see it be higher than that, and I think it will be. That's the expectation is you'll see now, I think, really strong job creation return. Not as high as it was in the very early days of the recovery, the reopening of the economy, but nonetheless very strong. Okay, so what I'm saying is, to achieve substantial progress from where we are, having had 3 months of very little progress, it's going to take some time. And we don't want to get into, I don't want to get into trying to put a pin on the calendar someplace, because it's going to be data dependent. When we see ourselves on track to make substantial further progress, we're going to say so. We understand fully that test is one that involves judgment. If you remember during the global financial crisis recovery, we said quantitative easing number 3 was the test was a substantial improvement in the outlook for the labor market. Well, what does that mean? Well, it means a substantial improvement in the outlook for the labor market. It meant we would communicate when we thought we had that. This is just like that, in a way. What we're saying is substantial further progress toward our goals. We'll tell people when we think, until we give us a signal, you can assume we're not there yet. And as we approach it, well in advance, we will give a signal that yes, we're on a path to possibly achieve that, to consider tapering. So that's how we're planning to handle it. It's not different really from QE3. And I think what we've learned from the experience of these last dozen years is to communicate very carefully, very clearly, well in advance, and then follow through with your communications. In this case, it's an outcome-based set of guidance, as our rate guidance is, and it's going to depend on the progress of the economy. That's why it's not appropriate to start pointing at dates yet.
Thank you.
Thank you. Don Lee, LA Times.
Hi, Chair Powell. As you know, households are sitting on a lot of excess savings, and I wonder if combined with that you have an unleashing of pent-up demand. How much do you think that would affect inflation, and would you expect that to be transitory?
We and everyone who's forecasting these, what we're all doing is we are looking at the amount of savings. We're looking at, we have reasonably good data. on that, and we're looking at the government transfers that'll be made as part of the various laws, and we're trying to make an assessment on what will be the tendency of people to spend that money, the marginal propensity to consume. And from that, you can develop an estimate of the impact on spending, on growth, on hiring, and ultimately on inflation. So that's what we're all doing. And we have, we can look at history and we can make estimates, and those are all very transparent and public, and you can compare one to the other. And of course, we've all done that. And I think we've made very conservative assumptions and sensible mainstream assumptions at each step of that process. And what it comes down to is what I said before, which is there very likely will be a step up in inflation as March and April of last year drop out of the 12-month window because they were very low inflation numbers. That'll be a fairly significant pop in inflation. It'll wear off quickly, though, because just the way the numbers are calculated. Past that, as the economy reopens, people will start spending more, and that you can only go out to dinner once per night, but a lot of people can go out to dinner, and so. And they're not doing that now. They're not going to restaurants, not going to theaters. That part of the economy, and travel and hotels, that part of the economy is really not functioning at full capacity. But as that happens, people can start to spend. It's also wouldn't be surprising if, and you're seeing this now, particularly in the goods economy, there'll be bottlenecks. They won't be able to service all of the demand maybe for a period. So those things could lead to, and we've modeled that. Other people have too. And what we see is relatively modest increases in inflation. So, but those are not permanent things. What'll happen is the supply side. The supply side in the United States is very dynamic. People start businesses. They reopen restaurants. The airlines will be flying again. All of those things will happen, and so it'll turn out to be a one-time sort of bulge in prices, but it won't change inflation going forward because inflation expectations are strongly anchored around 2%. We know that inflation dynamics do evolve over time. There was a time when inflation went up, it would stay up. And that time is not now. That hasn't been the case for some decades, and we think we won't suddenly change to another regime. These things tend to change over time, and they tend to change when the central bank doesn't understand that having inflation expectations anchored at 2% is the key to it all. Having them anchored at 2% is what gives us the ability to push hard when the economy is really weak. If we saw inflation expectations moving materially above 2%, of course, we would conduct policy in a way that would make sure that didn't happen. We're committed to having inflation expectations anchored at 2%, not materially above or below 2%. So that's, I think if you look at the savings, look at all of that, model it, that's kind of what comes out of our assessment. There are different possibilities. I think it's a relatively unusual, very unusual situation to have all these savings and this amount of fiscal support and monetary policy support. Nonetheless, that is our most likely case. And as the data come in and the economy performs, we'll of course adjust. Our outcome-based guidance will immediately adapt, we think, to meet whatever the actual path of the economy is.
Thank you. We'll go to Scott Horsley for the last question.
Thanks, Chairman Powell. My question is about those supply chain bottlenecks, especially on the goods side. Are they getting better or are they getting worse? We saw they were sort of a drag on the industrial production numbers that came out yesterday. And what do you expect them to do to prices just in the short run?
I think it's impossible to say, frankly, with any confidence, but I would expect, it's very possible, let's put it that way, that you will see bottlenecks emerge and then clear over time, and you'll probably see that over a period of time because, really the strong data are ahead of us. Right now that the checks are going out just now, and that'll add to spending. COVID cases are coming down. Vaccination is moving now quickly. The really strong economic data is coming. It should be coming. assuming we stay on this track. And that's when you'll really know where the bottlenecks are. But you can see, though, that these are not permanent. It's not like the supply side will be unable to adapt to these things. The market will clear. It just may take some time, and some of the answer to that may be price. In many cases, it won't be price. You'll see that people are reluctant to raise prices. It's a little bit the story about the wage Phillips curve does show that as unemployment goes down, wages move up, but companies choose not to try to pass that price increase along to their customers. So you'll see a lot of that here too, I think. Anyway, we'll see, but that's my basic sense. Thank you very much.
Thank you.
In a positive manner, but I just want to see, because if the bond market's going to stay, just going to try and hold on at that rate, they're going to buy the Fed's going to buy bonds and keep the rates low. Then usually the stock market kind of takes a little bit of a dive after that. So I kind of want to see what's happening.
Well, it's not even just that. That's why I said he was direct. He flat out said, he goes, look, I know it's easy for y'all to see how the economy's improving, but we still have these three parameters we're going by, and we haven't met these three parameters. And so we're not moving up our timeline.
Yeah, I already worked on the speech. I told you he was going to say unemployment a lot. Talk about how unemployment levels have not been met yet. I knew that he was going to say inflation over 200 times. I already knew that. I was prepared. I drank all my water bottles.
About to bust 58,000 on Bitcoin.
58,000, yeah.
Yeah, Bitcoin. Go Bitcoin.
Just did it.
I'm not betting too much on Bitcoin failing. Like
2240 right now.
Say that again.
127 on ADA.
All right, so degenerates. Jay Powell said,
yeah.
Continuously, nothing's changing. Everything's a go, and we're going to be switching back over here into a bull market. So everything's going to be good. It's just going to take a slight little, it's a little time to bounce back, but we're going to be on the way up here. So.
Dang, mouse. All right.
I'm out of here for the day. You guys have a very good one today.
Yeah, Mouse and I are going to go eat.
Sorry, man.
Yeah, I'm out of here. I'm shutting down. It's a great day today. So everything's going to be good, guys. You can just check out for the rest of the day. Be prepared for tomorrow. We're going to start seeing an uptick with everything in the morning. So you guys have a good one tonight.
Later,
man.
Mouse.
Thanks, G. Later on, bro.
I'll keep the YouTube stream running while we go eat. You guys want to know my favorite thing to eat?
Sure.
I like to go out and pick fresh dandelions, boil those, and then eat them.
Wait. Say that again. Oh my! What the hell is going on?
All right, can you hear me now?
Oh, dude, I can't get off on my exit. What the hell?
Oh, if you miss your exit, just drive 2 more miles, take the next exit.
I have to drive into another city to get back. There's a giant river bottom that I have to go across now and drive into another city and take a back road all the way back. It's not good. So if they close it off, cops close it off. So it means it's either a murder, yeah, or they're about to murder somebody.
That's not what it means.
No, I don't know. I'm just kind of being negative, I guess. But
hey, where are you at? Where are you at right now?
I'm in Oxnard, Ventura area. Like,
let me know if police are at the next exit.
Say that one more time.
If you see police officers at the next exit, let me know.
There are, actually. Yeah, there are a ton over here, too.
All right, here's what it means. A politician is driving through there.
No way.
Yep. They'll block off like 20 exits here when Trump comes to town.
Oh, wow. Yeah, no, man, this is insane. So I have to go all the way to a whole nother exit through the back roads I just tried to take. So
GME at 207.
Say that again?
GME hit 207.
All right, I got to buy. I got to get in at least a little bit, you know.
It's pointing down still.
Yeah.
This is why I kept talking to Carolina earlier. Like, did you sell at 220? Did you sell at 220? You got to get out before 230.
We were telling him.
I'm glad he listened.
I think he waited until it came down to like 216, and then I think he bailed.
He had at least 5 opportunities for 220. All you have to do is put the order in. That's why I use limit orders.
Well, I think he was hoping that it wasn't gonna go down. But it made a perfect head and shoulders, and as soon as I saw that, I was like, nah, bro, it's gonna go down.
Should I wait or buy it right now?
We'll tell you in 26 minutes.
I would wait. I would wait and look for any other opportunity after market. Start looking.
Yeah, I agree. Because I agree.
Yeah, I'm gonna have to wait on Tesla.
Market as well.
It will take up to 3 days for this press conference to take full effect. All those people in the press conference, they're all writing their articles, and they're going to put it out in the news today. And it's just going to take like 3 days for that news to reach the majority of traders. I think it's funny how Wells Fargo's systems crashed when the stimulus came there today.
It's funny how the banks major banks ask for collateral in order to give out the stimulus checks. They're like, well, hey, you want us to hand out money, Mr. Fed, and give us something, promise that we'll be compensated for it. And the Fed's like, shut up and pay them the money.
Yeah, and then Wells Fargo decided they were going to have computer errors today.
Hey, why not?
The Robin Hood of banks.
Right?
So, is there a plan to short Robinhood, or are people going to be nice?
Well, here's my theory. TD Ameritrade has well over $1.2 trillion. And if they wanted to, they could take their short positions right when the IPO goes public before the lockout period. And then they could have their short position expire just a few days before that lockout period. Me personally, I don't have the balls to short any corporation because I know what goes on behind closed doors and I'm not getting trapped in a short position.
But that's where you can make a lot of money is the options trading, right? And shorting companies.
Oh, I'll buy options, but I'm not going to short.
But you can make more money shorting a company, right? Or shorting a stock.
Shorting, well, you only make as much money as the stock goes down, so it's really very risky.
Yeah, but I mean, you make more money, right?
A lot of stocks have more upside than downside. Like GameStop, do you think GameStop's gonna go down to under $50 before next month?
You can make the same amount of money on puts and calls.
Yeah, options are fine, but shorting, when you borrow the stock and have to return it at a later date, that's so risky, and you have to have a lot of capital to give to the brokerage firm.
Do you have to pay a premium?
Well, you could do a covered short where you own the shares and you're shorting your own shares.
and that's legal.
So
You pretty
say
much do whatever you want.
if you get in a short position and
I mean,
you have to
obviously it's
return
legal.
shares, yeah.
Yeah, I guess.
So here's what you do: you find somebody in a long position that you're friends with, if you're a hedge fund, and if you're in a short position and you have to return your shares at a certain date, and you think you're gonna get screwed, you call up the other people that are in a long position and you borrow their shares.
Just do it naked like they did on GME.
Don't do it naked; you're gonna get caught.
Boys can do it.
Your portfolio is gonna look like that naked stock price.
Tesla to close over 7.
Oh, you guys want to hear something funny? So you remember how I said that they closed off the exit and they closed off the whole section of the exit and the road there? There was a funeral, like people followed the funeral car, and
Procession.
yeah, thank you. And they had to take the detour. That sucks. Some nice cars though, man.
Yo, TCAT is at 24 now.
Should we call Dick's again?
Wait, I just have a question. Why did we call up Dick's Sporting Goods?
Because someone on the YouTube didn't believe that they were selling tents. And I was saying that Dick's stock price will probably go up because they're selling tents, and a lot of people go camping during spring and summertime.
Actually, Dick's would go back up if sports started again because you got baseball equipment, soccer, hockey equipment, all these equipment that gets bought from Dick's Sporting Goods. You know, if things opened up again, if you had sports again, you know.
Yeah,
you got to be killing them.
I did the phone call when Dick's was around $70 per share. Now it's $78 per share.
Wow. What the?
I know their stock's going to go up. More people are going outside.
I spent thousands of dollars on sports
I don't know if you saw the picture I posted in general a couple of days ago, but where I'm at, we have a Dick's right next to the BJ's.
I'm sorry, whoever's talking, your volume's kind of low.
That's awesome.
It shouldn't be. I'm not pushing the button. Weird.
You're going to get swatted one day.
Why would they carry you out?
Tame's going to get swatted.
Eesh.
FBI, open up.
Dude, that's actually pretty scary, man.
Yep, that's all.
Can you imagine just like sitting there in front of your computer, like video gaming, and next thing, like, because you got headphones on, like that would be terrifying.
We have no idea what the hell's going on.
It's even worse. I have like a pistol and stuff on my desk.
Right?
Yeah.
I should probably move that in case something happens.
Yeah, TCAT hit 2490 and then it's down to 2280.
I don't know, Tame. I'm one for like always being ready for the zombie apocalypse. You should always have something within arm's reach, bro.
So you mean to tell me?
If you're at home, why don't you just carry it in a holster on you?
So if you just sitting there at your computer desk and like somebody kicking the door, you turn around and shoot them. It's the police. You're gonna tell them, "Hey man, I thought it was an apocalypse zombie."
Bro, let me tell you something. If somebody kicks in my door, yeah, that's exactly what they're gonna get.
Oh my God, that's a question right there. Just say she thought it was a zombie apocalypse.
To be honest with you, you can't just shoot. You have to identify threats. Somebody kicking in your door is not reasonable. It's not a reason to shoot. So you would be going to jail for a very long time.
But you don't think somebody aggressively kicking down your door is an act of aggression that your life was in personal danger?
Not in Illinois. It's not. Your life has to be in danger. Somebody breaking into your houses does not make
Where
your.
you live? If you're in Florida or
Well,
Texas,
thank God I'm in South Carolina. 'Cause we live in a free state.
Yeah, and, in California, if someone breaks in your house, someone is in your house and they die, then yeah, you have a right to say, hey, they were attacking me. Whether they were or not, you have a right to say, hey, this person was attacking me aggressively. But the only thing you have to worry about is a lawsuit from that person's family later on, because we're good old California.
Your civil lawsuits are going to be worse than your criminal.
Jeez, right?
205 for
California, you have to passively aggressively ask your burglars to leave. Like, hey,
I will, as I'm simultaneously squeezing the trigger multiple times.
make sure you have security cameras in your house. It's not to. It's really to protect you in court. That's what security cameras are for.
I've got 7.
5.
That's just awkward.
But if somebody breaks in your house and they're holding a weapon in their hand,
you
can
kids and they got
unload the
cameras
clip.
on them.
Say that again, Tang.
If somebody breaks in your house while they're holding a weapon, if they have a gun or a knife in their hand, you can unload that clip.
That's because that's considered a threat. Your life is in danger.
Don't touch
you mean
your body.
You mean magazine?
Yeah, magazine, not clip.
Yeah, sorry. Why did I say clip? What am I thinking about?
I don't know. Pens have clips.
Yeah, you're gonna stab them with your penis. But don't touch their body or anything after that. Just call ambulance and call police.
Why the hell would I touch a dead man's body?
Tame, I think you mean the clipazine.
The clipazine.
Clipazine! The 30-round extended revolver mag clipazine.
Can somebody make that money printer sound?
All right, I think GMA is going to close at 204.
I don't know what that was, but that damn sure wasn't no money. I don't know what money you were counting over.
Like an A10 Warhawk, baby.
That sounds like a damn ATM.
I hope my ATM can make that noise.
There you go.
Sounds like a money counter. Want to tell me you guys don't have cash counters in your house?
Yes, Lord.
I don't have enough money to use a cash counter. I just look
I
at
don't
it
take
and count.
cash anymore. I just take crypto. It's much easier.
Crypto gas fees are so expensive.
Tell you what, a Spectre gunship or an A10 is the best sound you ever heard in your life when you needed it.
Always.
It is.
You should always have cash in the house. Always.
An A10 has the best sounding
Which multiples of currency though?
Hey Carolina, how many shares of GameStop do you own?
I've got USD and Euro in the house.
4.5. I'm gonna get some more in the morning.
What did you buy your 4.5 shares at?
210.
Okay. So you sold at 220 and bought back in at 210.
Yeah. I tried to sell when it went up to like 220 something, but I couldn't. I only had one more day trade left on there, so I didn't want to use it. So I was just like, fuck it. I'll just wait till tomorrow.
Wait. Don't use number 4 day trade. Did you only use 3 or 4?
No, I only use.
Because if you hit that number 4, you can't day trade for 90 whole days.
Got
it. So no more day trading for the rest of the week for you, buddy.
Dang it! Come on, Tesla. Go down so I can get a daggone buy spot.
I want it to go up.
It can go back up.
After you get the propane, Bobby.
God dang it, Bobby.
What price target are you looking for today?
Propane.
Something better than what it is now.
I told you guys, I didn't even have to watch the stock today. I knew exactly what's going to happen.
To be honest, for the amount what Tesla is worth, a couple dollar swing here and there is not going to kill you.
I mean, I was trying to at least get 690.
That's the way I look at it. If the stock is like $600 and something, like if I buy it plus or minus $5, it's not going to really make a difference versus buying a stock that's $5 and plus or minus $5. That's why I didn't even do limits on my ARC funds. I'm like, whatever, it's just going to be what it is. It's not going to, and it also depends on how much you're buying as well.
You better look at that order book before you buy on market price.
These aren't meme stocks. They're not going to swing that fast. I know what I'm comfortable with. I know what Tesla's going to go to.
Where's Tesla going to go? Mars?
We're going to hit 900 again.
Oh my god, this is a big MACD for GameStop right here, buddy.
There we go. Now we got a little downward trend going right before close. Just what I wanted to see.
So is March 19th triple witching day not a thing anymore?
March 19th could still be really big, but for the ADA and Cardano stuff, that's... Whew.
Tesla breaks down under 690. I think it's going to be a pretty big drop by the end of the day.
Well, there's going to be some day traders popping out right now. So
yep, exactly.
Guys, how many people you think are going to take their stimulus check to the strip club?
Zero.
Probably about half.
Me. Who said zero?
That's the biggest waste of money you can ever do as a strip club.
Agreed, but it doesn't mean it doesn't happen.
It happens, trust me.
I would never waste $1 in a strip club. I wouldn't waste a cover charge going into a strip club.
God damn.
I feel like driving by the strip clubs Friday and showing you on live feed, the parking lots are slam packed.
These people go to strip clubs and they blow $2,000, $5,000 or $1,000. You can literally go to any bar and for $500 and get a girl drunk and go have sex. Okay, in a strip club, you know they're not going to touch you.
You don't go there. You don't go there for the girls. You go there for the breakfast buffet.
Chicken wings.
I used to tell my girlfriend when I did after hours clubs.
Fish sticks.
Ta-ta!
They just, God, they didn't take my recommendation on the French toast though.
With tartar.
But during the pandemic, this fucking stock went from $16 all the way up to almost $70. People love
I thought you were kidding. I did. I really thought you were kidding.
You thought I was kidding. You didn't invest in Rick's.
Okay. No, I really thought you were just making a joke.
I was dead serious when I first talked.
I mean, I know you are now.
Yeah, but see, that's the thing with Tane. He jokes so he jokes so daggone much. You don't know when he's serious or not.
But I'll tell you, I'm joking. I'll tell you, I'm joking like a second after. I'm not gonna.
But you were like, you were laughing though. Like the way you addressed it initially, at least when I heard you talk about it, like, because it was like a while ago.
Well, that way, if it goes down, he could just say I was just joking.
No, I was laughing because it's hilarious. It's the opposite of human behavior almost.
But you don't remember a conversation? I was like, how are people going to strip clubs if they have, like, during COVID? That was the first thing I asked you.
I gotta get my GoPro footage. So basically, inside the strip club, mostly only the strippers are wearing face masks. All the other people, they're not wearing face masks because if they have a drink or food in their hand, they don't have to wear a face mask.
So it's just like a giant petri dish in there.
Disgusting.
Basically, that's where I went. So that's where I went to get my antibodies for COVID.
Yeah, and you walked out with hepatitis.
and gonorrhea herpes.
204 for GME.
In staff.
That's what's going to close at 204. I think.
Everybody has staff.
Y'all shitting on strippers.
MERS.
I have my MERS vaccine.
That's better than what most people in the military got. They came back with wives.
Ooh, the burn. My grandfather came back with Agent Orange.
That's what my dad has. He had Agent Orange, and that's why he got his disability from VA, 100% disability.
So did your dad get that before you were born or after?
I was born and so my dad had Agent, let's see, so 70s is after?
He got my grandmother pregnant after he came back from the war when he had Agent Orange. So some of my family members, we have some skin problems because of it.
My dad gets 100% disability, and then for the state, his primary home in Illinois, if you're on veteran disability 100%, you pay no property taxes. And he gets a nice big fat check every single month on top of his Social Security.
What state is this?
Illinois.
Oh, I can't go to Illinois.
No, like I trust me. I'm when I get the fuck out of here.
You want to come live in North Carolina?
Do Georgia,
North Carolina, Georgia, and South Carolina are pretty good. The only thing that sucks about Georgia is if you bring your vehicle with you, you will get stabbed in the face with a vehicle transfer tax.
I want to either do Georgia or Arizona or Italy. That's why I'm trying to get my, I'm going through the paperwork in my dual citizenship right now.
Arizona is actually really nice. I got a lot of friends out there.
Arizona would be great.
They're like
hate Illinois.
super gun friendly.
I would be 100% in Texas. My wife won't move to Texas. She's a fucking Democrat.
I can't get my wife to move at all, but I mean, South Carolina is really not that bad.
Yeah, South Carolina.
AMC's got some movement here.
There's a lot of Democrats in Texas. I'm talking about millions of Democrats in Texas.
Millions of Democrats.
204 on GME.
I think GameStop could go down to 180 aftermarket.
700 Tesla. Come on, Tesla. Come on, Tesla. Keep going, buddy. Keep going.
You're gonna make me go watch Tesla drag racing videos now.
You're not helping my buying situation.
I was trying to help you out, man, but I got to worry about my own money here. I got to pay these fucking drones off.
Oh, you bought some drones?
I bought 2 of them for God knows what reason. It was play money though.
Are you gonna make videos on them?
Well, considering the fact that I'm going to crash and they'll probably will be completely destroyed before I even figure out how to turn the camera on. No.
Oh, okay.
They're going to be $2,000 worth of paperweights.
It's not that bad.
I know it's mostly with the ones that I got. I mean, they all automatically hover and everything else. I mean, it's and the area that I'm flying in. It's it's automatic landing, automatic takeoff. It's if I crash these and I kill these, I mean, without doing something completely stupid, like if I'm just flying normally, and if I can't fly these, there's no reason why I should be flying anything.
Do you have underground power lines or overhead power lines?
Underground.
All right.
And again, it's all going to be in farmland, which is, like the one farm by me is like fucking 200 acres or some shit.
That's probably some cool footage.
Yeah, it'll definitely be some cool stuff. Mostly, like, the one I'm really excited about is the one I'm still waiting for the shipment, that the DJI FPS, because that one, even just watching through the goggles, is supposed to be a high definition experience. So everybody's like, dude, it's honestly like you're flying. I just got to watch it though. I have a slight vertigo, so I got to be very careful with it. In worst case scenario, if I don't like the shit, return it. Pay a restocking fee or whatever. I don't care. It's just not losing all the money or just sell them off. They're tangible assets, so you can always sell it.
There's always people willing to buy them, man, because there's people that have wrecked them and they don't have the parts and they want to buy ones whether they work or not. The aftermarket for those are huge.
Oh, dude, if I went in, I think DJI buying direct, I think they have like a $200 restocking fee. Like if I played around with this, I was like, yeah, it's not for me. It was whatever. If I took $250 off of it and listed on Facebook, I'd have a seller in like an hour. Yeah, it's no big deal. I lose a couple $100, but it was the experience. It's the same as going out. Like if you went to a drone place and went to an instructor and rented one for the day and learn, it's going to cost you a lot of money. So I might as well just buy it myself and learn on my own.
Sounds a lot like going to a strip club.
Yeah, but I don't walk out with hepatitis and have to wash my hands 30 times.
Guys, you don't have to spend money at the strip club, right? You just buy one drink, hold it in your hand. If you're cheap, just ask for water, hold it in your hand.
I don't believe in them because I don't think what they're doing is what they should be doing. I have a daughter. And I don't need to see a whole bunch of men objectifying women.
No, you can go to the gay strip club too.
Yeah.
Anyway, with the drones, man, when I started flying, dude, I found that the simulators saved me a lot of money in crashing. So I don't know if you've tried those yet. But
Yeah, I've had in-flight. I bought in-flight. It was on Steam yesterday on sale. So I bought in-flight and I got the DJI one also. It was crazy, hard as hell, and I was like, oh wait, it's automatically in manual mode. So it's like as soon as I started the game, I'd lift off and I'd crash. I'm like, what the fuck? This sucks. I'm like, oh, it's in pure manual mode right now.
Yeah, that shit's hard. It's like trying to stand on a beach ball.
Oh no, it's not that bad.
For a beginner, it is. Yeah, because you got to get the whole balance thing going.
It's hard as hell.
Look at this.
All right, 209 for.
There it goes. We're in after hours.
One Tesla.
Yeah. GameStop's going up right now with the huge buy volume after hours.
Yeah, look at it. It's 208.64 showing.
So, Carolina, is the end of the day. Maybe tomorrow you can put your order to sell GameStop at 2:30 or something.
Yeah, I might.
Because, look, it went up to over 230 pre-market today. If you don't have your order in before that happens, you're not going to be able to sell. You're going to be at the back of the line at the DMV. Whenever you go to the DMV, you have to be there at 6 o'clock in the morning. 5 o'clock if you're in New York.
DMV, we just walk in anytime.
Yeah, if you live in Illinois, you can go to DMV at 4 o'clock in the afternoon and be fine.
So how will be the market tomorrow?
Might be up or down. Your guess is as good as anybody's.
He didn't really give any specifics on, the journalist was pushing him, but he said it's not ready yet, and he doesn't want to put shadow on what's happening. They're still deciding on the interest rate. He said today that he's going to increase the inflation rate, though. The stock market was going to dip today.
So basically, tomorrow is basically another day.
Same as every other one.
Tomorrow's another day with a bunch of people with their stimulus checks, so a lot of stocks could be up tomorrow.
A lot of credit card debt, so I paid it off that.
Imagine if you could buy stocks with credit cards.
Isn't that margin?
Yeah, it's basically margin.
Bitcoin went to 57.7, then we went back up to 58.1.
Although margin is a better interest rate, funny enough.
I'm mad at how my Weeble just automatically turned into a margin account when I had it at strictly cash.
But you got to realize, when you have a cash account, you wait forever unless you have a large amount of money sitting in reserves.
But I'm just saying, it just changed it without my authorization.
Wait for what?
He's saying that you got to wait when you got a cash
for your
on
funds to
Weeble.
Clear. Yeah.
When your account is a.
No, I just dropped a G in there and it was in there in 30 seconds.
Margin access, don't you have to apply for margin access on Weeble and options and all that separately from stocks?
Yeah, you have to go in and check it and everything.
Right, and I didn't do none of that because when I made the Weeble, Mouse walked me through it, and Mouse was just like, "Oh nah, scroll to the bottom and you'll see this, that, and the third, and if it doesn't say margin, you're not on a margin." So when I did it, it didn't say margin, but then something I looked at this morning, it was on margin, so I went to go change it back to cash, and it was "Oh, this feature is unavailable at the moment. Try again later." So that's why I ain't really been fucking with Weeble today. I've been looking at my.
Wait, let me clarify this for you. I'm gonna pretend to be a Weeble customer support. You cannot change your account from cash to margin after you just bought your positions using the margin. It will take time to go into effect.
I haven't brought nothing on Weeble since Roblox dropped. The day Roblox dropped was the day I used my Weeble. That was the first time and the only time I used it.
If you just made a deposit, they consider that margin, so it might not be a margin account. They just considered you until your cash clears. They consider that margin.
Yeah, I made a deposit. Was it Friday? No.
Right. So they consider that being margin. You don't have a margin account probably. They just consider that being margin until your account clears.
So until that other $50 that I put in there clears, I can't change it to cash. Basically, is what you're saying.
Right.
Well, I believe it's still a cash account, but they allow you to do like trade, like you can buy stock, but you wouldn't be able to trade it. So kind of margin meaning that you're able to use some of that money to buy stock, but you wouldn't be able to pull it out or do anything else with it.
Yeah. I'm gonna have to get used to all this shit, man, because I ain't got time for my bank going in the negatives because this, that, and the third. I gotta wait T plus 40 days for some shit to go through. So,
Do they consider it margin though? Like if you dip below a certain point where they give you a margin call?
Well, you have to wait for your funds to clear because yes, technically. So what happens if he contacts his bank and say, "Hey, I want to cancel this transaction"? Somebody did that on Robinhood after they bought like $30,000 worth of options, and they thought they were slick. Robinhood just closed down their account.
Yeah. But what if it went into the negative though?
His bank account or the brokerage account?
Well, like his trade, like if it went into the shits and then he canceled his deposit, like so Robinhood would be kind of holding the bag.
Yeah, they're gonna charge him. Owes them money. That's why they don't want to give it to you for free. They want to wait until your cash is cleared into the account.
Yeah, and then they limit people too, like as far as like how much.
I'm not gonna buy something for you. Like, if you tell me to buy something for you, but you didn't give me the money yet, I'm not gonna do that. And that's the same way. These brokerage firms don't want to buy the stocks for you without your money being there.
Yeah. I've found with Webull, the more you do business with them, the more they give you in like instant deposits. It goes up the more they trust you. But my whole thought on that, like, say I friggin' use all the instant deposit, and like, does that mean that it's all on margin? So if like the trades I make, they go to shit, they're gonna kick out of them, or? Just makes you wonder, I guess. It's never happened to me.
From what I understand from I've read the terms before, instant deposit is margin. So you have to disable instant deposit as well if you don't want to use that as margin.
Right. Well, I guess my trades haven't gone to shit then.
But yeah, instant deposit is margin. It doesn't mean your money transferred to there instantly. It just means they're going to give you a credit of that money through margin to trade with. And,
yeah, that's why
they could margin call that.
That's why everybody got screwed up who started investing in Robinhood, and then they realized what a real, a regular account is if you don't have instant deposit.
Robinhood, you can have margin disabled, but if you have instant deposit on, they can still margin call what you buy with instant deposit.
Yeah, anything that's not cleared funds is considered margin.
Yeah, I don't want you to get angry at these brokerage firms, Carolina. I just want you to read through it and be more cautious, because in the future you can make a really bad decision. Like if you ever start getting into options and you don't read all the terms and service, you could lose your whole position if you get into options. But if you learn how to read it and you spend the time and sit down, you may make like 10 times profit on some options trades.
AMC volume spike at close was insane.
Anybody trying to learn options, Sundial is a good place to start.
Just don't go buy a $400 call option on random stocks. Like that's how you go belly up.
Dude, that hemispherical curve on AMC looks amazing. Like it is a perfect hemispherical curve.
See that volume spike?
Yeah, that's what I'm saying. Like, look at that freaking curve. I mean, that's beautiful. I mean, that looks really good. And it continued right into the after hours.
Well, it looks like that spike. I mean, wasn't that spike right at the first trade of after hours?
No, there was a couple minutes of sideways action, and then it had a little spike, and then another little spike, and then it had a really big spike.
Yeah, I'm just looking at the 1 minute, and the real big spike was the first trade. It looked like at after hours. The volumes.
What are you looking on?
TD Ameritrade's 1 minute.
Yeah, see, my 1 minute shows a little bit of sideways action in that for at least the first 5 minutes of the after hours.
I was talking about a volume spike, not a price spike.
Oh. Okay.
The volume.
Nice. Look at Cordano.
Volume was like 5x first.
Oh, yeah. Cardano's looking amazing.
Awesome.
My double-headed Hydra spitting fire, baby.
I'm glad I kept that shit. Yep.
Oh, you ain't seen nothing till tomorrow.
I got rid of half of what I had, but oh man, it just looks nice, dude. Finally have it back where it's supposed to be.
Tomorrow I will join Cardano.
You and a whole bunch of people in Africa too.
Do you think this is like a rumor spike, and then the news, like after the conference tomorrow, we might see a dip, or do you think it's gonna do the opposite? I know you don't know the future.
I mean,
I'm just wondering, like, what's your feeling on it? You know what I mean?
I mean, of course, just like any rise, we're going to probably see some sell-off, but I think it's going to stabilize a lot faster than it did last time because, and it also depends on the number of people that jump in tomorrow. I mean, you have to think, like, this is a 2-day conference. So, I mean, at like any conference, there's people that come out of conferences, man, and they're like lit on fire, you know, like they're energized, they're pumped, you know, and like, especially with conferences like this, I mean, I would expect to see 2 strong days of really strong buying incentive before we see a dip.
Is it an in-person live conference, or are they doing it? What's the platform? Like, how are they doing that?
So some people are live and some people aren't, but it's not just Cardano. I mean, like Aave, AAVE is going to be there. Like, I posted the details in the Discord. It's a bunch of people, man. Like Celsius Network's going to be there. Cardano's going to be there. I mean, that's what I'm saying. Like, Charles has gotten a whole bunch of people together, and it's going to be good, man. It's going to be really good.
Are these other cryptos you're listing off, or no?
Yes. So Celsius Network is CEL. Aave is AAVE. AAVE, Aave. And they all serve different purposes. I'm not sure if Polkadot's going to be there or not. Hold on.
That's really cool that he's doing that. It's not, or they're doing that together. So it's not just like one person trying to rule it all, like you said. I didn't realize they were like doing that. I was working all day, but I'll have to go check it out. Was that in crypto?
So if you type in blockchainafrica.co, it's like the whole theme of this conference is from hype to mainstream.
Right.
And you can see all the speakers. Of course, Charles is like, right at the top. But I mean, you've got the founder and CEO of Axleo, founder of CryptoVex Capital, general manager of European operations for Crypto.com. You've got the CEO and executive director of Stellar, global crypto leader at PwC, the host of Bitcoin Did podcast, founder and CEO of Aave, the founder and CEO of Bybit, the founder and CEO at Bundle Africa, and founding partner at Microtraction. I mean, FTX, African Trade and Development Bank, TDB is going to be there, which is huge. co-founder of DLTE Ledgers, the development lead, team lead for Kraken, Orchid, Mindbest, Celsius, Stratum. See if I see any more names I know of.
I can see why it's going to be 2 days now.
Now, can you guess who? Can you guess who's not on this list?
Vlad.
Fucking Vlad, no, yeah, he's the ether guy, dude. Exactly, Carol.
Not a single freaking person from Ethereum. And the thing is, it was open to register to speak. They're just choosing not to be there.
Seriously?
Yep.
They're snobbing it. That's how fucking that's how Kool-Aid-y those people are, dude.
Dude, it's Vitalik, man. I'm telling you.
Wow.
Like, the more you dig in,
What a bunch of
I mean, but
dumbasses,
see,
dude.
okay, but here's the thing. Think like when you were 19. I know I can. If you literally woke up one day to an idea that you had that you didn't even really needed to create, you just had the idea and you met all these really smart people that just happened to put it all together, and all of a sudden you were worth millions of dollars. Would anybody be able to tell you anything? I can tell you from my perspective, if it happened to me when I was 19 years old, you wouldn't be able to tell me nothing.
They get their head up.
Yep, same here.
And unfortunately, that appears to be the situation. So
19 going on 40 though, or 50? I mean, what the hell?
no, it's only been 8 years. So
I want to see ADA drop back down.
27, I think.
Let's get ADA back down to 110. I'll put it in another 1,000.
Whoa, no. We're on the climb, my friend. You can't be talking down Tesla. So you keep talking up Tesla. So I'm gonna talk up ADA.
ADA's in your cold wallet. You're not transferring that shit. I know what you're doing. I have my stocks and my crypto is all live. Your shit's gonna take a transfer and then a sell. Mine's just a buy or a sell.
I'm not touching ADA.
So let's get it down to 110, and then I could buy it in, and then I could root for it also. I only got 1,000 in it. I can do another 1,000.
You're talking about 17 cents, man.
Yeah, but this is what I was saying. At $5 on Tesla is no big deal. 17 cents, that's 17%, or what, 14% on ADA.
But I wasn't talking about $5. I was talking about $50 on Tesla.
You said anything lower than what it currently was. I said anything under 390.
I know, but I was seriously looking at it when it was 650.
Well, you did say,
and then I looked at it again.
Any good price on ADA is any price, pretty much, at this point.
You should have listened to Mouse. As Mouse was saying, buy Tesla.
It's still there. I'm just waiting.
All right, then I'll buy 1,000 of ADA at the current price to make you feel happy.
Oh, I'm not buying Tesla at 700, dude.
Come on, you buy Tesla at 700. I'll buy it.
No way. I'm gonna wait at least for just a regular market dip.
Buy one share of Tesla at 700. I'll buy 1,000 of ADA at current.
God no, that's a horrible trade deal.
No, it's not.
Who's getting the better end on that, you think?
The person selling you the Tesla share?
You can lose a hell of a lot more faster on ADA than I can on Tesla.
I don't know.
Yeah.
I mean, they got some bad news around the corner if they find something wrong with that car that was in a crash that hit that semi.
You know it wasn't the car. That was the dumbass driving it.
I mean, I agree with you. I'm just saying, if for some reason the news tries to spin that like it was a self-driving thing, you know how they do, man.
That's why Tesla has the cameras where a lot of people don't even know. In Teslas, there's an interior cabin camera. Of course, they say it's not activated, but if anything came up to play where it was a really big issue, that shit can play back.
Tesla has room to dip though. 700 is really high price point.
I know, I agree. That's why I'd really like at least 675.
Yeah, 675 is what I would say was a good way to get back in for right now.
I mean, personally, I see it as $1,000 stock, but that's just my speculation.
I agree with you on it. I think 900 was a little high, but I what they're coming out with and how they're leading the marketplace, basically. Like, everybody else is just chasing what they can do.
It's a long-term hold. Just keep on buying the dips.
Yeah, and remember, you're not buying just the cars. It's Tesla together.
It's a complete technology company.
Yeah, it's not Tesla's an automobile company.
Powerwall, all their shit. Solar.
Yeah, they just opened up solar now more in the Midwest for solar installations. So they're continuing to grow. But most people they just think Tesla, oh, it's just the cars. No, it's the whole package. You're basically betting on Elon, is what you're betting on.
I think like you probably see ADA come down a couple pennies before it. I mean, I'd love to see it keep going. Don't get me wrong, but
I'll probably put in a buy order like 125.
Oh no! If it hits 130, you're going to see another dip. It'll probably hit. Well, okay. Here's the thing: it needs to bust through that 129.4. If it busts through the 129.4, then we're going to $1.30. If it can bust through the $1.30, then it may go into price discovery. But if it rejects off the 129.4 again, then it's going to go back down to around 121.
What was the candle? It was 134.9, right? Was the big candle?
Yeah, no. You can't count that all-time high, though. We got price action at 128 and 129 that we got to bust through before we can even think about that all-time high.
All-time was 148, wasn't it?
Yeah, something like that.
148.63, and then we had a candle on the 16th. So yesterday, what was that at 134?
We're fighting the price action at 128 right now, just trying to get through it.
shit, it was at 106, 109 3 days ago. Not even.
It was at 101.
Wow, it's moved fast.
That's what I love about crypto.
I'm gonna go crash a drone. I'll see you guys later.
Later.
Good luck. Keep it level.
Thanks.
Dude, I'd kill for open fields, like farm fields like that, to fly a drone in. It'd be awesome. Everything around here is like power lines and trees for days. I mean, you can go above them, but I mean,
aren't you hilly where you're at?
no, not really. We're kind of like in a hole. Like all of where I'm at is kind of like in a big hole, and then we're like surrounded by mountains. That's why our humidity is so bad.
It just sits in that valley.
Yep, it's like a bowl, man, and we're in the center of the bowl.
In my flying club, those guys fly all that multi-rotor stuff. I used to, but we fly at an old abandoned backup runway for an Air Force base. It's huge, like it's wicked. It's such a great place to fly, dude.
Who got into Tesla right when it did the stock split? People thought Tesla was going to drop right after that, but the stock skyrocketed.
I remember someone in here saying they were into it back then. I forget who it was though.
Well, I mean, for a lot of young retail investors, man, when you get over $300, $400, $500 in a stock, I mean, that's a lot. That's a lot.
Yeah.
I mean,
per share, yeah.
That's what I'm saying. Like, so there were probably like people chomping at the gate for a split, because they were like, oh man, I can finally get on Tesla, I mean, that's the way I am with Amazon. I'm not buying Amazon at $3,000 a share. Are you crazy?
Yeah, with these fractionals now, dude, they're offering, it's like it's anyone's game.
I'm not buying a fraction. No way.
You weren't, but a lot of retailers will, especially on Rahud.
Does anybody in here own Berkshire Hathaway stock?
You got jokes today. I love it.
No, they didn't do a stock split. You see their stock price?
Yeah, it's like 385,000 or something like that.
Yep.
Well, they have a cheaper one, which is BRKB.
Yeah, my roommate has.
How much is that? 100,000?
Oh, it's only $212 for the cheap one.
It's like Berkshire SV.
Yeah, it's 252 BRKB. Well, yeah.
Now I'm getting advertisements for Warren Buffett. I should not even search this stock ticker.
Now, the thing is, like, if in the unfortunate passing of Warren Buffett, what do you think that stock's going to do? Because there's a lot of people that just buy that just for freaking Warren Buffett.
That's what I always thought about Tesla.
To be fair,
See,
Elon
only-
Musk has a way bigger impact on Tesla than Warren Buffett does on Berkshire Hathaway at this moment in time.
Yeah.
If Elon Musk goes, Tesla is going to sink. They have no visionary at this moment.
Yeah, he's their Steve Jobs.
Berkshire Hathaway has so many partners, board members, and stuff that can keep the company flowing with cash.
See, the only reason I would invest in Berkshire Hathaway is if they are giving dividends, but they are not, and they are making money off of the dividends. So it's pointless to even invest in that.
Yeah, Elon needs a protege for sure.
Unless you had a trust and instead of the money sitting in a bank, you were parking it in Berkshire Hathaway in a trust. And that way, at least it was doing something in the trust instead of just being parked in a bank account.
Yeah, I got my Voyager loaded, ready to pull the trigger when ADA comes back down. Recover the shares I sold.
What's
Coins.
the PT for ADA? Like, what price are you trying to look into to get in?
My average right now is 116, so I'd like to not bring it up too much. I had $1,000 worth of it, and then I sold 500, so I'd like to get it back to at least having 1,000 in it.
Dude, where were you like 2 days ago when it was $1 and a penny?
Whatever. Hating. I don't know. I made some plays. They did well, but I punched out everything, so I'm like, I'm ready.
Shoot, I rebought down there just to freaking, because I brought my average up when I was buying in the $20s and 30s. And then I brought it back down when I was buying in the $1s and $2s and $3s.
Yep. Yeah, I could have brought it down, dude. I'm kind of like, fuck, but whatever. Gotta do this now. You got no choice. I don't think this is gonna be a high play, and you're gonna see a dip after this conference. I think you're gonna see the opposite myself, because it's a very unknown entity, and it's opening up, like you said, on Coinbase and all that, right?
I just noticed AMC is up at 14 again.
Nice. Yeah, I'm gonna watch it tonight, pre-market, see what happens, and then if not, I'll just pull it where it's at. Hopefully, it's not higher where it is now. $116, $127 would probably be like in the 121, 2 average. If I did it now.
Hopefully, it's like 120 tomorrow morning. That's my point entry. That's what I'm thinking about getting in.
For what?
For ADA, I don't want to go in like right away. As soon as it go live, I don't want to go in automatically. I'm just gonna hold and see if it comes down.
I mean, it'll always come down. You're just going to have to be there when it does. because it's been making pretty sharp recoveries. I mean, like you could have got 120 today. Yeah, you could have got 120 today early this morning. And then it shot up to 129, and then it went back down to 121, and then it shot back up to like $1.25, and then it's made its triangle, and now it just broke out in an upward rising wedge out of the triangle. That's why I said right now we don't know what it's going to do. Right now we just know it's going up. So.
All right, guys, we're gonna be ending the stream soon, since we're already in after hours. Anybody want to say bye to YouTube or anything cool?
Later, YouTube.
Later, YouTube.
Anything cool?
Be well.
Good night, people.
The beautiful people. The beautiful people.
Hold.
Dominant hands, baby.
Yeah, hold everything.
Don't hold everything. Don't hold every single thing.
Well, don't sell red.
Better red than dead.
Dude, everything is holding tight in the after hours. Like, seriously. Like, everything.
Has anyone looked at CCIV?
Before I go, look at that last large green candle on GameStop. We may see some of these more institutional trades GameStop after hours.
It's got a beautiful hemisphere. It's making a freaking cup is what it's doing. A big-ass cup. It's about to make the handle right now. GME. If you look from 1527, there's your hemispherical curve all the way down to the close. Beginning at close is the right hemispherical curve. It's at the top of the cup right now, and it's making a handle.
From what I see, it's like an inverse cup for the day.
All right, I'm on the 1 minute.
Me too. Let's see. Mine looks like an inverse cup, though.
I don't see any upside down cup. Ever since it closed, it's been doing a freaking...
Whoa, this last order to buy GameStop, 7.9 million shares.
That was me.
That's big. That's big.
You're taking all the credit for that 7.9 million? Wow.
Dude, no one's trying to buy 7.9 million shares.
No, I'm dead serious. Look at the stream real quick. This is the biggest volume of the day, and it's right after market. I'm dead serious. 7.919K. Oh, my bad.
Man, what happened to my Piedmont lithium, man?
Okay. Oh, yep, 1,000.
What happened to my Piedmont lithium?
You'd be tweaking out if someone was buying that many shares.
Yeah, it's my bad. I misread it. I thought it said millions, but it's thousands.
Jesus Christ.
But still, that's the highest candle for the day.
Yeah, Piedmont did get up to like 81, 82 or something. Now it kind of dipped again. I don't know why. What the fuck was that all about?
I know, and now it's just like trading sideways at like between 76 and 77.
I'm not worried.
Last time I saw a candle like this on GameStop, it went to $243.
You on the reel?
I think I'm going to set some orders to sell at like 243 now after seeing this.
You can make me go look at my level 2 or what?
Well, that sucks because I can't buy. I thought I could buy after hours on Webull, but I can't. Damn it. Darn it. Sorry.
Why not?
You can do it. I just did.
Yes, you can.
It said I can't. I'm just trying to buy two. What the heck's going on?
Push the hour after.
Yeah, make
after
sure
hour
you.
button.
Yeah, you have to hit the extended hours button.
Yeah, GameStop's actually going up after hours compared to the price that it closed at.
There we go. That was big old news at 11 o'clock this morning. Morgan Stanley jumping on the first big bank to offer its wealthy clients access to Bitcoin funds. So if you trade with Morgan Stanley, you can buy Bitcoin on Morgan Stanley now.
Because they were talking earlier about getting the desk back opened, right? So now it's like open.
But how much are they charging you to buy Bitcoin?
Probably too much because they know they're not going to know better.
Yeah. PayPal was, so far, PayPal's the worst. If anyone can find anything worse than that, let me know. That shit's crazy over there. Cash App wasn't actually too bad.
Wait, so where do I find this button for after hours trading? Where do I go to? Sorry. No. Shit.
Were you using a smartphone?
Yeah, I mean I can hop on the computer, but everything just seems even more complicated on my computer.
Well, most of these guys use computers. So if you're using a smartphone, like when you go down to like hit the buy button, like right over to the right, like probably a half inch up the screen, there's a little button that says after hours, like a circle. You want to hit that.
Or extended hours, yeah.
Sorry, yeah, extended hours.
Do you want a screenshot in general?
In there really quick.
It's more of a checkbox. It's in general, you can see it. See all my buying power.
You have the quantity, then underneath that's time in force, then down below that it says extended hours, and there's a little circle over to the right. You gotta just hit the circle to highlight it.